What's up, Tasty Nation? Welcome to the show. Happy Friday. It's August 28th. We've got plenty of stuff to talk about today. We got a little Jackson Hole Fed meeting. We got E-minis up 6, NASDAQ down 45. My name is Mike Butler. I'm here with Jermal Chandler. Join us on the YouTube chat if you haven't already. We're streaming live on Tasty Live. Jermal, how you doing this Friday?
Doing fantastic, Mike. We made it to the weekend, man. It's finally here. It's been quite the week. Started out slow, certainly picked up, and we'll see what this statement gives us today. Maybe it's much ado about nothing. Markets don't seem to think it's going to be worth anything. I mean, we haven't seen any bump in volatility for it, but we'll see what happens.
Yeah, looking at SPX implied volatility for the day, only 30 points. So 30, 40 points. 40 points is actually okay, but nothing too crazy to your point. But yeah, I think the market will likely just digest all of the earnings we've had. We had NVIDIA this week, which is moving around here pre-market. But yeah, I think really it could be a day of like wait to hear what happens at the Jackson Hole Fed meeting and move from there.
Yeah, that's really been the story of this week. NVIDIA earnings, we saw, I tell you, yesterday was fascinating because we saw NVIDIA, we saw CRM, we saw CrowdStrike, and we saw the move that those created in software and chips. And chips were kind of confused, to be honest with you. Most of them weren't necessarily like as much as NVIDIA was. I mean, most of them actually reversed and ended up going down. We saw that with a lot of those, SanDisk, Micron, you name it. And then, I wonder if that's going to be similar this morning because Marvell has had earnings and that's down on earnings. So we're going to get into all that at some point today. But speaking of, let's pull up the list here of things we got going on. We got a very busy morning as usual. Let's take a look. And we have, of course, at 7:35 a.m., Chris Vecchio's coming on, share some morning news, and we'll talk about some of those earnings and the fallout and the rise that we've seen, particularly in the past couple of days here. Morning movers with Gus. We'll have the opening bell, of course, and live trades from me and Mike at 8:30 a.m. Also live trades with TP at 8:45 a.m. Central Time. We have a special guest at 9 a.m., Mr. Brian Feroldi, who talks a lot about analyzing companies, so we'll look at him. And then Karsan, founder of Kai Wealth, will be on at 9:35 a.m. Later in the day, Chris will be on with Daniel Newman from the Fruitrum Group, 2:30 p.m. Central Time. And then, of course, middle of the day, you know it, you love it, you guys been watching it, we've been bringing it. Trades of the day, I kick it off at 11:30 a.m. Central Time, followed by Mike 15 minutes later, followed by Gus, followed by Errol, followed by Chris, followed by Ilya. Check all of that out.
Yeah, trades of the day today will be interesting for sure. Bunch of guests. It's going to be a great show.
Oh, yeah.
But yeah, I think for this portfolio here, NDX, very sad story. We had the market rallying yesterday. I thought we were going to just pin another one. This NDX butterfly, 0 days to go. But there's still some value to be captured here. I mean, really at this point, we're 600 points out of the money, and we really would need a huge market sell-off to get in the money on this butterfly. So I'll probably just look to close this on the open, retain some value, and move on to another one. But I don't know if you have any other plans for the NDX or SPX butterflies, but I feel like that's the thing to do here. If it's trading for $200, just retain it instead of losing it today.
Yeah, mine's in September 4th, though.
Okay, so you're good.
Yeah.
You got some time.
I mean, I don't know if I'm good, but I think it's going to be the same fate, probably.
We'll see.
I don't know if the breakdown didn't happen this past week, I don't know, man. But maybe it happens next week after all the catalysts are gone.
Yeah.
Speaking of next week, Monday, we're changing things up. We're going to start the show at 8 a.m. going forward. Keep that in mind, folks. 8 a.m. Central Time to 3:30 Central Time now is going to be our live programming. So same old stuff, live trading, chart breakdowns, expert insights, but we're starting at 8 a.m. Central Time.
Indeed. Yeah, it'll be good. Just shifting things around, and it'll be a nice little change here. So for those of you that have been cranking that alarm at 7:30 Central, you can just move it 30 minutes later. and everything will be fine. But yeah, I think the move this morning in the E-minis and Nasdaq is telling for what we might expect for the rest of the day, unless something changes here. Not too much applied volatility in SPX. Another kind of divergent day with the E-minis up, Nasdaq down, Dow up, Russell down. It just feels like one of those choppy days. And even with the other futures we can see here on the CME futures watch list, nothing's really moving all too much. You've got XRP futures and natty gas leading the way to the downside, over 2% for both. Everything else within 1% to the downside, and then to the upside, silver, wheat, corn, soybeans, 1.6% is the biggest move to the upside, and that's silver. So,
well, I tried to fade corn, but I guess that didn't work. At least not for now. That was my trade of the day yesterday. God, these things have been on the move, man.
I mean, it's nuts. It's crazy.
Yeah.
But if you are a farmer and you're seeing these prices, you're probably shorting the hell out of this one, especially after this move.
Yeah, I mean it's been, I guess, somewhat of a warm summer, and I guess there's been building and a draw on crops, but the next WASDE report I think is on September 11th, so we'll see what that brings.
Indeed. Right now I feel like the E-minis here chopping around up 3 points. I want to put on a global trading hours trade in SPX. I just don't know what to do here. I already have this short call spread to finance the long put spread we put on yesterday. Super bear, 5 points wide in the call spread that I sold and 10 points wide in the put spread I bought for a 25-cent credit. It looks like we'll probably have a possibility to expire worthless here unless the market rips higher, which will be a 25-cent winner. But it's just one of those days where I don't like the market is flat now, and I don't see anything really changing unless we have a catalyst.
I know, right? I don't either. And again, the only catalyst is this potential speech that he's coming out with. But again, the market is not necessarily pricing in anything. So you can either look at that one of two ways. Either nothing's going to happen, or the market is completely underpricing what is going to be said, and bonds are going to move, and this is going to cause a move in the market. Those are the only two possible scenarios. And as much as I feel like the former, I always feel like the former. Anything that's not gonna work for my position is usually what I expect, because I just set myself up in that way. And if we get something in the other direction, fantastic. I have two super bears. I have one for today, and then I have one for September 1st as well. Thinking there is, okay, let's get all this August crap out the way and see what September brings.
What's your September 1st one?
What is my September 1st one? It is, let's see. It is the 7750, 7760. And I actually moved the put side yesterday after we went up about 60 handles. I think originally I had it one way, but now I have the 7650, 7625 put spread. So
nice.
Yeah, I originally put it on differently, and then obviously we kept going up. At one point yesterday, we were up like 63 handles at one point, and I was like, all right, let me roll this.
Yeah, big move for sure. I was expecting us to fade, but that did not happen. Maybe it'll happen today. You just never know. But yeah, I like this trade right now, trading for $1.80 credit, and another one where if we just stay below 77.50, this will be all good. But if we get that drop, if we get a 100-point drop over the next over the weekend, or really today, $1,000 winner from a theoretical P&L perspective.
Mm-hmm.
We do have Chris Vecchio on the line. Chris, let's bring him in and see what he's doing on this Freaky Friday.
Is it?
Senior Vecchio.
You guys do like a body swap? Am I really talking to Jermal right now?
Yes, you are.
Cool.
Yeah.
You guys have seen the movie Freaky Friday, right?
Yeah. No, actually. But I've seen all the other versions. You know
Sure.
what I'm saying? So there was a version in my age group that involved Fred Savage and Judge Reinhold. Similar story. There was also 18 again, also my age range. So there's the original Freaky Friday, which, there's one before the Jamie Lee Curtis one. You know this, right? Like,
Yeah.
there's one that goes way back.
You always mentioned 13 Going on 30 as your favorite one of those movies.
Wrong. Nice try, though.
Let's kibosh that right there.
But also in the same realm. I mean, that concept. I mean, that concept has been around a very long time, right? Like, it's interesting, and there'll be other versions, and then people are going to be just like that. Oh, you've seen this, right? I haven't seen that one, but I've seen the other versions.
They'll remake that. We'll get another like Little Women or Old House on the Prairie at some point in the future too.
Will we?
Yeah, they remade like Little Women like, I don't know, 6 times in my life. Every like 4 or 5 years.
They had a version of Little House on the Prairie I saw on Netflix recently. I didn't watch it.
Of course not.
Because it had black people, and we know there was no black. I'm just kidding.
It's like, wait, where's this going?
Nah, but it threw me off. I was like, wait, there's black people on Little House on the Prairie now? What? Okay.
There is a Dave Chappelle bit about how it's like whenever I watch Game of Thrones, like it takes me out of it a little bit. It's like, how come they have blonde hair? All right.
Oh man.
It is Freaky Friday. It is Freaky Friday for sure.
It's going to be Freaky Friday about an hour and 20 minutes. I mean, folks, one of the benefits of Warsh coming out at 10, if there are positions that you do not like, you have a small window to get rid of them this morning when the market opens, right? And I don't think that could be overstated here. 9:30, the cash equity market opens. If there are things that you are feeling uncomfortable with, if you're looking at your beta weighted deltas and say, oh goodness, I'm actually way more exposed to a stock market move than I thought, take it down a notch. Use that opportunity to do so. I have some things that need to be cleared out this morning because there were earnings trades or what have you. Marvell, for example, I'm going to stay within the inside, just barely inside the expected move for me. But I'm going to get rid of that, right? This stock is down to 223. My short put strike for the short iron condor is at 215. So I'm going to have a little bit of wiggle room. I don't need to see this burn out into the sun at the end of the day. Certainly not with Warsh coming up. Could this thing drop another $7 because of something Warsh says? Yes. So abandon ship. The only short-term things that I'm going to hold on to, like I have a 0 DTE ZB put spread here that, in the event that Warsh is in la-la land and doesn't want to tame the long end of the bond curve, that should probably do well. But otherwise, I'm backing out and moving things to next Friday or beyond, using that window this morning to roll.
You mentioned Marvell, and we see that stocks faded this morning. And yesterday we saw NVIDIA, big move to the upside. Not a whole lot of names followed. And so my question to both of you guys, do we think tech has another leg? Like I'm sitting in a WDC short strangle right now. I put it on last week, and I was a little nervous. And it's actually been one of the best ideas I've done in a while because these things have been so quiet. So I'm just, do we think that it has another leg, or is this kind of tech and it's just going to sit, it's going to be sideways. I mean, kind of sideways to slightly up for the rest of the year or down. I mean, not any big moves like we were seeing in July and August, if you will, after earnings or whatever, early August. Like it's been quiet, right?
It has been. I'm going to be optimistic about this year. The rotation that we saw yesterday, the S&P wasn't great. More stocks down than up, and the equal weighted S&P fell, but not the equal weighted NASDAQ. The NASDAQ was not just being lifted yesterday by the big names. It was good breath, not great breath, but good breath in those tech stocks here. So if breath in the NASDAQ's finally improving here and the rally is broadening out, so to speak, then yeah, maybe we do have another leg here. But Jermal, we're looking at a sub 15 VIX going into Jackson Hole right now. It's not totally complacent. There is a bit of put skew in this market still if you're looking at SPX or ES futures. But man, betting on today being the day that we start that next leg up, I mean, color me skeptical. I'd be happy to be wrong.
Yeah,
I don't think so. What do you think, Mikey?
It feels like it just feels like a nothing day, but I do like that it's early and not at like 2:00. To Chris's point, you have
Watching
more
paint dry.
What's that?
This would be like watching paint dry all day today. Otherwise,
Truly. And I think with these sectors, indices moving in opposite directions, I think just speaks to the tug of war and neutral move that we'll likely see up until that point, even still. But still have some pre-market movers, like you mentioned. Marvell down to 223, about 20 points. You've got Autodesk down 9 points ish. So we'll have some management to do here, but WDC will continue to fly around. I think this has huge implied volatility. 18 points for today with no catalyst. Kind of wild.
It's probably as good time as ever to pull up the Jackson Hole graphic we got here. Let's take a look at that. Same day returns on Fed chair speech days. Now, this is the first one of his, so we'll see. But yeah, I mean, is this more about Jackson Hole or more about what was going on at the times of these Jackson Holes? You know what I mean?
Jackson's. This is like attorneys general.
Yeah. Right.
Okay. So yeah, I do think the context here matters, right? In 2022, of course, it's in the midst of the inflation spike, and the Federal Reserve at that time had only just recently begun raising rates, and the market was looking for some kind of off ramp, like, hey, maybe we're done, we're past peak inflation. And Powell came out with his, no, the beatings will continue until morale improves attitude. Everything else has been a bit of a meander. The most consequential one, if we don't mind going back to that previous slide, is probably the 2020 Fed Jackson Hole, because that's where they changed their average inflation targeting framework in the midst of COVID, saying like, inflation's been so low for the past decade in the global financial crisis, we can allow an overshoot. And when you blend it together, if we've had 1% inflation for the past 5 years and we do 3% for the next 5, then, past 10-year run rate's been 2%. And that's kind of right on target. That had one of the smallest reactions on the board. And despite it was one of the more consequential meetings for how the market was shaped in 21 and 22, right?
And a very busy time, might I add. Very late August, early September. Look at the charts at some point, guys.
Yeah. And so then, what happens the next few years? Asset prices explode in 21 because the Fed's letting things run hot. Inflation's transitory, right? No reason to react yet. And then in 22, it's this dose of reality. Oh, boy. Yeah, we actually have to pay the bill now after all that loose monetary policy. So is that the kind of setup we're in right now? I don't necessarily think so, but this Treasury intervention makes things so much more interesting. Is Warsh going to look like a political pawn, or is he actually going to, stipulate that the Fed has independence and they're going to continue to assess the debt? Either way, I'm short bonds. I don't think he's going to handle this well. The market wants some clear guidance on how he's going to address inflation, and I don't see where it's coming from. So I'd be happy to be wrong. If I'm wrong, then stocks are probably ripping. Yeah, and that's okay by me.
Yeah, right. It's not ripping is PayPal. Let's pull that graphic up. And this is actually probably, Mike, this might be a good discussion with the guy we're going to have on today who likes to analyze companies. He talks to people about analyzing companies. They've decided, Advent and Stripe decided they don't want to buy this thing out. Is it because interest rates are high?
Conspiracy Chris time. What does this have to do with Elon Musk?
Well,
I love the sippy cup after they comment.
Yeah.
Well, first off, I'm not on screen. I don't think so. That's why
neither am I.
I forgot about that.
Yeah.
I don't know. What does it have to do with Elon Musk? Tell us.
Musk is trying to create the everything app, as we know. There's been chatter for Tesla and SpaceX merging. He needs a payments channel. PayPal's up for sale. PayPal's an old Musk entity. Why not? Why shouldn't Musk be involved here? And then more importantly, if you're Advent and Stripe, as some have pointed out, and Musk wants PayPal versus you, which way is the DOJ going to go on any potential merger and acquisition? Musk is friends with Trump.
I was about to say, yeah. I mean,
why deal with the headache if there's potential regulatory problems that are going to upend a deal? So just walk away.
Wait, he had a credit card, X.com back then? What is his fascination with X?
Named one of his kids X. Yeah.
I don't get it.
Doesn't he have like 10 kids? The Roman numeral X?
Yeah.
It's a thing.
I don't know, but the plastic surgery that these guys get, him and what's my man from Amazon? These dudes they looked 20 years older 30 years ago.
It's the hair. You know what? It's the hair, and it's there are studies on this, right? Like guys like with these pictures of old Elon Musk, that type of balding shows lack of control, right? Indecision. You either go full bald like Bezos didn't take, like you did, Jermal, or you kind of like he's got the Padre haircut here going on. He looks like a monk. He should be like a little friar. He should be tending to the gardens at a monastery.
True. Yeah, it's true.
But instead, he's building rockets, going to Mars.
And he got the hair back, got the swag back. It's crazy what money does for your looks. Mm-hmm. Everyone's like, how come these celebrities look so young? It's money. You guys have seen the South Park episode with Magic Johnson. Just money solves the problem.
True. Yeah, I just I do wonder how you mentioned obviously what the infrastructure that PayPal has and him incorporating it. I mean, is it something that that is unique, or is it again, I don't know about you guys, but I haven't used PayPal in forever. I use PayPal, Zelle, Venmo for various things. The barber wants to be paid through Zelle because it's easiest. But this is one of Musk's longer term obsessions here, and he is basically looking to what they do in China and parts of Asia, where because of the limitations on the memory in some of these phones that are distributed in these emerging markets, I don't want to call it the third world, but emerging markets in Southeast Asia, you need to have just a single app that basically can do everything here. Your phone literally can't hold a banking app and a payments app and a social media app. And so to get around those limitations, some of these Asian software developers over the years developed these singular apps that could do all of this to take up less space on your phone. And Musk has always really enjoyed this model here. One of the problems that here in the West, it hasn't taken off is because our phones don't have these limitations. We don't need to have an all-in-one app. And we kind of being Americans like to do things a little bit more decentralized anyway, so that there's no one point of failure and one data provider that controls everything and knows everything about us. It's a cultural thing. So there's been a lot of reticence when efforts to create these sort of everything apps have gotten off the ground. Folks have not really globbed onto it. So Musk is trying to bring forward kind of like an Asian innovation that was basically set upon because of limitations in the devices that they owned and had access to. Whereas top of the line iPhones and Samsung here in South Korea, Japan, Canada, the United States, UK, it's not something that we face. Yeah, I mean, how is it ever really going to work, though? I mean, like, you just think about it. There's always multiple apps for the same thing. I mean, there's just like that. I mean, the idea sounds somewhat interesting, but
Jermal, you tweet something out bad, and all of a sudden you can't access your banking information.
I know, right? Like, nah, I don't want that.
That's like right out of Black Mirror.
Exactly.
No thanks.
That'd be wild. But yeah,
isn't there a new season of Black Mirror starting today, by the way, or something like that?
Today?
I don't know if it's today, but sometime soon. A friend of mine I know in the chat said that, and I kind of glossed over it.
I just started watching Lanterns, the new show on HBO. It's good. It's the Green Lantern show that they have. It's totally not the way that you would expect a Green Lantern show to be. It's like a murder mystery in the small Midwest town.
See, that's where they mess up, Chris. I don't know, man. See, that's what I'm talking about, man.
You want to see another Ryan Reynolds disaster?
I don't want to see that neither.
Okay. Give us a chance.
I just want to see a man in a suit with a big lantern on his finger. That's all I want to see.
And
that's not asking for much.
And we've got that. And we've got that. It's worth it.
Sorry, Mike, you were going to say something before we got off the rails.
I was just going to expose my OCD tendencies with PayPal. So I see a chat here. MasterCard and Visa completely dominate the payment space. They've defended the space for decades. Also, Lanterns is a good series. Same person. Love it. But yeah, PayPal. So for me, it's like you think about AI and like credit card fraud and all these things. PayPal is, in my mind, similar to like freezing your credit score. Like if you go on TransUnion or Equifax, whatever, you can freeze your credit score. Nobody can open up a new anything in your name unless you unfreeze it. It's a great defense mechanism. Same with PayPal. Like if I'm going to buy something online, I am almost always using PayPal to create that third-party blockade where I'm not like typing in my credit card into a website so that they can store it type situation. So I use PayPal all the time. So I like that this is down now. I don't have a position here. I'm going to definitely place a bullish position.
Mike, somewhat related, a few weeks back, one of our, I don't think it was a trade of the day, but one of the positions we were looking at here in the morning was a Visa. Visa was one of those stocks that fit my little buy the dip criteria, below the 1 month, above the 50. There's positive slope to the 50 still, bottom left to top right. Okay. The 340, 345 put spread was sold. That was on August 10th. That was in for $1.08 of credit here. It was a second trade continuing to just ride us up the rails. It's now trading at 19 cents pre-market. There's no reason to hold this on for anymore. It's realized the bulk of its profit now, 80% plus. Do I want to hold it for 21 days for 19 cents? No, thank you. So I'll get out of there. It looks like Visa's pulling back a little bit pre-market. It could be another opportunity to get into another short put spread as this. It's been a pretty good stock holding up. It's one of the points of disagreement I have with Ilya. If Visa and MasterCard are trading the way that they've been trading, if airline bookings and the number of commercial flights globally are sitting at all-time highs, the consumer clearly is still powering through it, and recession does not look like it's around the corner. Market knows best.
Yeah, I agree.
Market knows best.
It's funny. There's Soul Train in the chat. We see you in the chat if you want to join us there. Pop over to tastylive. But there's also Zell. It's funny. I feel like there's a rotation of utilization into Zell. I've heard that kids these days are using Zell and not Venmo, which is wild to me. Because when I used to hear, when I would say, "Hey, I'll Venmo you this," and someone would be like, "Just Zell me," I'd be like, "Why?" Here we are.
Goes directly into your bank account.
Well, it's just dependent on bank, right? Like I have a credit union. I use UW Credit Union, which is the bank I got when I moved to Wisconsin, and I've used it ever since. And they only have Zelle. They don't have Venmo. And I know JP Morgan has. I mean, Chase has Venmo, but I haven't had a Chase account in years.
Chase has Zelle. Yeah, Chase uses Zelle now.
Does it? Oh, I thought they had Venmo originally. Yeah. Well,
no, it's right in their platform, so it's super easy. So like, you go out to dinner with someone. I'm the kind of guy who's like, no, I'll get dinner. You guys just Zelle me because I want to hold the points.
Right.
You're a points monger.
You are that guy.
Looking for an edge everywhere, Jermal. I don't leave pennies on the street.
I hear you.
I love it. As we've been talking, literally nothing has changed in these markets. And it's one of those days where like I'm staring at the E-minis right now and the NASDAQ and they're not moving. So the volume is going to be super low, likely until this meeting here.
Yeah, I was about to say, if you guys are wondering why we're kind of quiet, because the market is kind of quiet. I mean,
the market's going to be kind of quiet for the next hour and 3 minutes, but I do think that's, a note to go out on. The Kevin Warsh is set to start speaking at 10 Eastern. We know how these things go. He's not going to be speaking the moment that the clock hits the top of the hour, but what he plans on saying will be released publicly. So you're going to get the algorithmic reaction, right? All the LLMs are going to jump in. They're going to scan it, read it, and then try to trade it, which doesn't tell you the full move, because if Warsh gets up there and the market's panicking and he goes up there confidently and, is able to demonstrate through his own tone and diction and ultimate how he just presents his body gestures, all of that body language, it could totally change the tone of things. We talk about this all the time. If the statement looks unchanged, but Powell goes up there and he's sweating and his tie's undone and the glass is shaking as he tries to drink it, the market's going to go, what does he know that we don't know? They're going to people freak out. So the way that Warsh actually delivers the message will curb or enhance the impact here, but it's going to start happening at 10 before he even starts speaking. So buckle in. On days like this, it's not a normal theta decay kind of Friday. I know a lot of folks, they look to Friday markets, guys, and they go, there's low volume. It's the summer. I'm going to do something like a short iron condor, low premium. If you're going to do that, you got to respect the fact that this is meaningful event risk. I think the market's lying to itself here right now with this. Look at the VIX. What a joke. Give yourself a little bit more breathing room. Send out those strikes a little bit wider than you would. That's what I'm going to be doing. Maybe even keep those strikes a little bit tighter. So instead of being at like the 65 delta, I should say, if we're going out of the money for like a short, we'll call it a short put spread here. We're going like 30 delta, 60 delta, and then go further, go to 20 and 70. Give yourself more breathing room because the market is starting from such a low point in vol. It could easily unfurl, in my view.
Yeah, that's as we go to break here. I know that story about Warsh reminds me of something Dave Chappelle said about being nervous to fly and getting on flights. He's like, if I see that the flight attendant is calm, then I'm calm. But if all of a sudden her lips are sweating, I don't feel good at all.
No, don't want to see a panicked Don't want to see a panicked steward or stewardess. Is that what we call them? Flight attendant now? I don't know. I don't fly. I hate flying.
I'm glad you said that and I didn't.
I don't know.
Well, to that point, I was on a Ryanair flight going from Spain to Scotland, and the stewardesses were
You guys are
probably
so
like
in trouble.
22
Oh my God.
college students. But we were literally flying, taking off, and there was a hissing noise coming from the door, and they looked at each other and they're like, "Should we be worried about this?" And then they looked at each other like, "Nah." And I'm sitting there like, "Is this it?" And that was the opposite reaction. But
yeah, I was on a flight one time and we kind of dropped and one of them was like, "Ah!" I was like, "Oh my God, what the hell is going on here?"
Please, don't make those noises for the rest of us.
honestly,
I think my worst flight was we were coming back from Milan, and I really hate flying. Parents being in the South Towers and everything really did a number on the old brain here. But we get up in the air, and all of a sudden the landing gear can't retract. And so we have a full plane worth of fuel, and the captain's like, "Listen, we can't ascend above 8,000 feet, but we can't land because we have too much fuel. So we're just going to have to circle the air above Milan for the next 3 hours to burn off this fuel."
Oh my God.
And so the plane was just basically tilted on the side, just going in a circle above Milan for 3 hours. And so the entire, for 3 hours, I'm just leaning over. And it was hell. No. I avoid it when I can. I'm like, "You want to come out to Chicago?" I'm like, "Yeah, sure. How long is the drive?"
I'll never forget
12 hours.
We'll hit a break here in a second, but I'll never forget my one of my good friends loves the scare videos where people are jumping and yelling and whatnot. And one time he was sitting next to this older man, like during turbulence, the guy was like, "Ah, ah," and he was crying, laughing, and I was sitting next to him. I'm just like, you laughing and crying, laughing like maniacally is making this worse for this guy. It was hilarious, but. Anywho, Chris, appreciate it. We'll see you a little bit later today.
See you in an hour.
Good stuff.
Or two.
As you might expect, E-minis, NASDAQ, Dow, Russell have not moved at all since we've been chatting it up. But we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tasty Live. We got E-minis up 9, NASDAQ down 30, Dow up 100, Russell flat, Bitcoin down. Everything's sideways here. But we've got Gus Downing in the house wearing a Whistler Blackcomb hat. And Whistler is one of the best spots ever. If you're a skier or snowboarder and you haven't been to Whistler, you gotta go to Whistler.
I went to Whistler in the summer as well, and let me attest. If you're into hiking and you haven't been to Whistler, absolutely worth checking out. Vancouver, beautiful, clean city as well. I enjoy Vancouver, albeit quite expensive, but it's real enjoyable trip to get up there if you ever can.
Love Vancouver.
What an interesting morning we have. It's like all of the large, well-established companies that people were excited about, earnings reports for, are falling apart, and we got wacky smaller companies doing well. PayPal, Marvell, Autodesk all down, and we got Affirm and Gap going to the moon. What a market on our hands here.
Yeah. Wow.
It's boring as hell. You can say it, Gus. It's fine. I mean, it's
You're not amped about Gap?
No, I'm not.
My whole retirement is in Gap clothing stores.
I used to shop there. It was like
back
10
to
to
school
15
style.
years ago. Yeah. It's been a while.
Oh, man. Okay, first thing on the docket for today, which I sort of just alluded to, but I would be remiss if I did not mention Marvell. 37% revenue growth year over year, shares down 8%. In this market, you must post 100% revenue growth year over year, or you are a failure. Pretty much the sentiment that I'm gleaning from this one. They said they expect to grow another 50% year over year into next year. So we'll see what comes of that. But not the earnings report that Marvell wanted. Particularly interesting to see Marvell trade down this much even after yesterday, Nvidia's earnings were not enough to give them the steam to make a move up. They made a move down yesterday, and then they take another leg down on earnings. So market not being Marvell's friend right now.
That was actually why I played it to the upside, because I expected these type of numbers. I expected maybe that there was, that there was just the expectations were too high, but just on the heels of Nvidia, that's literally why I played it to the upside.
Yeah, I was inclined to do the same thing, especially with it trading down yesterday. It felt like, if Nvidia's numbers were that good, Marvell's got to post good numbers as well, and they did, but just not good enough. I mean, yeah, it's incredible what you must do in the tech space to catch a move up off earnings these days.
Truly. But this is one of those. I have a few of these call calendar spreads, long the 7-day, short the 0-day. We're going to take some heat on these this morning, but I'm just going to buy back the short option and just let the long option run. See if we get a reversal next week. That's all you can really do. Unless you turn it into like a butterfly in the 7-day, which is also possible, but it removes your ability to get value back until Friday, basically.
Yeah, definitely a tricky spot. I think you're managing as well as you can there. Could go butterfly. Caterpillars become butterflies. These things can blossom.
Ooh, I like that.
Okay, next thing I have on the docket for today. This is a fun one, little cultural, but also publicly tradable stuff here. IMAX is for sale. For those unaware, IMAX is a publicly tradable company. It's having a great couple of years, continues to grow. IMAX is one of these companies I love to talk about because they are in the strangest situation ever. For those not aware, the reason there's not more IMAX theaters is there's this whole death spiral happening where IMAX has straight up lost the blueprint to make their IMAX film projectors. That is not an exaggeration. They are not able to manufacture more of these. So we have a finite number of IMAX film projectors and a very finite number of technicians who can work on them. It's also very expensive for theaters to build true IMAX theaters, and they know that IMAX can't make any more cameras, so they're not going to do it. And then movie makers don't want to make IMAX movies because they know how scarce IMAX theaters are, and then IMAX doesn't care to make any more projectors because they know that people don't make the movies. So it's this whole circular thing. Very interesting situation with this IMAX sale, though, because any movie studio, Disney, Universal, Paramount, Warner Bros., whoever, they can't buy IMAX or it would be a conflict of interest. They can't have the distribution means of their own movies. It doesn't work. So this would have to be a tech company or maybe a Amazon, Netflix, Sony, something like that. Maybe Apple. Apple has Apple TV now that would have to buy IMAX if somebody wanted to.
It is crazy. How is this a $3 billion company?
That's what I was just looking up.
Without a blueprint.
$3 billion.
Why
It
can't
makes sense. And it's so funny too because it just moves up every time a large IMAX movie comes out. I don't know why I'm not trading this better. Odyssey this year, it just took a giant spike and held the game. It's very strange. So I got to start doing a better job of getting out ahead of that.
Add this to the list, Mike, of things we're going to ask Brian Feroldi at 9 a.m. He evaluates companies: PayPal, IMAX, and Wendy's.
I mean, to have a growth story when you can't manufacture the only product that you make is quite remarkable. I mean, if Apple said, "Hey guys, we lost the iPhone blueprint," their stock would go down. But they're managing to make it work.
I mean, yeah, it's a very odd scenario. That's for
It sounds like they're just trying to create this sort of era of like, this is the only ones that exist, and we don't know how to make any more, and you're never going to be able to make more.
I agree.
Limited edition.
The blueprints are really gone. That's the truth. But we could certainly reverse engineer this. We are way too smart. There's technicians who know the ins and outs of the machines. The knowledge is here to make more of these if we wanted to. I assume.
Gus, we build bridges over water. We build windows on buildings that are miles high in the sky. I'm sure we can. I mean, I'm sure of it.
Well, we've been building bridges over water long before IMAX theaters.
and I think that's way more of a marvel than an IMAX theater. That's my point. Like, come on now. It's still amazing to me how we build bridges over water.
If given the resources, the Romans figure out IMAX. That's what we're saying.
Jermal, are you one of the guys that like when you are on a bridge going over the water, you're like, wow, look at this thing?
It's more when I'm on land and I look at it's like, man, it's amazing. I actually saw the video recently of how they create the poles or whatever, like the cement and like the whole thing. But it's just amazing to me. I mean, it's just amazing. I don't know. It's amazing.
Right. Jermal likes bridges. Add it to his bio on the website, please. Okay, last thing I have on the docket for today, and this is there's adjacent publicly tradable information, but this is just something interesting for the future as these companies IPO. But OpenAI is now, like months after they first rolled out ads for free plans and assured everybody they would not be appearing on paid plans, they are rolling out ads on paid plans in India. You have to have the highest tier. It's what is it? Plus and premium, or I don't know which order those.
I don't know neither. It keeps trying to suggest it to me though.
Yeah, you have to have the highest tier now in India to not have ads anymore. If you have the regular Pro Plus Premium, it's something like that. If you have the lowest tier paid plan, you will still get some ads. That's what they're moving into. So ChatGPT really trying to monetize a little bit more aggressively. I don't know. Claude has really put themselves in an interesting situation as it pertains to ad monetization because they're running commercials directly against the ChatGPT advertising. I don't know if you've seen those commercials as well. They're really, really good Claude commercials where a guy is asking a question to somebody else in real life, and then he'll be like they stop a runner on the street, and he's like, "Hey man, how do you run so far?" And the guy's like, "Oh, well, it's these special Brooks A20,000 running shoes. You can get them for the low price of $239." And then the guy asking the question is like, "What?" and then it cuts, and it's like AI is for answers, not ads. And they're really good ads. I do think it's a good way to lean into this, but you really put yourself in a bind when you start doing that because now they can't ever do ads or it's going to be some bad PR. They'll do ads anyway. It's the reality of the situation. I'm not so naive to think that they won't. But ChatGPT getting more aggressive. OpenAI saying, we don't care about your tiny little paid plan. Pay more money if you don't want to see our ads.
Yeah, I have seen some ads in ChatGPT recently. They're trying to slide them in there, but to your point, it's expected. You get the masses to use your product, and then you fill the product with ads. Simple.
If you're not paying for the product, you are the product.
Mm-hmm.
It's true. Yeah. Wow, Gus dropping gems today. Caterpillars turning into butterflies. if you know, wow. Yeah, come with it, man.
I try my best. But yeah, so OpenAI, Anthropic, both on track for 2027 IPOs right now. I do think they're missing peak hype for themselves here. Not dissimilar to SK Hynix. I felt SK Hynix missed the boat by 2 or 3 months with their IPO. OpenAI, Anthropic, obviously still going to be incredibly hyped IPOs, but I do feel there might have been a slightly better time. But perhaps IPOing post hype is the way to do it. Just let the true valuation come through a little bit.
That's fair. Love it.
Yeah.
Well, Gus,
Sure.
appreciate you. We will take take note of these here companies here, and we'll see what we can do with them. But yeah, IMAX, come on, give us more theaters so I don't have to scramble. I still haven't seen the Odyssey
Me
because I
neither.
refuse to watch it in
I haven't
regular.
either.
Regular. What do we call it? Regular film. So yeah,
Yeah, regular film.
I'm
Digital?
holding out for IMAX. But yeah, we'll see what we can do with these, and yeah, we'll see you a little bit later today.
Absolutely.
We got Nasdaq down 35 points. E-minis up 7. Let's take a quick little break here. We got 15 minutes until the opening bell for the equity markets. Let us know what you're trading, what you've got on your mind in the YouTube chat. We'll scan through that, and we'll be back in about 90 seconds. You're watching Tasty Live.
Thanks, Ben.
Sweet. I need a coffee break. Oh, it might take a little longer than 9 seconds. Can you hold it?
All right. See y'all shortly.
Later. What's up, everyone? Welcome back to the show. You got E-minis up 7, Nasdaq down 40, Dow up 80, and the Russell down. Everything's moving in opposite directions here, except for Marvell down 15 points-ish. Autodesk down 10 points-ish. So we'll see how those fare on this market open. But let us know what you're trading in the YouTube chat. We got about 11 minutes until the equity market opens. Jermal, do you have your eye on anything to start the day?
Yeah, I'm looking at these movers here. Some of them you mentioned, but PayPal obviously is down. There's not going to be a buyout for them, and so stocks pulling back, of course. Marvell, we mentioned a couple of times here already on earnings. IREN also had earnings. That's down like 7%. I'm seeing AFRM. That's a big move there, and I think it bears mentioning. A firm in that whole space, the buy now, pay later stuff. What's the other stock that's overseas? I can't think of it right now. That's a similar stock. It's out of the UK that just had an IPO not that long ago. But anyway, it'll come to me. But that's an interesting space considering what's going on with interest rates. I'm surprised that company is up as much as it is on earnings. I would think that I don't know. Maybe this is a good environment for them. I wouldn't necessarily think so, but looks like it's a pretty good environment for them. So it's not SoFi. God, I can't think of the other company that is not crossing my mind. But I'm paying attention to those right now. Those are the ones, as far as movers, those are the ones I'm looking at. I don't know if I trade anything in any of them. I already have a position in Iran, obviously a position in Marvell too, but those are the movers I'm looking at because, yeah, the general market is generally quiet. A lot of things we've been paying attention to, I think, are taking a breather. Bitcoin, SPOOs, gold and silver been fairly quiet. Even oil seems to be fairly quiet here as this day begins.
Yeah, I mean, E-minis have had, let's see, I mean, it's been not too great here with the E-minis chopping around. We've had a 10-point range, not even 5-point range this whole morning. These things haven't moved. It's crazy.
Yeah, the company I was thinking about was Klarna. That's what I was trying to think of. KLAR.
Mm-hmm.
Looks like it's up slightly with this Affirm move.
Yeah, that makes sense. Yeah,
There's another company like Affirm, right? Oh, I guess Upstart, maybe.
Yeah, all similar.
Same
Basically,
space.
just loan, like personal loan companies, buy now, pay later. Not too surprising that these companies are doing well here. But yeah,
I love how they call them buy now, pay later. I mean, it's layaway. Like, let's just call it what it really is. It's like we make a new, we spin it up, we change the package, we call it a new fancy name. This is layaway, folks. If you don't know what layaway is, look it up.
Truly. When someone in the YouTube chat, when is Jackson Hole? 9 a.m. Central. So we've got a little bit of time here, about 40 minutes, 39 minutes until that happens. Are we doing 0-day trades ahead of time? It's tough to say. Like, I just don't know how this is going to go. If we had a bigger move pre-market, like big down or big up, I feel like I might take the other side and just play for a calming of whatever that move was. But we're not getting anything right now.
Yeah, I mean, I already have the 0 days that I want to have. Again, I put that on 2 days ago. Mm-hmm. The super bear trade. And I talked about the one September 1st, but there's also one that I have for August 28th. Actually, that was the first one I put on. And I did that a couple of days ago. So I don't really need to add anything as of now.
Yeah, I've got this short call spread, 77.50, 77.55 to buy the 10-point wide put spread, far out of the money here. So if we get a big reversal, that would be great for that trade, but also the NDX butterfly that is probably going to be trading for $100, $200 on the open. I'll probably hold it until that time, 9 a.m., because that's one of the nice things about this meeting here is that it's not at 2 o'clock where I would just lose all this value as I'm waiting for the thing to happen. So having a little micro binary event in 30 minutes or so is a nice potential thing that we can keep our eye on for this NDX butterfly. But basically, just going to try and retain some value here, especially if we rally after that meeting.
Yeah, I mean, if I had any other 0 DTE trades right now, I'd be over trading at this point because I don't, again, like you said, the direction is not stated at all right now, so I couldn't pick anything from here. I already got downside plays on for today and for next week, whenever the first is, Tuesday. Yeah. So for today and for Tuesday, on the other side of Tuesday, that one probably is more likely to work than this one for today. Seems like we're going to have a smaller move here. So I don't really want to do a Iron Condor here. I mean, VIX is below 15. That doesn't really, I don't really love that neither. So, again, I guess I just sit in the positions I got, which are still kind of plentiful. I think I'm actually up buying power wise higher than I was to start the week because of some of the different trades I put on. Been moving things out overall. That's the other thing. Just risk managing. Closing out different September trades that I've been holding on to. I think that's the other thing. I mean, coming into today, it's basically at 21 days now for a lot of September trades. So anything that I have still in September is probably part of a diagonal, maybe where maybe I'm long call in October and short upside or something in September. So those are a lot of my September positions left over.
Yeah, same. I've got a few September things, trying to move into October, November, December. The only 0 day things I have are the NDX Butterfly, SPX Butterfly, SPX Super Bear, and then looks like a Marvel short call with a calendar spread there, and then Autodesk as well. So I'll have some stuff to do here, but I could also just let it go and just let it expire because the Autodesk and Marvel trades are going to be losers with them both being down right now. But have already reduced cost basis. That's another reason why when we're doing these short-term calendar spreads, I like to collect at least 50% of the debit I'm paying on the long option so that if we do get a move against us, I've already reduced cost basis. I can just leave the long option and see if we get a reversal.
Yeah, and somebody sent me an email yesterday asking me about those calendar spreads, and I mean, I think, well, if I can kind of get inside their head, I think what they're trying to ask is, more about the management of them, and truthfully, I always say in my case, I usually try to do around I'm usually aiming for about 500. Sometimes it gets to $600. Like we were talking about this yesterday. I mean, usually they're like, anywhere from $1.50 to $1.70, sometimes $2 and change like they were with these Marvels. But I honestly, do that amount because that's the amount I'm comfortable losing, knowing that, look, at the end of the day, when you're trading earnings, it's a crapshoot. You have no idea what's going to happen on earnings. And so for this reason, we use these calendar spreads to try to take advantage of a move. Somebody asked me, why don't you do them closer to at the money? And I'm like, well, the reason why is because I expect a move away from strike one way or the other. So the reason I'm just picking a direction. In this case, a lot of times it's usually the upside because I just want to be consistent in my thinking. Unless I just really think a company is going to not go well and I have a real thesis, which I did this week in one of the software names. That was kind of my idea. But in general, we're trying to just take advantage of the expected move, selling that upside, which is a lot of earnings fall, and buying the next week, usually, sometimes the next couple of weeks out. But the idea is that this near term is probably going to get close to expiring. If not, it's going to make a big move, and maybe it will increase in price, but the vol is going to come in. But guess what? That near term is never going to be worth more than the next week out. And so that's kind of the idea. We're always playing for the great scenario where this moves up big enough that it's close to the expected move. And maybe there's some value left in the near term call that you're short, but there's definitely a lot more in the value left in the call that's a week out or a couple of weeks out. And that's kind of the play. I mean, but really the mindset from the beginning is there's a good chance I could lose this $500. And that's why it's only $500, so I'm not sitting here sweating it.
Yeah. And yeah, I think when you have these types of trades, whether it's a 0 day SPX trade or an earnings trade that's low debit paid, like the earnings trades we placed yesterday that were winners were 100% return on debit paid. So it's like you can get a lot out of these calendar spreads if you get the directional move right. But if not, at least you have another week for it to work out. But SPX too, like we have these short-term assumptions, but you have to offset your lack of knowing what's going to happen. Like you can have an assumption, but you can't do a huge trade with the 0 day. Like you have to realize you're going to be doing these. To be doing these well, you have to do them pretty much every day. Or once a week, a couple times a week, but over the course of a year, that adds up to a ton of occurrences. So you have to adjust your risk smaller when you have an implied occurrence number that's super high.
Yeah, I think I'm going to have to do a video on just calendars, sort of explain the thought process behind them for earnings.
Yeah, you should. You should do it. We've got under a minute now until the market opens. Let's see if we can get some movement here right on the open. I'll flip this over to a 1 minute chart. The E-minis catching a bid here. Look at that. NASDAQ catching a bid as well. But we'll see if it holds in about 30 seconds here. Join us on the YouTube chat if you haven't already. We are keeping our eye on this. Can we do trades in RTY or YM? Yeah,
Why?
I mean...
Why? No, I'm just kidding.
Yeah. Yeah.
Well, YM doesn't have options. I wish it did. I mean, does it? No, right? RTY does.
They do. I think YM.
RTY does, but YM does not, right? I don't think
Yeah,
it does.
it does
Yeah,
not.
I wish it did.
Yeah.
Trust me.
Yeah.
And
Here we
we're
go.
off.
And we're off. E-minis selling off from the recent rebound here. Nasdaq down 80 now. Big sell off there. Let's see what we can get here. E-minis trying really hard to stay afloat and in the green, but not looking good for the Nasdaq, at least right now. So yeah, Marvel down 50 points. Let's take a look at this portfolio, see if we have any P&L day that looks nice. Apple's up $2 and change. This is a October September call diagonal spread, 310, 325, up $200. Maybe I'll consider closing that one, taking some risk off for the weekend. Microsoft continues to climb higher. You'd love to see it. Another one. This is a 550 calendar, long December, short October, up $200. UPS, WDC. Ooh, WDC. Let's try it. I don't think I'm going to get out of this one. $225 winner in this butterfly we set up. This was your trade idea.
WDC.
Thriving. 225. Let's work that. Let's also work a closing order for I think Microsoft. Microsoft's longer term. I'll leave that on 550 calendar. Apple, I think, is a decent close if you want to do it, since it's long October, short September, getting into that under the 50-day mark. And this market just feels like it could reverse at any time. So I'll just leave that.
I don't have any Apple. I don't think.
Yeah. I put this on when? A week ago?
Okay.
Yeah.
I don't have any Apple.
Literally last Friday. There you go. Apple's closed. $200. $200 winner. Love to see it. And then I'm working this WDC. This is flying around. Not to be surprised by that. You've got wider markets here. These are $3,000 options. So with a butterfly, you're going to have wider bid-ask spreads because you're dealing with 3 legs, 4 contracts total. So just letting that work and see if you get filled, I think makes sense.
Looks like many of the Mac 7 are positive, except for NVIDIA. But Google's up, Apple's up, Microsoft's up, Amazon, Tesla, Meta. They're all positive. It's interesting. Mm-hmm. What's not positive, as soon as you said Apple was up, I was like, I wonder if that means the semis are down. And yeah, Micron's down, AMD's down, AMAT, Marvell, SanDisk, WDC was positive. Nice move on that because that turned negative. STX, which also means SpaceX and SK Hynix. Like, it's interesting. SpaceX, SK Hynix, and CBRS, they follow what happens with a lot of the semi trade. It's like the same trade.
Yeah. SpaceX around 140. Haven't moved since that rebound, but I do like that we did rebound from there. We've got some longer term positioning here. Short the 125 put. I think you're long the 200 call, if I'm not mistaken.
Yeah, SpaceX. Yep. I'm long short the 125 put just like you, and long the 200 call. Yes.
Yep. So I like this trade a lot. This is just a longer term setup where we're playing for if and when there is a big rally to the upside, and that includes an IV expansion. We're going to make a ton of capital on that call with the call price, the call increasing in value with the stock price increasing, but also increasing in value with implied volatility increasing. IV ranks at 0 right now with SpaceX. So I think if there is a big move to the upside, you'll get some IV infused in there. But either way, marking a loss right now, but this will be a full winner in 2028.
Speaking of vol expansion, there was some vol expansion in CrowdStrike yesterday, and I did choose that opportunity to sell a strangle. I sold the 260, 195 strangle around like maybe a half hour before we got off the show. I closed those, upside calendars that we had, and then the only one I still have is the 200 because the stock just moved so fast. So we'll see if this stock can pull back some. I don't want it to pull back. Well, I don't mind if it pulls back $20 down to the 200 strike. That would be interesting.
Yeah.
But if not, short vol as well. So
yeah, that's a nice thing with these trades where you're starting with such a huge credit. If you got to move down to 200, you can move down to 260. If you wanted to, you can shift this whole thing around. Like these are the trades that have a lot of flexibility because you have 55% implied volatility throughout all of these expirations, which just means flexibility with credit received if you're going from October to November, November to December, et cetera, et cetera. Question in the chat: are you holding off until you see Jackson Hole reaction? Kind of, sorta. I mean, the market is very telling here. Hasn't moved at all, even on the open. And I think this actually, you know what? This would have been a day to do a 0-day SPX pre-market iron condor, because this market likely won't move until 9 a.m. if we're going to get a movement.
Yeah, most likely.
But IV would have stayed bid too, so I don't think we missed anything too crazy. But just the fact that the intraday move here is just so narrow is kind of telling, and that the market seems like it's waiting until we get some news here or the press conference starts.
What do you think about PayPal? Markets are kind of wide, honestly. They're still a little wide. This thing is digesting what's going on.
Yeah. 35% IV in October. I think this is one where I would just go as far out as possible. $50 stock. I would just go to like January. Like, these options are $500, which is good if you're trying to inventory some delta. Nice and cheap. Let's see if we get any spikes in open interest. Yeah, there's plenty of open interest here. Although, to your point, these markets are a little wide out here. Yeah. December looks a little better. Yeah, 415. So December's much more liquid than January, interestingly enough. But 15-cent wide bid-ask spread here for December. And then if we go to October, we could sell the 60 for 70 cents, something like that. I mean, it's going to be a super small trade regardless. But yeah, I think that this could work. Sell the 60, buy the 55 in December. It's a 5-point wide diagonal spread long term for $3. Yeah, let's get into that.
Oh, some of these semis just ripped. The algos are a trip.
Yeah, that'll be interesting to see. Right at 9 a.m., we're going to get some kind of movement with the script coming out, for lack of better.
I know, right? It's possible. It is possible. It's been it's really been kind of a strange week. I mean, again, if you'd have told me that NVIDIA would have been up as much as it was, I would have thought that a lot of those names would have completely ripped to the upside, and it just didn't go down that way.
Yeah, you're not wrong. And that's why, like, when we initially saw the sell-off in NVIDIA, if you look at an hourly chart, you can see exactly what we're talking about. But when we initially saw this sell-off here, I was like, okay, this is exactly what I expected. We closed at 209-ish, and we sold off to 203. I was like, this is what we were talking about, where they crushed the numbers, huge expenses, though, and then they got on the conference call, whole thing ripped higher, and now we're sitting at 230. So big reversal, but to your point, we haven't seen the rest of the market really rip all that much higher. You have a handful of names that are still down, net down, even after this move, but Microsoft, Amazon, the Mag 7s are not in that grouping.
Yeah.
Look at that.
They are not.
Look at that. Microsoft is by far my best ticker symbol traded this year. I think that'll be interesting. Well, at the end of this year, we should go through and just list, biggest losers, biggest winners in terms of ticker symbols, strategies. There's always something to learn with a year-end review, or even like a 6-month review. Same story. But I believe Microsoft would be my ticker of the year. If it's not MES and MNQ, these might overtake it. These have been great trades, true. And someone was like, "Why don't you just close it?" I'm like, "No, I'm leaving this on forever. Like, there's just no reason to close it. Like, this will be you'll always see MES and MNQ in this portfolio into perpetuity, because it's just, we've gone through so much craziness, and these trades have been the easiest trades to manage."
Yeah, and if for some reason, and it would take some thought, but if for some reason we're in a market like 2022, maybe it's a little bit different. Maybe at some point we would flip our mindset and be like, look, I'm going to be short delta in this thing, and that's going to be the anchor in the portfolio. And so I think the whole point is it becomes an anchor in the portfolio over which you can trade around.
Yep. 100%. 100%. Nasdaq down 40, E-minis up 8. Let's take a look at under the hood here. See some Nasdaq 100 movers. PayPal down, leading the way. So love the long there. I was just filled at like $3 and change for that 5-point wide diagonal spread there. But Marvell, Autodesk, two of the big movers to the downside. Unfortunately, I have call calendars there. CrowdStrike moving down 10 points here. But yeah, very similar sector movement to the downside. And then the upside, you've got Meta, AppLovin, WDC, Kraft Heinz Company. Who would have thought?
There's a couple of those names in there, a couple of consumer staples in there.
Mm-hmm.
I've noticed Costco's up today.
Ooh. Love it. Up $7. I have a basically worthless call from this calendar spread here. I think it might be time to get back in to the trusty 1,000 strike calendar spread. Markets are a little wide though, which is interesting. Not great.
I'm way ahead of you, my friend. I'm already in. I'm still in one. I think 1,000 calendar. That's long October, short set. I think, and then I just I had 1,100 calendar, and I just moved that such that I think I'm long nose, short October. I think. Yeah. I still have that 1,000. Yeah, given that value, I'm pretty sure.
Cookie cutter setup, 1,000. I think we've been doing the 1,000 strike or the 1,100 strike pretty regularly for those calendar spreads. So, Nasdaq just ticked green. Look at that.
Wow, look at that.
Would you look at that? Wow. Last 5 minutes, we've rallied 300 points. Craziness. And yeah, this NDX butterfly trading for $100. At this point, I'm just going to leave it on and see if we get a massive reversal at 9 a.m. WD. I was like, what is this? WDC butterfly.
What's that? Oh, you butterfly. Oh, nice.
Yeah. So that
turned around and ripped.
Love to see it. So yeah, that was a $225 winner. Bought it for $850 3 days ago, and closed it for $1075. So $225 winner there. Got filled on PayPal. Apple I closed for a $200 winner. So just taking off some risk into this meeting and the weekend here. But that's kind of the MO, just scanning through the portfolio, looking for winners, closing them. Microsoft ripping here. Mag 7s are just moving significantly higher.
Mm-hmm.
Love to see it.
Yeah, all of them positive. When's the last time we've seen that? All of them positive? Wow.
Yeah. But we've been saying this for a long time. When we looked at RSP, equal weighted S&P, and then we looked at mags, we were looking at mags, it was like down here. Well, the RSP was at all-time highs. We're like, we gotta get into these Mag 7 stocks, because if we are to believe that the E-minis are going to keep going higher, it's likely going to be from the Mag 7s catching up to RSP equal weighted. But yeah,
for sure.
We're going to take a little break here for myself and Jermal. We're going to kick it over to TP here, and he's going to look through some trade ideas. But we'll be back right at the top of the hour, right when the craziness starts, or hopefully some craziness starts, so we can get some movement in these markets. But let's kick it over to TP, and we'll join you in a little bit.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us. And so does Broker Chooser. So what else can we say? Other than, boom! Trade like a trader. Tasty Trade. Make your move.
We are back with Flame Shirt Friday. I'm Tom Preston with a little different flame shirt today. The other one I think is in the wash or somewhere. I think, or my wife did something with it. Who knows? Anyway, I pulled another one out of the closet, and these are nice light shirts because it's going to be another hot day today here in Central Texas. So the market is up a little bit. I guess I don't really care that much about this Jackson Hole meeting. I really don't. I think these confabs are just a way for people to pad their expense accounts and go on these little trips and stuff like that. What exactly is who is it, Kevin Warsh or whatever it is? What exactly is he going to say? I don't really care what he says. We might see something happen in bonds this afternoon. I don't know. I'm still short. Let's just check bonds really quickly. ZB down 5 ticks. I'm longer put spread in there, so I'm bearish, obviously. But this is a small move. Yeah, that maybe bonds are just waiting to see what happens. ZN, let's check the 10 years. 10 years are down 1.5, 2. That's about what you'd expect in that ratio between bonds and 10 years. But the other big thing is crude oil. Looking at crude oil's down again 1%. This goes back to my hole, and I have not been able to get filled on this. I may give it a try. We could try it today. A short iron condor in there. I just think that crude oil right now, as I've said in the past few days, I think crude oil could just be fairly stagnant for a little while as the dynamics of what's happening over in the Middle East start to change. The oil shipments are starting to come through. I guess the Strait of Hormuz, right? Or they're finding other ways out. And the economic sanctions by the Treasury Department are more. It seems like they're more against China and some of the other countries that would have been supporting Iran and buying their energy. Well, now that it's I think Iran is kind of in between a rock and a hard place. They can't, they don't want to, they don't want to be defeated by the United States. But again, they need that revenue from the oil. So I think oil could continue to trade in this range. It's basically been stuck for the past couple of months. Yeah, these price swings are fairly big, but considering what's going on in oil, it's understandable you're going to see some swings, but the volatility is fairly low for something like oil. Going in here, I don't necessarily want to trade through the weekend, but good. I mean, going down and doing the 80, just see what kind of credits we get for just half points. The issue with crude oil, it's a big product. I would strongly suggest doing defined risk trades in this sort of thing. Find the 26-day. The skew is always pointed to the upside in crude oil. So just a half a point. Half a point. I'm not really getting. I'd like to see about $1.80 on that spread. Maybe if I pull it down 1 strike here and up 1 strike here. Yeah. $1.60. I'd like to get $1. I misspoke. For 50 for $500, 500 divided by 3 is approximately 16, so we're under 60. So I'd take this, but I don't want to trade through the weekend with this stuff. I just don't like trading crude oil short term with 3-day options. And I don't feel like going out any further than that. I'm going to wait till Monday, I think, to trade it. One trade I'm trying to take off. Sorry about this, 6J. Trying to take off a short call spread I have in 6J. I'm working an order in there. It's down again. And if you look at a chart on this, 6J has been drifting lower. So I'm trying to buy that call spread back for about a 50%, 50 to 60% of the max profit. I may take it up a tick just to take the trade off. The British pound, I have a short call spread in there, 6B, and that actually has come off a couple of days. It was threatening my short call spread or the short strike right around here. I'm short the, what do I have? Let's go to the trade page. I'm short the 36, the 136 calls. So it was up around there, but that's why I trade defined risk spreads. Right, I'm not short naked premium, so I can handle being threatened by this. But now it's down a little bit. I have a small profit on that trade. I do have an iron condor in Marvell, and that is, the call side is worthless. The 280, 282.5 call spread is worthless. I'm short the 215, 217 half. So I sold that for, what was the price? For 2.5, I probably sold that for, I think I sold that for about 90 cents. If I go into the follow feed, I can see that in there. Let's go into symbol Marvell. And I sold that for 76 cents. So looking at this spread right now, if I bought this back, I'd pay 55 cents. I'm going to hang on to it for a little while and see if Marvell, it's down 8% right now. Yeah, that was within the expected move. It didn't go past it because I sold these puts right just beyond the expected move. So if it stops right here, I'm fine. I'm gonna sit tight on this put spread and see if I can squeeze a little bit more profit out of it. If I sold it for 76 cents, if I can make 50% of the profit, buy it back for 35, 36 cents, I'll do that. Let's go back in and see what else I have. The positions I have, MOS, TTWO saving. TTWO is rallying up a little bit. NVIDIA's down. Netflix up. Costco's up. Costco, I have a short put spread in here. Excuse me, sold that yesterday. And Meta, what I want to trade. Meta, I did pushed out today's cherry bomb for a bullish trade in Meta. Why Meta? The big story with Meta is that the financials have been not great, kind of middle of the road numbers. They have these big, some have been resolved, but some are looming. I was talking with a friend of mine who's an attorney, and he was keeping an eye on this stuff. Let's see. So, talking to a friend of mine who is an attorney, he represents not Meta. He'd be a lot richer if he did. But he's talking about that, the lawsuits against Meta. They're pretty big. As far as, does it harm kids or, how much influence it has. Let's load this up again. We can do this. Okay, we're back to the sharing. So what I had is, it's been knocked down, and it's been underperforming the S&Ps pretty dramatically during this phase right here. Came out with earnings, get disappointed on an earnings, but it's coming back a little bit. The skew is pointed to the upside in Meta. So the stock's up 1.5%. Obviously, this is the put spread I was looking at in the cherry bomb. I could still do it, the 55, 52 half. Let's check the skew and just for verification. So let's base it on the 580. Yeah, we're a little bit below 580, but let's just make it easy. Let's go down 10 points, up 10 points. The 570 puts are $14. The 590 calls are $14.80, even with the stock $1 lower. So it is pointed to the upside. If I can get this put spread, it's right around, actually I want 80 cents for this. So let's have to pull it in just a little bit, 83 cents. That's about where I'm at. So if I sell this at 21 days, the metrics on this trade, I'll tell you what I look for. 72% P50, the probability of 50%. Probability of 50%, 73 means there's a 73% probability of making half of the max profit, 82. 82 divided by 2 is 41. So there's about a 73% probability of making $41 before expiration, before 21 days. Okay, and that usually happens when I look at when I built that model, it tends to bunch up in the first 10, 12 days. So I might be able to take this off a little bit sooner than 21 days. Generates 99 cents a theta, and it's dropped again. So the stock's rallying. They're pulling premium out of this stupid thing. I'm going to route this order. Let's do it at 80. Let's do it at 85. The markets are a little wide in here, but we'll see if somebody plays. Probably won't get it. I would get it if we get a little downtick in meta. Let's go into the SPX. Let's go into the VIX. The VIX is up 8 cents. That's meaningless. I need a much bigger rally to save my short put spreads in the VIX, meaning I need to sell off in the S&Ps, which I'm not getting today. Right now, this is, I guess, they're all waiting for Jackson Hole, whatever the heck it is. I don't really, like I said, I don't really care about that. I'm going to go in and find my iron condor. Right now, the 76.60 puts, I may have to take this up. I had to pull it in closer today, or yesterday, excuse me, because I was not getting $2. So let's just start here. The 76.60 is $25 away, 76.35, and let's see if we can find a $2 option on the call side. Yeah, right there, 85, 78.10s. May have to pull this up. Yeah, let's do this. Let's pull this up one strike too. Come on. There we go. All right, I'm going to route this at 280. Again, this is just the mechanical trade, and I am not trading these big size at all, mainly because it's, with a VIX in the 14 handle, the credits just aren't high enough for it. So that's the iron condor I'm working. I may not get filled on that. They may be sucking the premium out as we speak, because the index it really hasn't been moving very much. Some of the other big things I'm looking at, there seems to be, I think there is a bullish bias towards the Nasdaq and the S&P 500 right now. Looking at the heat map, there's a lot of green on there. There's, Microsoft is up, Avgo's up, Apple's up, Google's up, Amazon, SpaceX, Walmart, Intel's up. And the down, NVIDIA is the big one that's down. Marvel's a big one that's down. Palo Alto's down a lot. Everything else, not so much. That's the NASDAQ. In the S&P 500, again, there's a lot of green there. So I would not be surprised to see a little bit of strength in the market today. And we'll see what happens with Jackson Hole. I'm not holding my breath. I'll wait. Here's the deal. I'm not even going to bother to read the news. I'll just see what bond prices are doing and the S&Ps. That's going to tell me what, if anything, Kevin Warsh has said that's of any import. So with that, I'm going to kick this back to Chris and Jermal. Stay tuned. I will be back at 10 o'clock with Chris Vecchio to do confirm and send. If you have questions, send them off to research@tastylive.com. All right, Vic, Ben. No sweat. I'll see you soon, bud.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What's up, everyone? Welcome back to the show. It is 9:02. We've got the markets moving around, and it looks like a little digestion of whatever is being said or about to be said with the Jackson Hole Fed meeting. But we've got a very special guest on the line here, Brian Feroldi. Brian, how you doing today?
Great. How you doing, Mike?
Very good. Very good. We were just talking about some of these market movers and some stocks that we were talking about yesterday, particularly Wendy's. And yesterday I was like, I don't know when the last time I went to Wendy's. They got rid of the sunroom, so Jermal's hasn't been there in 20 years.
That's right.
But you ate there yesterday.
I did. My son and I went to Wendy's yesterday after playing 18 holes of golf, and it was a delicious meal. The Frosties really came through.
First of all, that's awesome that you played 18 holes with your son. That's great. I'm still trying to get my boys out. But what prompted you going there? Just curious. Was it just the closest thing?
Yeah, convenience. So the closest restaurant to my house, I live out in the suburbs of Rhode Island, is a Wendy's. It's not somewhere that we go to all that often, but if you want convenient food, hamburger, it was a place to go.
That's awesome. I mean, look, you're a guy who evaluates companies and you teach people how to understand companies, and so we'll come with that one last. But just let's go top of mind. A stock that's moving around today, PayPal, that's dropping on the idea that they're not going to get bought out by Stripe and what's the other company? I forgot at the top of my head, but they're not going to get bought out. What is help us evaluate PayPal right now for those, and I guess what really this stems to is that when a lot of us who are traders, we see a company, we see this type of movement, immediately we're like, ooh, this is an opportunity to buy. But is it really? Is PayPal still really an interesting thing? How do you evaluate a company like this and decide if you want to do something with it?
10 years ago, PayPal was a phenomenal buy. It was like an N of one company. If you wanted to do commerce on the internet, PayPal was the platform to go to. Once they got spun off from eBay, it was really a phenomenal investment, basically up until 2020, 2021, something along those lines. Yeah, when you see it at the peak there. And it's just been a sickening slide ever since then. I was a shareholder of PayPal for quite some time. And if you follow the stock, a lot of value investors have been saying that PayPal is a screaming bargain for the last 5 years now. And you can see what the market has thought of that reaction. It's just been going lower and lower and lower. I'm a content creator, and as part of my business, we do sell digital products online, and I do offer PayPal as a solution. I can tell you from the creator side, I hate it when people buy with PayPal. PayPal has really terrible analytics and reporting. It's way slower than other tools, and I've seen the more and more people that buy my products are paying with Google Pay and Apple Pay, and PayPal is losing its share. And when you analyze the fees on the merchant side, PayPal has been lowering its fees for years, but it's still one of the more expensive ways for merchants to accept payments online. So from the merchant side, I fully understand why people are flocking away from PayPal.
Yeah, I was saying that I like to use PayPal, but there's an interesting point that you made. Like, I use PayPal if I'm buying something on my laptop, but if I'm using my phone, I'm 100% using Apple Pay. So
it's so convenient, right? It's built right in. You got the facial double click facial recognition for me, and then instantaneously goes through. In fact, I rarely buy things on my phone if it doesn't have an Apple Pay option. And just seeing the behind the scenes, about 40% of the payments that we get online now are through Apple Pay. It used to be 25% PayPal. Now it's below 10%. So consumers and merchants are moving away from PayPal, and that's reflected in the stock price.
Yeah, it certainly is. I mean, so at this point, it seems like they have to find an alliance or find a way to reinvent themselves because, like you said, they're losing share to these other companies.
Yeah, I think when Stripe was buying PayPal, one of the big rationales for doing so was obviously the network, but they still had like 300 or 400, I forget the exact number, million active accounts. So it's still a widely diversified program. And it's not like the business is unprofitable. It's just that the future growth of this company is going to be extremely, extremely challenging. So to me, it made sense for Stripe to take this company over. There was some strategic rationale. But as a standalone businesses, even though I am a value investor and I recognize that this is a cash flow positive company, I think that this is a company that's likely in its prime is peaked, and I'm personally not interested in investing in companies that I think are in a permanent state of decline.
Fair enough. MasterCard was another one you mentioned. What about MasterCard has you invested?
This is probably one of the best businesses ever created, period. I mean, this is a phenomenal business. This is one that I've owned for at least 15 years now. It's one of my best performing stocks of all time, and it's one of my top holdings. The thing that really attracted me to MasterCard in the first place was its business model. Most people think that MasterCard, since their name is on their credit card, they must be loaning you money. Nope, they do not have anything to do with loaning you money at all. They're purely a payment processor. And I think of them as basically a toll booth on global commerce. And one phenomenal factor about businesses like this and Visa is that once you reach a certain size and scale, every incremental swipe that happens is essentially pure profit. If you look at this company's operating margin, it's one of the highest operating margins in the world. It's something along the lines of 50% operating margin. So every swipe of the card, MasterCard basically turns 50 cents of every dollar in sales into profit. That is an incredible, incredible business. And as more people around the world are transitioning from cash and check towards digital payments, MasterCard, Visa, and the like have all just benefited.
Wow, yeah, they've benefited big time. Just to update the folks here, Chairman Warshift speaking, and we have seen gold reverse. It's down 1%. Bitcoin are down 1%. Those seem to be the biggest movers. Bonds are kind of quiet, honestly, and the stock market is down very small, but it's down nevertheless. Yeah, MasterCard and Visa, I mean, they just print money, it seems like, and they're going to print money into perpetuity. I mean, is there anything that stops them? What's the scenario where they start to struggle?
Two things I think that are worth pointing out. A few years ago, a ruling came out. So for decades, both Visa and MasterCard made it a rule that if you were a merchant, you were not allowed to pass on the cost of the payment processing as a separate line item to your consumers. So that they had to charge the same price for a cash payment, a check payment, or a MasterCard payment. I don't know if you guys have noticed, but when you go to places now, they say, we'll tack on a 3% fee if you choose to pay with credit cards. That used to be something that they could not do. So consumers might be more aware or more incentivized to pay with cash than to pay with card. On the flip side, so many people's habits are paying digitally or with cards now that the hassle of paying by check or cash, with that 3% fee they might not overlook. But that is certainly something that that allowed MasterCard and Visa Card to grow like crazy because people didn't realize they were giving those companies money because the price was the same. That's thing one. Thing two, it is legitimate to say that cryptocurrency and digital payments through crypto assets is a legitimate long-term threat to businesses like Visa and MasterCard. If you can essentially use alternative technologies like that are free for intermittence and for global payments with zero charge versus Visa and MasterCard, which have a 3% charge, that is something to keep an eye on in the long term. On the flip side, consumers like using credit cards. There are all kinds of security benefits that come with using credit cards. If a charge goes through and it's not to you, that there are processes in place to handle that. You get rewards with credit cards. So there's numerous things that protect Visa and MasterCard from the long-term threat of digital currencies, but it's definitely something that investors should keep an eye on.
You're going to have to bump those rewards up because, that 3% fee is annoying to me.
Yeah.
Well, if you get 1.5% back of that fee, that certainly helps take the sting out.
That's fair. But yeah, we're in Chicago, so we get the fees left and right. Mm-hmm. You leave the house, you're spending $300. Even if you buy one drink, it's great. Microsoft was another one. Microsoft has been one of our best performing stocks. It's been an easy trade in the sense of like, it's sub 400, let's buy it, and it rallies to 450, and then we see it drop again, and it's sub 400, let's buy it. That's kind of how we've been playing it. But what about Microsoft has your eye?
Oh, it's almost like Microsoft is basically a toll booth on enterprise spending. So earlier this year, their stock definitely took a nosedive. It's been underperforming for a while now because investors have been soured on the fact that, one, they were in theory, a leader with AI for a while because they were the first big investors in OpenAI, but then Anthropic kind of took that crown, and Microsoft is now seen as an also-ran in the AI. And despite that, they're still spending hundreds of billions of dollars on AI CapEx, and investors are rightly saying, is there going to be an adequate return on that capital, or is that money they're just flushing down the drain? And you've seen that kind of uncertainty play out in the stock price there. I bought some earlier this year below the $400 level. I thought that the competitive advantages of the companies are too great. The cash generation of this company is too great, and even if AI proves to be inadequate spending, the company still has multiple other ways that it makes money, and it can easily absorb the hundreds of billions of dollars that it's spending out there. So I just think it's a tremendous, tremendous company out there, and it was trading at a very attractive valuation.
Yeah, this is one, and this is how we operate all the time. Is like when we see the Mag 7s down near annual lows, like the main point is that they have so much cash, to your point, that they can withstand basically any and all variants, and that's one of the keys to sustainability, especially when you see the markets reverse back to the upside. So yeah, we will continue to buy into these products when they're at their lows. Meta was another one. Meta was one that had sold off aggressively, and then even after their earnings, 3 days later, the market just bought it right back up, sold off closer to the earnings lows, and now we're right back closer to 600. So this is another one that we're trading to the upside anytime we see the sell-off below like 550, 560. So yeah, it's been an interesting trade.
Yeah, if you zoom out on Meta even more to go on a multi-year look, you will see that a few years ago, their stock took a massive dive, right? Basically, what was that, 2022, something along those lines. During that time frame, investors had two big concerns. One, TikTok was coming. It was going to take all of their eyeballs away. But two, the company was pouring billions and billions of dollars into Reality Labs. It's like metaverse product. And that they were thinking that's not going to pay off. Then basically at the bottom, their growth rebounded, and Zuckerberg rightly pulled back on some of that spending. So when I saw that setup, that's why it reminded me of what's happening with Microsoft and Google right now. Investors are worried that all of this money that's going into CapEx won't pay off, won't deliver adequate returns. But these are things that are 100% within these companies' controls. If they decided tomorrow, you know what, this spending is not going to pay off, they could easily pull back on that CapEx expending, and their free cash flow would soar. So right now, the markets are not giving these companies the benefit of the doubt. That's probably the correct thing to do. But I think that they're still nicely valued and great stocks to hold for the long term, simply because the pain that they're going through is by choice, and they could choose to remove that pain at any time if they wanted to.
Yeah, another company that we were talking about, IMAX, obviously has been in the news a lot with this Odyssey movie, which is up to, I guess, domestically, $500 million. Wow, that apparently is great. Have you seen that movie, by the way?
I have, yeah.
Okay, we haven't. Mike and I haven't yet. We're it's kind of crowded out here to be able to see it. But just evaluating the company, they reportedly put themselves up for sale. It seems like they basically have some sort of, I guess, the lack of a better word, exclusivity in some ways, the way that they're positioning themselves. But what do you think about that company?
Yeah, they're a play on the experience economy, right? Going to the movies and seeing a movie the traditional way, that's kind of commoditized, although some theaters now have cushioned seats, or they sell beer, or they sell food, kind of bring it all. But seeing a movie in IMAX is still an experience, right? Something that you consumers are clearly willing to pay a huge premium to do. I mean, by me, the IMAX theaters have been sold out for months to see the Odyssey. You even getting the worst seat at the worst possible time, you still have to go weeks out in advance to try and to do that. But if you look at IMAX's stock over the long term, it's extraordinarily volatile. It's basically a play on, is there an extreme hit movie that's driving people to IMAX theaters? And when the answer is yes, the stock rips. When the answer is no, or they go through a period of duds, the stock falls. And this is during a time period when they are adding more and more IMAXs continuously throughout the world. So this is a stock that I personally held for a while because I liked the business model. I didn't like the boom or bust nature of it, depending so heavily on hit movies. So that's been very frustrating. But this to me is a great example of a great business, great brand, not one that is dependable for the long term, simply because you're so dependent on hits being produced.
Yeah, until we pulled up the stock today, I had no idea it was trading $55. I thought it was still in the 20s, maybe low 30s. So it's kind of fascinating. They're clearly using this opportunity, like you said, it's boom or bust. They know they're in a boom period, and they're using this opportunity to say, who wants to buy? And I bet there's not going to be many takers.
Kudos to management team if they can get sold. It is the correct time to do that if they can. But this has been I'm the type of investor that likes to find quality, buy quality, hold quality for long periods of time. Companies like this sound like quality from the outside. They're just incredibly frustrating to hold for long periods of time.
Yeah, apparently they lost the blueprint too. So that's just something that I can't get over. It's insane. Well, Brian, appreciate your time. Where can the people find you if they want to follow your stuff?
Yep. If you're into fundamental analysis like I am, I created a software product called Stock Simplifier. If you go to stocksimplifier.com, you can sign up for a free account. Check it out.
Awesome. Good stuff. Appreciate your time, and hopefully we'll see you soon.
Take care, guys.
Adios. E-minis down 2, NASDAQ down 100. Market selling off a little bit from this little meeting we've got here. Apparently some YouTube chat, people giving us the information we need. Looks like Warsh is just spinning the wheels, not really saying too much, nothing crazy. So yeah, let us know if there's anything that's going on. We've got our eye on the YouTube chat, but yeah, I think at least right now, markets are selling off just a tad, but nothing too
Gold
crazy.
and silver taking it on I wouldn't say taking on the chin. That's a big extreme, but they're the ones that have gotten hit the most out of this, both down over 1%.
Yeah. We've got a nice intraday reversal here in gold and silver, respectively. But yeah, I think at least right now, E-minis are completely flat. NASDAQ's down 100. And if we look at a minute chart of the NASDAQ, we can see when we had that 930 move here. And yeah, we're kind of just selling off to lower lows, and we're bouncing from the recent low, but feels like another chop day.
Yeah, just a bit. You know what I forgot to ask him about that 2047 that he had up in the background. I didn't know what the heck that was. Is that like some subliminal thing or something? I looked it up. This is the problem, folks. I'm just too observant. I'm just too observant sometimes.
You know what? I saw that too, and then I looked at the screen and I was like, it's not on the screen, so the people are gonna be like, what are these guys talking about?
Oh, okay, good. So it was only us.
Yeah.
Oh, okay.
Yeah.
Oh, well, yeah. For those who don't know, who didn't see, they cropped out the screen, but he had like this thing on his shelf. I was like, what is that? Is that symbol for something? Is that a symbol for the end of the world? I don't know what that means.
That'd be amazing if he was like, yeah, it's the end of the world. It's probably a target.
Oh, it's a movie.
Is it?
2047 Virtual Revolution is a movie. I don't know.
Well, yeah. Now I really need to know. But I feel like it's I feel like it could have been a retirement target date. That's where
it could have been. Maybe that was where my head went to as well. I was like, okay, maybe that's his retirement date. But too funny.
Jared saying Jackson Hole yet again. Nothing burger. Market pulling back with people taking NVIDIA profits. Honestly, yeah, NVIDIA selling off right here. Interestingly enough.
Well, SanDisk is up. WDC is up.
Yeah, NVIDIA sold off 5 points from the high just a few minutes ago. So craziness.
While we went to break, I did close out my 200 strike calendar call for like $35 profit on CrowdStrike. I was able to do that. It's about the only thing I was able to do. Nothing else for me to really do today.
Yeah, it is kind of a nothing burger day here, but yeah, CrowdStrike down 15 points. So yeah, I think you had the 200 that you left on, right, yesterday?
Yeah, that was the 200 that I left on, so was able to close that out.
Lovely.
I probably could have waited longer. I mean, the stock does seem to be leaking lower, but I didn't feel like playing that game since it expires today. I didn't want to forget about it.
Yeah.
Oh,
I hear you there. I did close some positions. I got to post those to the follow page. I'll do that during the upcoming break here. But question in the chat from Josh: what are the metrics for putting on a new Butterfly NDX or SPX trade? So these ones, we've basically just been doing them into market rallies, but usually we just do like the monthly or a couple weeks out. 2 weeks out to 30 days is typical, but I just go to the expected moves. Like if we want to do it in the 14-day cycle, I would wrap the short strikes around the expected move, 28.7, and then do it usually 200 points wide. So 28.9, 28.7 twice, and then the 28.5. And you basically get yourself a downside butterfly with a max profit of around 20K. You put it on for a couple $100, $700 in this one. Unfortunately, the one I have has lost a lot of the value with yesterday's rip in NVIDIA. I thought it was going to be a great one with NVIDIA initially selling off. But these are trades where like I put this on and I offset it with a bunch of neutral to bullish positions to the upside. And if the butterfly doesn't hit, then we're making money on the upside trades that are in the single names. If the butterfly hits, then we're hedged to the downside. So it's kind of a nice low monetary risk for a high hedge reward.
When is the next Fed meeting?
Good question.
When does it say? Whatever that Wednesday is. Is that same Wednesday of the 11th? Probably. No, that's not right. The
It's like
16th.
October.
There's one on September 16th.
Oh yeah, September 16th and then October 28th.
Okay. Well.
So yeah. So if
that's
you wanted
part
to
of
do
my
those-
rationale.
Yeah.
Whether it's the day of or day after, that's usually part of my rationale, or that expiration, something around there. That's usually what I end up doing.
Yeah, so we could put this on. September 17th is the day after the Fed meeting. So you could do the day of or the day after.
Day after is probably better.
Yeah, it'll be cheaper to do it the day after for sure. But 28.9, 28.7, 28.5, short strike right at the expected move. This one is $1,300 for the 20-day. And the 16-day would be a similar cost there. Not too much of a difference in the expected move. So, yeah, a couple $100. We throw them on. They're a downside hedge for the portfolio. Before the NVIDIA earnings move, it was a nice winner. I don't regret not taking it off because I placed a bunch of bullish trades like in CrowdStrike and NVIDIA just blindly, knowing that I had the NDX butterfly on. But yeah, wish we had that downside move because the NDX butterfly would have a lot more profit potential than the calendar spreads.
Mike, I just found the perfect job for you, man. Polymarket just tweeted this out. It says, just in, Greek Islands offers free accommodation in exchange for caring for rescued kittens 5 hours a day.
Perfect. Sign me up. Sign me up. Greek Islands, living, sipping the wine.
I mean, you know what I'm saying? Sounds pretty good.
Yeah. I would live in Greece.
Hell yeah.
For sure. Yeah, this market's...
I don't even know if you have to live there. You just got to stay there for a little while. It didn't say how long.
That's true.
You could go for like 3 weeks at a time, you know?
Yeah. Didn't specify. I'm just popping in for a good time.
For sure.
But yeah. Market's
I'll put on another NDX. Where'd you go? The 17th?
I didn't do it yet, but yeah, I think I would do the 17th, the 29 or 28.7.
Yeah.
29, 28.9, 28.7, 28.5. Markets are a little wide in this expiration, but
they are.
Basically, we know that this will be trading for around $700-800. So I would move it down. Like you can see how wide this bid ask spread is. So yeah, I would move it to like $700 and see if you can get filled. But I think right now into this sell, like I'd rather put this on into a rally personally.
Yeah, for sure.
So I think I might just leave it for now. But everything is red on this watch list.
I'm gonna go with the 17th. I'm gonna go with 28,750, and then $200 wide. So short 2 of the 28,550s, long 1 of the 28,350s. Just like you said, I'm gonna put it out there for $7. Maybe we rally. I don't know.
Yeah, I like it. Yeah, E-mini's down 3 now. Crazy sell-off here. NASDAQ down 80. Bitcoin taking it on the chin here, down to 79K. But
I sold a Bitcoin future yesterday.
Yeah,
sold it at 80K. So almost up $100 here.
Very nice.
Whoa, I just got filled on the NDX.
$700.
Yeah.
There you go.
We'll post that.
When the markets are a little wider, you just pick your price and let it sit. And if it fills, it fills. Better to do that than just route it for the mid price blindly because the markets are so wide, they'll just fill you immediately, most likely.
If it fills, it fills.
If it fills, it fills. But yeah, closed these positions. WDC, those $200 winner, got into PayPal for a new trade, long call diagonal spread, and then closed Apple for a couple $100 winner too. I'll post all of these to the follow page right now.
What did you do in PayPal?
PayPal was the call diagonal spread. So I just went out to December, bought the 55 for $400, and then sold the October 60 against it for $3.50.
Cool.
Just a small engagement trade, but $5 wide diagonal for $3.50. It's a good return if you get the rally, and we only need 5 points. We just need a reversal of what happened today over the next couple of months here. So I like the probability of it, but December long option, 112 days out for less than $500. It feels like a no-brainer, but we'll see. PayPal's had a hard time catching a bid, so it certainly has risk. But if I'm going to place a bullish trade, why not do it into a 11% sell-off in the stock?
Nice. Wait, what? Traders price a 50% chance of a Fed rate hike in September now? It was lower than that, wasn't it? It was way lower than that for September.
Yeah.
The 230s curve flattened.
Yeah, I've got the CME Fed Watch tool pulled up. Looks like 45.5% for a 25 base point hike. And that has gone up a little bit. It's gone up actually pretty substantially. It was about 35% yesterday. Now we're sitting at 45% today. So,
well, they needed to pump those up. That was rookie numbers.
Mm-hmm. Mm-hmm. Why don't we take a quick 90-second break here? We got E-minis down 4, Nasdaq down 70. We got Jem Karsan on the other side of this break. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everyone? Welcome back to the show. E-minis are completely flat. Nasdaq is down 40. Seems like the market's catching a bid from the recent sell-off, but we got Jem in the house. Jem, how you doing this Friday?
Doing great. Happy to be here. Happy Friday, fellas.
Same to you. Same to you.
Yeah, it's a weird day. Not too much going on. Thought we would get some more vol from this Jackson Hole event, but apparently not.
Yeah, the interesting part is this commentary from Warsh was notably hawkish, right? So if you he's very clear. There's a firm, fixed target 2%. He's defending that. All the commentary was very much about do not expect any type of easing anytime soon. Yep. And then I think on top of that, we have a generally forward guidance that's defending kind of his view of being a much more kind of data dependent kind of inflationary hawk. This is the core, the foil to Besant, I would say. And I think if you look at what he did at the last Fed meeting, he voted with the doves, right? And he expanded, if anything, the amount of, less data. He made it harder for there to be any real inflationary hedging going on. And at the end of the day, I think that he's walking a little bit of that back today, and he's going much more to the hawkish camp. So I would expect this to be actually negative news. I think some of the pinning action we're seeing, or the majority of the pinning action we're seeing, is because just vol is so well supplied at the end of the day that it's making it hard for this market to move.
Yeah, I've got the SR3 pulled up here, and you can see right at 9 a.m. this thing sold off a little bit. So right on cue, you're seeing the implied interest rates move. We just saw a little spike in the CME FedWatch tool as well from yesterday, at least, for a 25 base point hike. Probability jumped about 10 percentage points, and staying where we are dropped about 10 percentage points. So market's reacting a little bit, but definitely interesting to see that the equity market is still completely flat.
Yeah.
Yeah, and I think if you look a little bit under the hood, what you'll see is we can't get above this 0.5 standard deviation up of the 20-day. I will say that's something to watch. Historically, in a downtrend, and we are going into a bit of a short-term little, can't find new highs. That tends to be a sell level. It doesn't appear. It doesn't reverse overnight necessarily or at a certain moment, but just watch that level very closely. We're really teasing it again and again here. So news generally not bullish. So let's see what happens here. These things have a way of doing nothing, and then think of NVIDIA just the other day, right? We had market down, vol down, nothing, market closed, and then it spiked 15%, right? So just know that this is just because it's calm right now doesn't mean that nothing will happen. I will note as well, end of month flows Friday into Monday, tomorrow. Labor Day, pre-Labor Day vol is very, very compressed. Vol after Labor Day has a bit more, a little bit more juice to it as we get towards that SEP OPEX. Wouldn't surprise me to have this thing kind of chop sideways a little bit and then eventually roll over. So let's watch. Let's see.
Yeah, you mentioned NVIDIA. That was an interesting one yesterday, right? I mean, that was it was not surprising that they beat, of course, but I think the move to the upside surprised all of us. And then even watching SPOOs after, I mean, we were up 63 handles at one point in time, only to fade later in the day. Talk about those flows, what dealers were dealing with in that situation.
Yeah, so when dealers are short out of the money calls, one of two things is going to happen. Either you're going to get a big enough move to activate those calls and you get a gamma squeeze, right? Or a baseline, if you can't get above X level of move, the natural flows are vol selling. And those are those Von charm flows on one side, which is the decaying vol, the selling a delta, or this kind of activation of the gamma, right? As you move into or through calls. So the bar was very high for a move, meaning it would have to have been a big move to activate those calls. And naturally, when the news came out, which was in line, what did we see? Well, we saw a kind of vol market down, vol down. That's the initial first move you would most always expect, unless you have some outlier news. The interesting part was as soon as the market closed and the illiquidity and those flows, those dealer flows kind of came off the table, there was a big, buy order and kind of sequence. And this is, hedge funds, dealer, people on the other side of the dealers, knowing that those calls are short, and if they can get it above X level, it's going to squeeze. And so they were able to activate, this isn't a conspiracy. The reality is, at the end of the day, dealers know what they have on, but hedge funds also are very clear about where these levels are. And if they feel like they can push levels, they're going to, because they realize if they can get it up, from down 2% to up 3%, it'll squeeze. And so in a liquid market in the day, they were able to do that. And that's really what kicked off that rally.
Talk about squeeze. Just had a mini squeeze right here. A little quick, as I saw Mike click on that. We had a mini little squeeze here in markets. There's a lot moving around here, but it seems fleeting, though. It doesn't seem real.
Well, we'll see here. Again, these are the important levels I was talking about right here, right about 2 points higher than here, or 3 points higher than here is kind of those levels. So it makes sense that we're testing these levels. If you go look at this chart going back for 2 days, last 2 days, let's zoom out a little bit. You can see this kind of line here, right? That's for a reason. That's that level I'm talking about, which is this, again, plus 0.5 of the 20-day. that area is a battleground right now. And so let's see how this resolves. But if it can't break through this level, then you see lower. If it can break through in a meaningful way, not just a couple points, you might see a Friday and a Monday and a month rally. So my bet would be it's not going to garner the strength here, but let's see.
Yeah, crypto catching a bid here as well over the last hour. We've rallied almost 2,000 points. In the YouTube chat, Mike let us know. But yeah, kind of an interesting day. But to your point of compressed vol leading up into the holiday, only a 40-point implied move for Monday feels really low. But less than 100 points for the entirety of next week feels very low. But 11% IV, VIX in the 14 handle, like that's what we should expect. I can't believe the VIX is almost in the 13 handle. That's insane.
Yep. But again, what you're beginning to see, and I want to reiterate this again, is that vol curve is very steep because you have that election vol and everything behind it. SEP OPEX has a bit of a vol blip, but the stuff in front of Labor Day is still very incredibly low, as you're highlighting. So, and really the first kind of think about it as like the first 20 days or so. So this disconnect, what does that do? Well, it's easy for people to sell calendars, sell a higher vol to buy a lower vol. That pins markets. If you can sell a bunch of vol longer dated and buy the gamma short term, that is an easy trade. And ultimately, to make it not easy, the one way that loses is markets don't go anywhere. And the very low vol in the front just doesn't pay, and the stuff in the back continues to kind of have a base and build higher. And I think that's kind of the action that we're seeing, which is short-term pinning, market's not going much of anywhere, and more longer-term kind of vol is firm.
Yeah, I mean, I think it's pretty clear at this point for markets. Look, a lot of the last major big catalysts were these two that we had this week, and it's basically over. And I mean, look at it. We're at the lowest levels of the year as far as VIX goes. I mean, we're close to it again, outside of the blip that we saw, in early August. But this is it. So now it's just what's the next thing, which we will talk about again on Monday coming next week. But we're looking forward to the next thing because things are fairly quiet here, and I think that's the market we walked into today, and that's the market we're seeing right now. And again, the only things that really moved today, when you really look at it, outside of individual names, we're talking big stuff, was Bitcoin and was gold, and they were waiting on this catalyst, and that didn't even really drag them down as much as you would have thought. I mean, this curve flattening that we just saw with the 2s and 30s, it knocked them down, as you can see, but it didn't sustain it. So that's a little surprising here.
Yeah, again, I think all you need right now is a move off these levels by 20 points. And something interesting might come into the market. I don't know that will happen because the vol compression is where it is, but just know that it's easy to sleep on this right now. The news gets digested, everybody falls asleep, and then things can happen. So just be careful here. Unless we break above these levels here, this is an important level, like I said before. Okay.
I mean, this market right here, like, Jim, I've never heard your voice like this. It's amazing. You're so calm. Usually you're in the pits, Jim. This is the calm Jim. It's like you're reading a bedtime story to the kids.
Yeah, it is a bit of a bedtime story today.
It really is. It really is.
As everybody's going into the weekend and a fairly placid market. But yeah, honestly, I sometimes it's exciting to just to set it and forget it and buy those calendars like we've been talking about.
Yeah.
Yeah. E-minis up 16 now. NASDAQ up 17, like you mentioned, piercing through this range above 29,710. We'll see if we can hold it there. Pretty big intra-hour range here. We've rallied 200 points in the NASDAQ, basically, from the low. And now we're trying to get through new highs here with this level, right, that we've tested a handful of times over the last few hours. Looks like we're pushing higher.
Yeah, it's trying to do it right here. So let's see. I think an important, like I said, important level, and on a Friday, if they can get it going, usually it follows through. So let's see.
Currency wise, looking at the dollar, I mean, the dollar's bouncing a little bit. Let's just, move to something that's at least seemingly interesting. We're seeing, we did see a strong move after this speech here with the dollar. What are you looking forward to in that realm, of the currency realm?
Yeah. Honestly, I would have expected a little bit, it makes sense to me that he's coming in to defend the dollar. That's his role. And I really see this as like a good cop, bad cop routine between, Besant and Warsh, right? Besant's out here printing money, doing whatever he needs to do to kind of stimulate equity markets, essentially leaning all over the dollar and willing to do whatever to keep things moving. And Warsh's role is to not have that get out of hand to a point where the world starts selling the currency, starts doubting the kind of, the trustworthiness of the dollar, so to speak. And now that, at least that's true narratively. My personal opinion is the reason why Warsh has completely stopped kind of the amount of guidance, the forward guidance that they're giving. The reason he has moved off of the inflationary measures that we use to ones that take less data in and eliminate outliers is so, quite frankly, he doesn't have to actually react. He doesn't actually have to be the guy who is doing anything in action, whether it's raising rates or doing anything to be actually getting in the way of dissent, if that makes sense. But he is the narrator in chief. He is there to say things like he said today, which is hawkish, and to help build confidence in the dollar. But candidly, I think we're going to get more and more of the same, which is not honestly much from him. He's going to stay out of the fray, and Besant's actions, the Treasury's actions, are ultimately dominant. He will only enter the fray, in my opinion, if and when, and I believe after the midterms is when this is coming, we've talked about this, we get a more meaningful pullback and something that feels like more of a crisis at the lung of the curve, in which he will eventually intervene. In the meantime, his role is to not get involved, not get in Besant's way, but still talk a big game where he is the hawk in the room, emphasizing Druckenmiller's kind of op-ed, basically. I think Druckenmiller did a lot of the speaking for Warsh in that Wall Street Journal op-ed. I think that was part of why that was out there before Jackson Hole. They don't want Warsh going head-to-head with Besant, but they do want Druckenmiller reiterating Warsh's comments to kind of drive this, very kind of hawkish message, which is what Warsh stands for.
Well, yeah, give a quick overview of that. I did see headlines about that. I actually honestly didn't read it, but there was some kind of standoff.
So Druckenmiller sent about 3 days ago, did an op-ed in the Wall Street Journal, like a one-page op-ed, which to me reeks a little bit of coordination. I don't know why, out of the blue, right before Jackson Hole, Druckenmiller decides to do a one-page Wall Street Journal op-ed. It also, just a side note, has been found to be almost completely written by AI. I guess we all are leaning all over AI these days, but just felt very hurried and rushed and thrown together. In my mind, that these have all the hallmarks of Treasury and the Trump admin, and so why do they do that is the question, right? Like if we take that view, why why do they want that? And my view is to give Warsh a platform, a megaphone in the Wall Street Journal without it being Warsh, basically saying we stand for sound money and also directing Congress to stop spending. Now, good luck. I think it's I don't think that's going to we're not that's not happening anytime soon. We're not going to austerity, but at least a narrative in the Wall Street Journal about how this long end of the curve breaking out is not the Treasury's fault. It's not the Fed's fault. It's Congress for spending too much, right? That commentary, I think, is is something that Warshed all really are keen to push, and I think you'll hear a lot more of that because they want to ultimately not see greater spending coming out, particularly in the midterms and coming out of the midterms. A and B, they want to make an argument that gives them cover for like, hey, when we have to intervene in the yen and we have to do QE at the long end of the curve, it's not our fault. You should have just stopped spending. And I think that's what that's all about. That's my read on that.
Yeah, I think it'll be interesting to see how the rest of the year plays out. But to your point earlier with the VIX futures, you can clearly see that right now we are super compressed. But at the end of this year, when we get to the election craziness, you got a really flat and kind of sort of elevated VIX curve here, 1930, 1945 in the X and the Z contracts. And then same story as you go into 2027. Do you think this will change at all, or do you think this will just hold until?
Well, I think one interesting point I'd like to highlight there is how you see this kind of the back end going down, but in that kind of November area, right, you start to see some firmness, and that's that. What you haven't seen so far is a kink, a big kink in that election ball. And honestly, I've been pounding the table on this for several weeks now, and it is starting to work already. But that event vol itself, never mind the vol in the back in general, but that event vol itself is starting to catch a bid. I think the reality is that's a credit. And even though it looks like, oh, but that's a kink. No, from an event vol perspective, that is very low, particularly given the risks, particularly given, listen, we're looking at a 50-50 split in the Senate with a downward current trend to polling for the admin. Will he likely win? Yes. Is it going to be contested? Yes. Is there a risk of Trump losing both houses? Absolutely. And the more we get closer, if that's the case, you better believe there are going to be recounts if Trump, if these Senate races are when the final counts come in, they look like the admin loss. And if you think this in past election cycles that elevated tensions, you ain't seen nothing yet. So my point is, people are kind of getting lulled to sleep by the current lack of volatility, particularly this summer. Just know that we're only 2 or so months away from like the big, having a very good sense of what's happening there. And 2 months is not a long time. And people, we tend to prepare for that a month or two in advance. So just know that now is when those moves start to happen. By the way, if this market does rally here today, which it looks like it's starting to kind of go on that, it's breaking out past that 0.5 level I mentioned. And again, on Fridays, that tends to, when it starts to go, it tends to really go. Expect real expansion on, of vol, meaning the back end of the curve cannot, particularly this election vol, cannot come down. It really, it's reached a low. And I would expect to kind of a market up, vol up type scenario in that part of the curve. Again, not the 2-week vol, not the 3-week vol, but when we start looking back there, I would expect vol just too low if we're going to rally here, particularly in that midterm area. Okay, so just watch that closely. And I'm really talking about fixed strike vol here, right? The vols we're sliding to are just too low.
It does seem that way. I mean, I guess there's really only one question left, Jim, is we just had Jackson Hole today. Is Jackson Hole the end of the summer of George?
I mean, again, it's sometime between August OPEX and SEP OPEX. I was more likely to lean to August OPEX being kind of the beginning of the end of that. But if it's not here, it's Labor Day and soon after. Now the key idea here that people need to focus on is if you don't get a move here soon, which it looks like by all accounts it's not happening in terms of a down move at this point. Well, we shall see. If we don't get it soon, meaning I would say in the next week, then those flows of buybacks in September, like the buybacks meaning the Vana Charm flows that come underneath the index start kicking in. And so very hard for the market to roll over in that, if it hasn't started already, in that 2-week period leading up to SEP OPEX, which is really post Labor Day. So you kind of need a little bit of a downtrend to be appearing here to activate some of that put open interest in the SEP OPEX to get a move going in that SEP OPEX. And if you can't, then it's going to be hard in that 2-week period post Labor Day into SEP OPEX. So the time it can then happen is post SEP OPEX, which is a time we see very often. Again, we've talked about in midterms how we've seen 10% plus corrections in the last 3 midterms. 2 of them started right around SEP OPEX. 1 started right around August OPEX. Point is, if we don't start to get, we had a little bit of a peak there in early August. If we can't continue the downtrend this week, expect support for those 2 weeks heading into SEP OPEX.
So you're saying there's a chance?
I'm saying there's a very slim chance right now, but if not, it's SEP OPEX. In other words, you got a week. It's this week, do or die for kind of unlocking and beginning the end of the, coming out of the summer, George. Otherwise, expect 2 more weeks of summertime with it really starting in earnest in SEP, at SEP OPEX.
Craziness. But yeah, I think the name of the story of the market here today is super low vol for today and Monday, and we'll see if it picks up throughout the rest of the month here. But holiday coming up, got to expect compressed vol, and maybe the market wakes up after that.
Maybe
we'll be here for it. That's for sure. But yeah, to your point, NASDAQ catching a bit ever since it broke through that range there. If you go to the hourly chart,
there
you can put a little pin on it here, right there, 29,705. It had teetered on that for a handful of days even, but we're finally breaking out. So we'll see where we go from here.
Enjoy your weekend. Enjoy your last minutes of the summer, George, and we'll be back. Again, at the end of the day, this admin wants to keep these things, the plate spinning until the midterm. So, you are fighting an uphill battle. My view was that we would likely get a pullback so they can squeeze it higher. But, if they can keep an uptrend going here, then that's even better. Generally speaking, anything really meaningful or big will not be, we won't see till after midterms.
100%.
Exciting.
Well,
yeah.
Jem, appreciate your time, and we'll see you on Monday.
Always a pleasure, fellas. Have a great weekend.
See ya.
Likewise.
Take care.
E-mini's ripping up higher here, up 35 points. Nasdaq's up 95. We got the Dow and the Russell chopping around as well. Bitcoin down 300 points. I think for this portfolio here, we've got WDC closed that for a $200 winner. That was a butterfly. Apple closed that for a $200 winner. PayPal got into a new trade here. What have you done this morning?
Yeah, I haven't posted my trades yet, but let's see. The only thing I've really done was close out that CrowdStrike downside calendar. It was the 200 strike. That was one that was left over yesterday. The stock moved up so fast I wasn't able to get to it. So I closed that out for like a $35 win, and then added an NDX put butterfly 20 days out for the September 17 expiration. That is the day after we get the Fed meeting in September. And the other thing that our man Frank Walsh in the chat has pointed out is that grains are ripping. Corn not as much, but wheat and soybeans are up sizably.
Yeah, I saw someone in the YouTube chat thinking that wheat would go limit up today, 3% to the upside here. And I mean, this is a crazy chart. I have not been paying attention to this at all. Wheat, corn.
Yeah, yesterday was the first time I noticed.
Yeah, I got to dive deeper into this, but this is a crazy chart too. Just up and away. We'll have to see what's going on there, but yeah, interesting day in the markets. I am actually shocked to see that the E-minis have picked up a bit here, up 35 points. Nasdaq's up 100, but it's been a fun morning, Jermal, as always. And we've got plenty more content coming your way, even though the market is a little sleepy. We are not. over here on the network. So if you want to reach out to us, you can contact us on Twitter. I'm at Trader Mikey B. Jermal is at Jermal Chandler. We're going to take a quick 90-second break here. We got plenty of content coming back on the other side of it. You're watching Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And BrokerChooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We're back. You're watching Confirm and Send. This is Tasty Live. You send us your questions, TP, Tom, Preston, and I, Chris Vecchio. Try to answer them to the best of our abilities. Maybe we find a trade in there. TP, before we get into it, Kevin Warsh, Fed Chair, just stopped speaking, and the markets certainly have a reaction to them. There's one thing in particular that he said at the end of the speech, which I think is what matters most. Producers, play the clip.
We take our responsibility seriously, with humility, and with resolve. We know so much depends on the choices we make. Sound monetary policy helps households and businesses to prosper. When carried out effectively, it broadens and deepens the momentum of our economy and helps to secure America's leadership in the world. And I know that our country needs us to think carefully and act wisely.
TP, the market is listening to what War said to end his speech, and it's decided to flatten the yield curve here. 210 spread is down almost 6 basis points. It's the biggest single-day move that we've seen in either direction since Warsh's Fed meeting in July when the thing blew out. 2-year yields are up, which is noteworthy here, and the curve flatter out all the way to the 30s. Sigh of relief that he was a little bit more hawkish than I think people, including myself, were anticipated here. So stocks, they like it. We're up 0.5% here in S&P 500.
That has absolutely nothing to do with Kevin Warsh. The big question is, Chris, and I'm not saying that was AI, but could that appearance simply be replicated cheaper using AI?
It could have been an email.
You stitch together some middle-aged white guy, you copy his voice from 1,000 other things he said, and you just said, yes, stable monetary policy is really important. Blah, 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 blah. If I had to go to that meeting, and I'm not going to kill myself. No, I love myself too much, okay? I think the world appreciates my presence. But if I had to sit through that, I would consider shooting myself, okay? That is torture. I'm sorry, Chris, that's torture.
I listened to all that this morning, TP.
Oh my God, Chris, you have young children. Don't do that to yourself, okay? My kids are old. I can take the risk of listening to Kevin Warsh, and who knows what would happen to my brain. You can't take that risk, Chris. I'm just telling you, for your own safety. Whatever.
Thank you.
Oh, Big Nothing Burger. Thank you. Yeah, where's the beef? Serious. And I'm sorry. So here's the deal. As Chris was just saying, SPOOs are up. I think personally, and Chris, what the hell do I know? Nothing. But when I was looking at the heat maps today, it just seemed like a very broad-based rally. Most of that stuff was green. Most of it was green. You had this bias towards, I think you had a bias towards the upsides, particularly in the NASDAQ too. And the NASDAQ green NDX. The NASDAQ is green up 100 points. So is it because of Kevin Warsh? Okay, if that's your excuse, fine. If that's your excuse, fine. I really don't care. Like I said, you could replace him with AI, and I wouldn't notice. I wouldn't notice.
TP, the market's giving us a nice little bounce here, which 2 of the trades of the day yesterday that I put on, which I would note that for those that are following it, the follow page right now is having a little bit of trouble. When we get that resolved, everything will be updated properly here. TP, for whatever reason, I thought the 250 number in Amazon looked like a pretty important level because it's where the market failed to climb through last November, and we've seen a number of touches here in recent months. So I put on a double bull yesterday, out at 22 days to expiration. Now it's 21, short the 240, 245, long the 270, 275 call spread here. That's a little bit of a neat bounce. And then here in Apple, the other trade of the day idea, similar setup because we saw this move off of the recent swing level here right at the 50, and it looked like this was a market kind of turning. So likewise, another double bull in there that's working out well today. 295, 300, 330, 335. Those should be up on the follow page when the follow page is restored.
Yeah, we're keeping our fingers crossed for that. That's all part of the technology. So much, and I've lived through most of this. Chris maybe came in a little bit after it started, but the shift in technology into the trading world, in the trading industry, really I've seen that transformation, and we're still dealing with it. You know, most of the time it works 99% of the time. Sometimes it doesn't. Here's the real issue for me, Chris. I'm having good day trading. Okay, fine. And it had nothing to do with me. It just had to do with strategy and position sizing. But a lot of the stocks, or a lot of positions, particularly the verticals that I might have had bullish trades on, that were looking like they were just going to die. Short put spreads that were going to close out at full value, long call spreads that were worthless. Those now I have to manage, okay? Because now we're getting either in the money, so they've turned into small losers into moderate winners. Now I have to manage them because they're expiring. So I have. What do I have? I have Echo. That was a viewer suggestion. I had the 85-87 long call spread with 0 DTEs. I put it on a few days ago. A viewer said, "Hey, TP, what do you think about Echo?" Sure. What are you, bullish or bearish? Bullish. Okay, fine. Call spread. And it was dead. Didn't work out for a while. ECHO, but now it's rallied back up for me. Now it's in between the strikes. I have to deal with that. Google, again, a rally in Google. I had a long call spread in Google that looked dead. Now it's up above my 345 strike. What else? Marvel, I took off.
As did I.
Yeah, the Marvel I put on an Iron Condor with 0 DTEs. I think, Chris, you went out to, did you do a longer dated one?
No, so I was in earlier this week for the one that expired today, the 210, 215, 265, 270, in for 173, out this morning for 83 cents.
Yeah. So you were a little bit, your strikes were a little bit lower than mine. I had the 215, 217 half. 280, 282 half. I sold that for 79 cents. I took that off now for 15 cents. I bought the put spread back for 15 cents. I'm going to let the call spread go. That's at a penny. I'm not concerned about that.
Yeah. And I could have held this for a little bit more, by the way, and I probably should have held it for a little bit longer, but now it's at 14 cents here credit. Yeah, I could have rolled that into the dirt a little bit better.
Shoulda, woulda, coulda, Chris. You can't.
But we go on.
We go on. The last one I want to talk about is, well, a couple of things I want to talk about. TTWO.
Take two. Yeah, we traded this recently.
That was a dog. Again, you were very helpfully suggested, hey, TP, how about take two? Okay, fine. Short a put spread. That had reached its max loss or close to it. And what do you know today? Because it was strategy based, I can hang on to a max loss. It's not catastrophic. Now it's slightly profitable. So I'm sure at the 235, 237 and a half put spread in there.
Well, they finally released GTA 6 footage.
Is that what it is?
Yeah, finally.
Okay.
Yesterday. It's been a big thing on Twitter.
So Chris, you could say, oh, TP, you're just too old for it. And I am. I get queasy playing those games. There's something, I feel car sick playing those games. So I don't play those games. I think they're awesome. I think they're very cool. I just can't personally do it. So
TP, while we're here with Take Two, this is something that does fit the criteria. And this has been something I've traded in and out of just only a handful of times recently. But when it's dropped below its 1 month, stay above its 50, short the put spread, bottom left to top right. There's still an uptrend here. It's bouncing at a level that has been an important level before on the chart. We've seen several touches of this actually in the past few months. I'm going out a little bit longer here. 220, 210, short put spread, 49 days to expiration. I think this is a chart that can finally enjoy that bounce higher, at least a reason to grind above those levels that it's been holding above since mid-June.
Yeah, and I like the metrics on that trade, Chris. High P50 number, positive theta, defined risk, low capital. I like it.
We move on.
And just the only other couple of things, the SPX Iron Condor that I sold, it was the 7640, 7665, 7785, 7810. I sold that for $2.80. I bought it back for 85 cents. I was fiddling around with some other stuff and didn't put in my 50% bid, which is I should have done. It was a mistake, but it was lucky. When I checked the price, it was 85 cents, so I bought it back. So I covered that, and that took all of 43 minutes to capture that profit. So
there we go.
Ka-shing for TP. Okay.
Ka-ching. Before we head over into confirm and send, I suppose MES, still holding long. How am I managing the position? I was asked recently. We're now the 50-day moving average has been the thing that I really kept my eye on here. And when Leopold crapped out in July, and then we had I didn't consider this a big break. That was a nonsense move. But either way, TP, now the 50-day is above my entry here. So I'm kind of treating this as a house money trade right now. Obviously, if it turns the corner and something happens that I don't like, I'm going to take it off. But if I can now trail my stop effectively underneath where I got in, or right above where I got in now, 76.14.
All right, Chris, you're a smart guy. You can interpret these things, that these Fed people talk about. The bonds are now unchanged. ZB is now unched. It was down a little bit earlier, down like 3 ticks. Then, as we started talking, I checked, they were up like 5 ticks. Now they're unchanged, down a tick. What does Kevin Warsh's statement actually, is it doing anything to the bond market?
Is it doing anything with the bond market? Flattening the curve, 2s, 10s are in, but I'm looking at ZN here right now, which I'm sitting short a call spread. If this was not bonds and this was just a stock chart, I think we would be the technicians would be in agreement. This looks like a bear flag.
Okay.
So why would I want to trade this long? It's below its 1 week, it's below its 1 month, it's below its 50-day. All three have a negative rate of change, a negative slope. Why would I want to catch a falling knife right now? So the market's speaking. Bonds at the long end of the curve, not great, but certainly not as bad as I hoped it would be.
Well, yeah, and just to look at this, so ZN is down 8.5 ticks, bonds are down 1 tick. That is a huge, I guess, outperformance to the downside of ZN.
Check out the 2s. Those are down 5.
Yeah, those are huge moves. The shorter term you go, as Chris was saying, they're flattening out the long end of the curve. So 30 years you get a little support, but if the front month stuff is those prices are dropping. The yield curve, the short yields are going up. That's what's happening. So the flattening is 30 years aren't moving very much. It's the short end of the curve that's going higher.
TP, this is the 210 spread I just popped on here a few days ago. Go back to Monday the 17th. It was 54 basis points. It's down to 38 right now. That's a loss of 6.3 basis points today. So just kind of a visualization of how that curve is flattening out here.
Yeah,
so
perfect.
But hey, you know what? The market happy with Warsh. Happy with him saying we still got an eye on that inflation prize. Don't worry about it, folks. Did he promise a hike? No.
See, you can be happy with AI too. Okay, you can just have. I mean, I wouldn't pick somebody that looked like Kevin Warsh. I'd have somebody looked a little bit, more fun, whatever. But the point is, you can have your AI, say whatever you want it to be. Bonds are up, SPOOs are up.
When Brad Pitt appears with me next Monday on Confirm and Send.
Brad Pitt. No, you should be doing, again, I don't want to cause any dissent between you and your missus, but I mean, you'd at least have Angelina Jolie or somebody like that. That would get attention. Okay.
Sure.
Or you just have the lovely Mrs. Vecchio. You could have that too. That would work.
That would also work. She's a little camera shy, so I don't think that's going to happen here. Confirm and send. You send in your questions. We confirm that we receive them and actually figure out what to do with them. If it's provide answer, advice, education, right? Give you some tips and tools. Or maybe TP and I find a trade idea for ourselves within it. Research at tastylive.com, research at tastylive.com, or you can just put them in the YouTube chat. Our producers sent us 4 questions this morning. TP, do you want to get into them?
Please.
First question, what's the best defined risk option strategy for someone who wants upside exposure without risking much capital, and what's the catch?
The short answer is a short put vertical. Long an out of the money put and short a closer to the money put. You collect a credit. It has defined risk and defined capital. It is a bullish strategy. That is about as simple and as fundamental as you can get. A short put, naked short put, is also bullish and all that, but it has a lot higher capital. So in buying stock, again, a lot more capital use. So I would just leave it at that. What's the catch? Is that your profits are limited. So if you are very bullish on a stock and think that, NVIDIA or Apple or Google or whatever is, going to be going up 10% next month or 10% every month or something like that, a short put spread isn't going to get you there. In other words, just buying the stock is going to get you better potential returns or bigger returns. In other words, your P&L is going to be a lot bigger. But obviously, you're going to make money on a short out of the money put spread, even if the stock price doesn't move. That's the advantage. The catch is you don't make as much money.
When I think of upside exposure, I think of like a call spread here, but yeah, TP, that's right. Your short put spread is going to be the way to get those long deltas on your book in a risk-defined way. And as always, the credit, ideally you're going for a credit collected, but the credit collected that you get in your short put spread, your max risk is going to be the width of the strikes minus the credit received. Right. So if it's a $5 wide strike and I collect $1.50, my max risk is $3.50. Mm-hmm. That's right. TP. If I want to be long stocks, I usually just buy the call spread at the money, a little bit of out of the money. It's cheaper than buying the stock itself. I want the convexity. When I'm long things, I want the convexity.
And that's just it. So it's volatility is high, sell a put spread. Volatility is lower, buy a call spread. So you can get into the weeds with all this stuff, and there are a bunch of different strategies. But I think this question is asking, what is the simplest, most straightforward trade to do if I want upside exposure to find risk? Sell a put spread, buy a call spread.
Second question. If the goal is consistent or generating consistent income, when does selling covered calls actually hurt more than it helps? Because you keep capping your best winners. TP, I'm not really a covered call kind of guy, but it really hurts the income strategy when you start selling away the whole reason that you own the stock in the first place. I mean, the whole point of owning the stock is capital appreciation, income generation, perhaps along the way. So if you have something that's on a rip and you start trying to generate income from it, TP, you can end up getting called away from the position that you've been building up and trying to.
Yeah, I mean, here's the thing. I like to see it as selling a covered call. Yes, it generates income. That's what financial advisors and Wall Street has been telling people for the past not 100 years, because options didn't exist 100 years ago, but since options existed. And I disagree with that. It is a way to reduce your cost basis of the long stock. So when you think about it like that, does it hurt more than it helps because you keep capping your best winners? It goes along with that. If I sell a call above where I bought the stock for, if I bought the stock at 100 and I sell the 105 call against it, for example, if the stock rallies up to 105 and I get called away and my position disappears, I just made a little over $500 on that trade. That is a first world problem. Okay, that's a first class problem. You're not losing money in the trade. You're capping your winner. You have a winner. Okay, it's and there's nothing to say that, looking forward, that the stock is going to, it's going to be one of my best trades. You don't know that, or at least I don't know that. Do I know Costco's going higher? I sold a put spread in Meta today. Do I know that Meta is going to continue to go higher? I have no bloody idea. If I knew 100%, if I had next year's newspaper, sure, I'd put every nickel I had into either buying Meta or shorting Meta, depending on what I knew the price was. But I don't have next year's newspaper. Okay?
No, of course not. I mean,
here's my point. It's capping your best winners. Don't look at it like that. Don't look at it like that. And if it really bothers you, if you have to evaluate, the stock is now at 105, I think it's going higher, buy your short call back, roll it out to a higher strike. That's how you manage it. But you're sitting on a winning trade. Don't overlook that.
Don't overlook that. The trade-off is that you're collecting premium while giving someone else the optionality to the upside.
Right.
And I think that at the end of the day, the question, part of the reason why I don't do this is because I go, okay, well, where's a strike where I feel like I can collect enough credit? But if the stock moved there, would I still want to be owning it, or would I be okay selling it to someone else effectively? And the answer is no, I wouldn't be okay selling out the stock at that price level because I think it still has upside to it. Then I wouldn't be doing a covered call there.
Yeah, and so that's your approach to it. I have different approach. Viewers have completely different approaches to it, and that's okay. That's what makes it a trade. But when you base your covered calls on probabilities, not necessarily on levels of price levels, base it on probability, sell another money call that is a 68% probability of expiring worthless, that puts the odds in your favor. That's it. That's it.
Yeah, I mean, I can think very specifically for me, Eli Lilly, when it started jumping, I had someone was like, oh, you should sell covered calls against it. It's like, but I think it's still going to go up from here.
Yeah.
So why would I want to generate a tiny bit of income when this thing could be going up way more than whatever income I could possibly collect from selling those calls? All right. Number 3. Why can you be completely right on the direction of a stock and still lose money on the option? What usually causes that? Oh, this is a great question, because options are not pure directional trades, TP. You can bet on direction and lose because the move's too small, is too slow, it's already priced in. It's why we talk about the grim reaper of earnings trades, vol crush, right, TP? You can be right directionally and you could go craps out if you didn't choose the right strike. for the right duration cycle.
Right. This is a strategy question. So you can be complete. So and again, here's where I'll stick it to Chris. And I'm not Chris. You're a smart guy. You understand options as well as anybody else. The point is, you buy an out of the money call spread, and the stock rallies, or you buy an out of the money put spread and the stock drops. You say, wait a second, I'm right. I was bullish on the stock and it's up. I'm right, and I was bearish on the stock and it's down. But if it doesn't move enough, as Chris said, if it doesn't move enough, I can still lose money on those trades. That's why option prices, there's no input for bull or bear. Okay. The market doesn't, the option market makers don't think, gee, I'm bullish on Meta, I'm bearish on Google, I'm bullish on bonds. That doesn't happen. That doesn't happen. It's all about magnitude. Do I think Google is going to have a bigger or smaller percent change in the next 30 days? Do I think Meta is going to have a bigger or smaller percent change in the next 60 days? That's what drives option prices, not a directional opinion. So here's the point. If you are losing money, and if you're right on the direction, but you're losing money on the trade, you're using the wrong strategy. It's as simple as that. It's as simple as that.
When you buy a stock, the one thing you're concerned about is direction. When you buy an option, you're concerned about direction, time, path, volatility, duration. So it's not just one thing. So you could be right on direction. And I've had this happen before. What was a good example of this? Going into this year, I had a reverse iron fly on in TLT. And I was of the mindset that like bond vol was too low. The thing was sitting like a pressure cooker. It probably wouldn't break over the holidays, but it would ultimately break in a big way. And did yields move significantly this year? Yeah. Why was I wrong? Because it expired in January. And if I had like a February expiry or say a March expiry, that thing would have printed. So directionally, I was correct. My assumption was right that bonds were too low and volatility was too low and they were due to explode. But just being right isn't enough, especially if you're expressing through options, TP.
Exactly.
We have one more question here to round out this week's questions. The S&P keeps making highs, but fewer stocks are participating. At what point does weak breath become a real warning for an options trader instead of just noise? That was yesterday. I really want to push back against that. There were points this week where the NYSE advanced decline line pushed into new all-time highs. That's not a bad thing. And I'm pretty sure on the weekly basis, it's going to be pretty close to that too. TP, I'll let you answer this and I'll give my spiel.
So I look at breadth. I look at a heat map. I don't analyze it very much. So I look at the equal weighted indexes too. But the bottom line is for me, it's a hunch. That's it. So at what point does weak breadth become a real warning for an options trader? It doesn't. It really doesn't. An option trader only concerns about what is the price of the index right now. What is the flow of buying and selling? Our customer is paper buying premium on the wings, out of the money calls, out of the money puts. Are they selling premium on the out of the money calls, out of the money puts? Then that's informing me about what the world sees about magnitude, and I will adjust my option prices accordingly. In other words, if they're coming in and selling out of the money stuff, take my bids, make them offers. Okay, just lower everything across the board. I think this goes to a market internals question. That's
exactly I want to go with this next.
And I'm not gonna. You can answer this 100 times better than I can, Chris. But this is a market internals. How you interpret that is up to you as a trader, and informs more direction than options. Don't bring options into it. Just bring in, am I bullish or bearish? That's it. And when there's not a lot of participation in a rally, if it's mostly the top 10 stocks, top 15 market cap stocks in the S&Ps, it starts looking a little light. Maybe you want to position it bearish. I don't know.
So breadth to me is a gauge of how confident I should feel in my positioning. If I see an S&P 500 that's chopping sideways with weak breadth, and we go to something like the SIBO's Core 1M index, and it's at a low level, which is the market that we had back in, February, for example, then it just tells me that, yes, if there's action, it's happening beneath the surface. It may not be happening at the index level. So if the breadth is weak and core 1M is low, I don't want to have too much risk on at the index level because it tells me that this thing could crack. It doesn't mean I'm going to be bearish. It just means if I'm going to be trading this in a bullish manner, maybe I should reduce the width of my strike. Maybe I should give itself a little bit more breathing room. But that is just an assumption. But I'm not doing that because of the options, TP. This is just me reading the market internals and saying, okay, this reduces my desire to be as bullish as I was or more bullish. And then how I articulate that view, if it's simply owning more SPY or buying an ES call spread, that changes. But the options are a tool I'm taking out of the toolkit to express my view. I'm not using breadth to inform the options trade side of it itself, if that makes any sense.
Perfect.
TP, research at tastylive.com is where people can send these questions. Yeah, breadth is a big thing here this week. We had Julius de Kempener here, who from stockcharts.com, who pioneered the relative rotation graphs yesterday.
Yeah.
Go check that out if you're interested on relativity in the market and watch.
Great interview. That was a great conversation.
77, 78 TP. Market likes Warsh. 2-year yields are shooting higher, but hikes back on the table for September. We have Gus and Errol coming up next. They're here for a little bit of risk and reward. And then we're getting through our trades of the day soon thereafter, TP. We got more Tasty Live coming at you on this Friday.
All right.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Earnings is done, and it feels like we're finally through the thick of the tech earnings. Errol is joining me today live from the SIBO, putting me to shame. I'm sitting here in my fun Friday shirt, and look at Errol looking all spiffy with the jacket on. Errol, how you feeling? What's going on?
No, feeling pretty good, brother. I know we had seen a little bit of volatility this morning. It's nice that Jackson Hole is out of the way. I kind of hate whenever we have a binary event that's at the end of the week because sometimes markets will be a little bit choppy, range bound. Not to mention volatility trading at 14.16 right now, which we'll get to here in a quick moment. But, I mean, happy Friday, brother. Good day to have a good day. How are we doing today?
Doing good. Bonds made a move up. Any day TLT is up. You know how I'm feeling
It is
on this 600 shares position. And hilariously, we're only up 9 cents now. Now make that 8 cents, but that does constitute 45 United States dollars in my account because of how much leverage I have going on here. So, I'm pleased with that. And it's leverage isn't even actually the word, just exposure. Leverage would mean that I had the options I had before I got assigned the 600 shares. But here we are, TLT XLT digging up out of the bottom a little bit. And yeah, as you said, VIX just absolutely crushed today. Certainly starting to look more and more attractive to me to put some of those calls in my back pocket the way that I so like to do. Biggest disappointment of the day for me today by far is this Abercrombie and Fitch position, which I actually am just going to go ahead and roll. I decided this morning that I was just going to let this eat until I was on air. And let me tell you, we got close this morning. It looked like the miracle was going to come through. Let me pull up some more granular candles here and I can give you guys a look. This thing, holy price action today, opened like 146, immediately up to 152, and I think that it's all over. And then we have just chopped around. We came all the way back down and actually touched 145.20 here. What's the depth of this? 145.12, more pointedly.
Yep.
And it looks like we were going to get under that 145 number, and then it just ripped right back off that level. So I'm going to roll this out. I'm not usually one to roll, but I just really feel like this has to give back some life sometime. So I think I'm just going to roll this out a week. I'm tempted to roll it out 2 weeks for the slightly cheaper cost on that, but also I am just playing for the little dip here, and I think I'm just 1 week early on my time horizon there. So I'm going to post up another $1.48 of credit here, and we'll see if we can't get a roll going.
Yeah, let's see if we can get a nice fill there. It's always nice to be able to roll whenever you have that same directional bias on. Give yourself a little bit more time. Maybe we can see a little bit more follow through there.
Yeah. So there we go. Got the instant fill on that. Rolled that out. So we'll give Abercrombie another week. But I'm just so shocked if we don't see sub 145 in the next week. And like I said, let me zoom back out the daily candles here. Like I said, this move is not unsubstantiated. The numbers really were that good, and I understand that. But the numbers were, I think, maybe $140 good. I'm just really surprised to see us ripping towards 150, and I'm even more surprised there's continued buying pressure happening here. Right. So yeah, it's a tough spot to be in, a difficult one to manage for sure. We're going to give this one more week, and perhaps that will be a regrettable decision, or perhaps I will be very pleased with that. Or perhaps it goes back down to below 145 before the end of the day today, and I feel like a numbskull. We'll see what happens. But beyond that, not a whole lot of management for me to do today. I do have this Broadcom is the closest to expiration. We are $13 clear of where we need to be. In fact, I'm just going to go ahead and take this one off as well. No reason to sit here for these last $10. See if we can't get a fill.
Take a quick fill there.
IV
ring's still pretty high too after getting that directional move. What's the daily chart looking like over there on Broadcom?
Yeah, it took a big move up yesterday. Today, close to unched. I mean, opened a little bit higher, up 0.5% on the day today. But yesterday, especially in the close, was the real rally. This thing was hanging just over 360 all day yesterday, and then all of a sudden, right into the close, we got the big move to the upside. As you see here, so I'm pleased. I guess that's on the open today. No, this is the close yesterday. I'm not crazy. So yeah, that's the only thing that's really on my radar. Being close to expiration. It's a midweek expiry next week, but not too concerned with that one. We're looking well clear of our levels, and we'll see if we can get a fill. If not, no big deal. Then of course, keep my eyes on this naked short put in Dix, which continues to be scary. But Dix just continues on the road to recovery here, up another 2% today, about $2. Go back out here.
Yeah, I ended up taking off the Dix position today since we got that other leg up. Maybe we get a little bit more of a continuation, but I had jumped out of that one a little bit early.
Yeah, I'm tempted to jump out of this a little bit early, and I very well may before the end of the day today, just because this is risk undefined, and I don't really see any reason to hold it through the weekend. Doing as well as we are right now, up 153, only 85 to go. Feels like a fine spot to go ahead and pull this off. But I will let the rest of this day continue to eat, because the momentum does seem to be there, moving up actively as I speak right now. So yeah, I'm a happy camper. I'm going to put on a new position as well. Let me tell you guys a story, okay? I've built a thesis here off of my real world experiences, as good investors do, okay? Last night, my girlfriend and I decide we're going to order some Pizza Hut, okay? I've been seeing Pizza Hut advertising like crazy. They're pushing the heck out of this deal where you can get 2 pizzas at $7.99 each as long as you buy 2 of them. And so I go to the pizza, and it's worked, clearly. I've been seeing these ads everywhere. So I go to the Pizza Hut website. We go to order these, and it says there's no Pizza Huts that can deliver to you. So we're like, okay, we'll just get Domino's instead. We go to Domino's website. Domino's is beating this deal quietly. I haven't even seen a commercial for it. They're offering the same exact deal, but it's $6.99. And they have a whole robust line of products. And then, as I was ordering, I came to realize that it's pretty much everything on their menu that's included in this deal. We got 2 specialty pizzas, and they got these new chicken bite things, which weren't very good, I will say, but they are expanding the menu.
They were all right.
And then they got us with a great upsell on some little Parmesan garlic bites right at the end. 16 Parmesan garlic bites for $2.99. Put them in my cart. So I have the receipt right here, actually. I'm holding this actively in real life. Wound up discounted to $25 here. I don't know how Domino's does it. So then I was like, I gotta look at Domino's share price right now. And this is where this really began to come together. Domino's just whacked over the past couple of years, down like 35% last 2 years, 25% since the start of 2025, way down here in the dumps. And so I think I'm going to get some real long exposure to Domino's because Pizza Hut is acting like this is their greatest deal ever. This is the greatest thing that they can possibly conceive. And Domino's just says, yeah, but we got scale, okay? And they managed to undercut that. So if Domino's is able to undercut the best deals that their competitors can possibly put on, who's to beat them? Why would Domino's not just begin to cannibalize the entire delivery pizza market? Having put some of my own dollars into Domino's Pizza last night by way of buying some pizzas, I feel also obligated to get along a little bit of stock here. So I think I'm just going to go leaps. I'm looking maybe January 2028, 511 days. Very, very pricey out here. But I mean, what if we go put side 550 for 450. I mean, I would be willing to go pretty far out of the money with these. Like, let's say Domino's is a $400 stock by the start of next year. What's that looking like for me? Yeah, this is very wide. I mean, what if I go the $20 wide? Does that make it any tighter?
I mean, I see Frankie's making a really good point there. He's like, why in the world would you go to Pizza Hut, Domino's, these name brand stores when you live in Chicago? But I do gotta say, sometimes I do enjoy just a nice pizza from a Pizza Hut or a Domino's. Dare I say, the other day I got a Papa John's pizza that was stuffed crust, and it was really good. I'm not gonna lie, I think just that, generic kind of pizza is sometimes what you're craving specifically, but
Yes.
Shout out to the Chicago pizza. Obviously that's an echelon higher than what we're gonna get at Pizza Hut, but gotta give them a little bit of love, right?
Yes, absolutely. I do understand that I live in arguably the greatest pizza city in America. That is not lost on me. There is 2 reasons I decided to go for some Domino's. Errol just hit one on the head. Sometimes you're just craving a little bit of garbage, a little bit of nice.
Honestly, a little bit of GMO.
Some GMOs, some high fructose corn syrup injected into my American veins. Okay, and the second reason is the dollars and cents. If you want to get a delivery pizza from, I don't know, pick your place, Giordano's, Lou Malnati's, Novel Pizza. There's wonderful, wonderful pizza places around here, but it's going to run you $20, $25 a pie. I don't want to do that. Domino's, they got this $6.99 thing going on. I got two pizzas, some Parmesan garlic bites, and this crispy bacon tomato chicken thing that we got. And it all comes in at like roughly the price of one large pizza at any of these fine establishments. So if you're trying to save a little bit of money too, it's just Domino's is the way. I'm gonna fire on this 390-400, I think, yearly. I mean 511 days, 1.5 yearly, if you will. This is very, very wide.
Right there.
Yeah. So buying the 390, buying the 390, selling the 400 in January 2028. We'll see if that was really quick. Okay, all right. Well, we get an instant fill. I was gonna say this thing is like a $1,200 wide spread, but bang, we're filled. So there we go. Long thesis in Domino's Pizza. Got to have some good earnings reports. Got to have something going on because they're dominating the game. So this is my real world experience translated into a trade here.
I love it. You're hedging your dinner from last night. You gotta love it.
Exactly. Yeah. It's like what's that company, Acorns, that like will round up your transactions and put it into the stock of whatever you just bought. I'm just doing synthetic acorns here.
It adds up. What else we got on the top of your mind in the portfolio today, Gus?
I mean, monitoring this short put in Walmart at the 105 strike. We're down slightly on that right now. Plenty of room left and plenty of time left. November 20th expiration. I did want to make sure to give this one plenty of time to make the move, and I'm happy that I did so at this time. But just not able to get off this big gap down that they took. In fact, testing the lows of that entire range right now down here at the bottom. I don't know. It feels a little bit dicey, but I'm sticking to my conviction that I'm not cutting this unless I see a sub $100 share price for Walmart. And I think that the psychological support at $100, as we could see back in last November, was the last time we tested that level. Was never able to actually hold under $100. I believe that psychological support should save us okay. And I mean, 82 days is a long time, especially in a market as bullish as this one.
No, it definitely is. I mean, I think we have a little bit of time. I think we're still kind of coming off of the back end of that gap down off of earnings. So I think if we'll give the market a little bit more room to really figure out what it wants to do, it seems to be trading off of that post-earnings sentiment still. So I agree. Give it a little bit more time, see what we get there.
Yeah, that we will. But yeah, I mean that's sort of the highlights for me. Yeah, new position in Domino's, closed Broadcom. Did I get Broadcom closed? No. Working on closing Broadcom. Rolled Abercrombie and Fitch. Domino's position enters the account. That's kind of the moves for me today. What's catching your eye? Do you have exposure to oil?
Say that again.
Do you have any exposure to oil still?
No exposure to oil. I had actually got out of that long delta. I think I exited that at like 86.65 or 85.65, somewhere around there. I know now that we're getting closer to that all-time high, it feels like a lot of traders and investors are kind of playing for that like breakout into the all-time highs. And I don't know if that was something that I was trying to tackle right now. So I just took advantage of that little trend that we had gotten there. I'm excited for oil, though. I don't know if I'm going to be touching it until we get a little bit more, I guess, clarity in the oil markets, I guess you could say. But as we come up to that all-time high, it's been a tough market to even re-enter. So I've been on the sidelines there. Nothing in US. So I am short gold right now, which is working out pretty well right now. We're short a little bit of gold. We bought some puts there. We're also short some silver just via a skewed strangle to the downside. So not a very crazy position, but really just looking for a little bit of a pullback. So I think as we were speaking, gold is getting a little bit more aggressive to the downside. I'm wondering if Warsh's comments is having a little bit of effect in this market here, but we'll see. We'll see what we get out of gold, but it's been pretty volatile. Have you been keeping an eye on the metals at all?
A little bit. I mean, honestly, pretty much just to the extent that we discuss them on the show. But that sort of winds up being my daily check-in on the metals. You do make a good point about oil here. Very, very wiki market, and definitely taking a little bit of a slide here as we're speaking. Although this next 5-minute candle is open in green at the very least. But yeah, I don't know. I actually, to be candid, I mean the show is very tight after it, but I have yet to read Warsh's comments. I'm not sure. I mean, if gold is sliding, that typically means he said something pro-currency or pro-inflation isn't the vernacular. Inflation is coming down or something to that end, or they have plans to bring inflation down. So, yeah, and going back to oil for a sec, I think you make a good point that a lot of people are consolidating and waiting for the breakout, and waiting for this kind of big breakout to the upside. But as you say that, I'm forced to think to myself, what could cause a breakout in oil? I think oil could go higher, but the Strait of Hormuz is closed. We have rejected, or Trump has rejected whatever I saw Iran just sign a deal with UAE, somebody, to get the strait reopened, at least for some people, and Trump has said that he's rejecting that deal. So tensions are as elevated as they can be. Oil is not flowing through the strait. As it pertains to this conflict, I don't know what large thing additionally could happen that sends oil flying. Now, if the strait continues to remain closed, obviously that continues to tighten supply, and we would see oil price, slowly tick up and up and up. I think that's a very real possibility, but I don't know, and obviously I could be very wrong. Oh boy, have I been wrong about oil this entire time. But I don't see what could really cause a giant green candle on the daily chart for oil here.
Yeah, I'm curious what it's going to be. Maybe it's going to be some tweet from Trump. Who knows? Who knows what it's going to be at this point? But I'm sure something like that could push it over the edge, because with how close it's getting, I don't think it's going to take too much to put a little bit of fear or greed into traders within the oil markets right now. But looking forward to it. I mean, outside of oil, though, outside of the metals, we've had a little bit of short delta on in Apple, but Apple's actually logging a really good day today. They're up about 2.5%, up about 7.5 points on the day. So curious to see if Apple's going to sustain that momentum that it's had to the upside. We have 21 days to expiration on a lot of the positions today. So today's really going to be a management day. We've taken some things off here and there, but with something like Apple, it doesn't look very bearish right now. So I don't think that's going to be one that I extend the time on. But Apple's another one logging a good day here. We have a lot of volatile products on our hands today, Gus.
Yeah, definitely does not seem very bearish. I mean, Apple is one of the more bullish companies in the entire market this whole time. I mean, crazy run out of them. We saw them touch over $5 trillion market cap very briefly before this big sell-off back down to the 300-ish level. What's you mentioned your time horizon is 21 days. What are your strikes on that? Do you still have room?
No, we're sitting at we're already sitting at the money. So that pop to the upside. Again, there's 21 days. I know recently, too, I haven't really been holding these or I've been holding them past 21 days till expiration. But again, since the short strike is in the money, not something that I want to wait to lay back in our breadbasket. I mean, we could get lucky. Maybe it continues to sell off, but prefer to redeploy the capital elsewhere. Maybe I go to Android. Maybe I go to Microsoft this time. Maybe we try that instead of Apple. See if that works out a little bit better.
You guys see Errol raise his voice there as the SIBO started to get loud behind him? That's professional stuff right there.
I didn't even realize I did that. I'm just like, do you hear me as it gets louder?
That's professionalism at its finest right there. You got to be able to live adjust when you're at the SIBO. We often joke, well, you got to get loud like that when things get loud, but then it'll go quiet so quick and suddenly you're yelling. And
you're yelling and everybody's just looking at you like, what is this guy just yelling in the middle of the floor for? So yeah, it gets a little bit awkward sometimes too, but yeah, no. Speaking of Microsoft's also having another good day. So it's looking like a lot of long delta on in the portfolio is working out pretty well if you're sitting long delta in the overall portfolio.
Yeah, Microsoft actually hilariously like inverse Apple chart here. If we go back to Apple, it's like this same timeline, but Apple takes a giant run up and then a gap down. And then, over on Microsoft's side of things, it's like we take this big run down and suddenly the gap up. Microsoft can't stop, won't stop. We saw this big, huge bullish momentum come through after earnings and up into the 510 range. And then, the Bears were able to compress that for a week or so, but suddenly we're ripping back, breakout from that range as of right now. I do have this existing long in Microsoft on expiring December 18th. This is a 440, 450 bullish put spread. So no concerns for me at all. I'm content leaving this one on for quite a bit longer. Retest of that 450 level is certainly possible. Microsoft, has the propensity to make these Meta, Tesla, Apple type moves where it, takes these giant swings. Pretty much anything in the tech sector does at this point. Nobody's safe. But being $65 clear of my top strike, and with, not insignificant meat left on the bone, something like $200 left to be collected on this one, I'm content to let this eat a little longer and see if Microsoft wants to work higher, continue to work higher and pay me sooner, or if I just need to wait until Theta can start doing its job. But I want my money. I want the last little bit. Yeah. This is one, I could even consider rolling this for a credit, actually.
What is that? But, 100, how many days again is on that one?
112 right now.
112, wow, and you can still get an additional credit, right?
I could roll out to March for another 85 of credit, which is interesting.
You can definitely collect a bit more. You could go even further out and get $1.11. I
could, if I want to go to June next year.
Yeah.
But I don't think the difference there is certainly not worth it. I'm not willing to wait the 3 extra months to get $30. And I don't really think I'm willing to wait the also 3 extra months to get an extra 85. So I think I'm just gonna be content with this one as a winner. I could roll strikes up. What if we take a look at that?
What do we collect there?
What if we move out? We couldn't go too far. Let's see. What if I wanted to go?
You're in the driver's seat on that Microsoft position.
No kidding.
Microsoft has put in,
Yeah, and this rolling the strikes for credit, really, I don't know if this is the greatest idea either. If I rolled out to at the money, I could get an additional $46, and then I'm repositioning all of my risk to say that Microsoft is above its current level by the end of December for an extra $59. I don't really think that makes any sense. So we'll let this one eat, and we'll squeeze the last little bits of juice out of it. But always important to ask these questions when you, not only when you find yourself deeply losing on a position, but also when you find yourself deeply winning on one. Is there something you can do to extract a little more value from it?
Yeah, taking advantage of those winners. Especially when you're in the driver's seat, right? You have so much flexibility in terms of like how you might want to hold a little bit more of the piece of the pie to capture a little bit more. So, for the most part, whatever you do in there, I don't think it can hurt you. Especially not with the momentum and tear that Microsoft specifically has been on. But I love it.
Domino's taking some legs up for me already. Up $5 on that position. So my tip to the driver has been refunded last night. All I need is an additional $39.62, and this will be a free pizza. So thank you, Domino's. Let's hope we can keep that moving. Meta also having a great day today. Don't want to let that get lost. Up another 1%, $5. Kind of quietly just eking up off these lows. We'll see if it can stop. We've kind of been range bound since the beginning of May on Meta, which range bound and Meta are not typically two words that I use in the same sentence. But here we are, just slowly working towards the upside. I don't know. We'll have to see. I need Meta to figure it out by October 16th. All right, I need Meta over $600 October 16th. Zuckerberg, make it happen. I just saw your yachts. You got so much money. Buy some shares yourself. Whatever we got to do. Let's pump this thing.
Yeah, it's so crazy how certain companies get to a certain size to where it depends on the lawsuit, but like the lawsuit that Meta just had about social media addiction and those kind of things. It's just interesting to see how some companies get so big to a level where they're legitimately too big to fail. Like, not even bad PR is going to hurt some of these companies, and most of the time it gets brushed under the rug to see Meta really grow over the last 20 years, and then just to see lawsuits like that are a little bit more adept to like 2020, 2025, 2026. Those are the type of lawsuits you see in 2025, 2026. I don't think that's a lawsuit you see 15 years ago, but it is kind of funny just to see how you grow so massively and you can just brush it under the rug like nothing happened. And a lot of your investors probably don't care too much about it, reflecting on how that Meta performance is playing out right now, at least.
Oh yeah, I mean, in the micro, like $16 billion, they viewed that as winning that lawsuit. Like they were like, okay.
Oh, absolutely. They profited way more probably off what they're getting sued for, right? Yeah.
Oh yeah, certainly. I mean, yeah, they're like, oh, only $16 billion? Okay, here you go. Here's the check. Let me make sure I put enough zeros on there.
We already made an extra $500 billion by getting you addicted, so sure, we'll pay the fee of $16 billion.
Yeah, exactly. Cost of doing business. And in a more macro context, you make a great point about, it's insane how you really can become, too big to fail for real. I mean, it takes a cataclysmic shift in like the status quo of society to beat you. It is what it would take for Meta at this point, and they're doing a good job of keeping their finger on the pulse. But yeah, I mean, to your point, Meta's PR this year has been like as bad as it could possibly be. And to your point about things getting swept under the rug as well, none of this has really been talked about. I mean, I've touched on a few of these things on morning movers here and there, but like Meta has just been scandal after scandal this year. I mean, the worst of them was probably that there was a thing in India earlier this year where they didn't have moderation in place for all of the languages that are spoken there, and so people were just straight up like advertising horrible things, the details of which I won't get into. You can Google it. Horrible things openly on Meta because they didn't have the moderation in place to fix it. They lost like $2 billion to India in that lawsuit. But again, it's just like stroke the check, move on to the next thing. They don't care.
Yeah, 100%. It's still a profitable strategy. So Meta keep on doing what they're doing. We'll see what we get from them.
Yeah.
I saw another comment that caught my eye. Frankie had made a comment about how there's a transfer, 150 million gallons of oil can be held on some of these tanker ships, which is absolutely nuts. When we're talking about 150 gallons just floating on the water like that, it also sounds like a liability. Like that sounds pretty dangerous to see 150 gallons of oil aggregated into one very small vessel. So I know, just circling back quickly to the oil markets there. There's nothing to play with.
That would be a very, very valuable vessel. Yeah, boats are big. Boats big, ocean scary. That's kind of my take on that situation. Ocean big.
Ocean big. Make vessel look small. That's
I know. I mean, I don't know that this necessarily has any bearing, but perhaps it could. Allow me to put this on the record in case this happens sometime soon, so we can go pull this clip. But I know piracy is back up in Somalia right now. That's a thing that's happening this year as well. They had gotten it all the way down to the extent that in 2023 they actually removed Somali waters from like the list of maritime dangerous piracy waters. But then because they took it off the high risk list, they stopped putting so much military there to stop it, and then just slowly the pendulum is starting to swing back, and I believe there's been 6 ships captured so far this year in those waters. So I don't know. I'll throw that on the record. If we see 150 million gallons of oil seized by pirates sometime, I want to be on the record as having said that.
Yeah, we'll definitely keep an eye and ear out for that. It'll be funny if we see a headline that slide across our desk over the next couple of weeks.
You remember in 2021 when that Evergreen ship got stuck in the Suez Canal?
Yeah, I totally forgot about that. Where they were trying to dig out the front of the ship from the side of the bank.
Yeah, they just drove it into the bank. Yeah, that was pretty crazy as well.
I totally forgot about that. Yeah,
at least this.
It wasn't a quick fix.
No. It was like 6 months. I mean, it took a year for prices to readjust and everything. I mean, yeah.
Did that not cause shipping? That hit something within the supply chain.
And I remember I think Zim. Zim is the big shipper. They got hit really hard when all that stuff happened. See if I can get back that far in the time that we have left here. Yeah, it was like this giant sell-off, I think, was what was caused by that. Just saw it keep going lower and lower, but created some good buy opportunities if you were brave enough at the bottom. It's recovered now.
Oh yeah,
Not all the way, not all the way, but most of the way. Anyway, I know it's going to be about all the time that we have for today. Errol, you have any closing remarks to the people? Any insights from the floor for us?
No, that'll be it. We will be back at around noon for more trades of the day. So we'll talk a little bit more about the portfolio then, more trades that we'll put on, and a little bit more management in the portfolio. It's Friday. It's a lot of 21 days till expiration too. So, we'll circle back around to that and we'll touch on those topics. That's going to be it for me.
Yeah, well put. Plenty of 21-day stuff to go after. We will be back with Trades of the Day. I have traded places with Chris Vecchio today for Trades of the Day, like you might trade picks in a fantasy football draft. He has an interview to do, so I've swapped to the 12:30 slot, and he's taken my noon, but I will be back here at 12:30 for Trades of the Day. Thank you all so much for taking the time to watch Risk and Reward today. We dearly appreciate it. We never take it for granted. Errol and I will be back here, same time, same place, 10:30 a.m. at Central Standard Time this coming Monday. Everybody, you will hear from us again, but have a great weekend. We will see you all very soon.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Hello, everybody. Welcome back to the show, and welcome to our Friday Research Deep Dive, where we go over our segments from the past week and see what we can add a little bit of spice, add a little bit of analytics, try to deep dive into it a little bit more and try to understand. My name is Sahil, and I'm with my co-host over here, Mr. Gad Nishimwe. How are we doing, Gad?
I'm good, Sahil.
Yeah.
How are you doing?
Good. Enjoying what the market is doing right now?
Oh boy, yeah. It's a spicy a bit.
Spicy market.
Yes, spicy, yeah. So
about time. It's been a little sideways over the past few weeks. It's about time it starts moving.
It's even time, yeah.
Welcome to the show that never ends.
The show that never ends.
Yeah, the show that never ends. So this is the research deep dive we do normally on Friday. So we rotate among the research team, me, Sahil, Kai. So we go deep into our research we did for the past weeks or the past time. So mostly the market measures, statistics, and behind all the research we do. So we explain in deep, like level, to be able to understand. Also, we post all the articles we do explains on our socials, Twitter, X, Sahil Mahotla on X, and the guy X on X. So you're gonna give us follows. Oh, it's Sharp Mahotla.
You forgot the special.
Yeah, Shark Mahotla and the guy X on X. So we post all the articles we're gonna explain today, actually. So, Sahil, this week
It's a special week
was a special week
for somebody. Okay.
You lost some money finally.
Oh yeah. Oh, you're talking about that. I was talking about something else. Okay.
No, that,
Oh, okay.
I'm talking about.
Oh, okay. Yeah.
Usually I graze you,
Yes.
but right now I'm
Yeah.
gonna roast you a
I
little bit.
decided to play the Nvidia earnings.
Yeah, I told people.
Yeah, I
Yeah,
decided to be bullish on it because I thought, they're AI company, whatever. They're seriously going to go up. Just number goes up for all these different companies, right?
Yeah.
And then I decided to be bullish. We all know what happened during the earnings. Yeah, lost. I didn't lose too big because it was defined risk, luckily. But it
Was that
just
Ricardo?
a lesson for people with my account size and stuff
Mhm.
to avoid playing the large earning names if you are not necessarily okay with the risk that could be happen or just being okay with being wrong.
Also, it's a lesson like you don't gamble with trading. Trading is not gambling.
Yeah, trading is not gambling. If you're not
Yeah.
100% certain on your strategy or whatever's happening,
You-
it might be best to
Adjust and
like even step out. Like playing the game. Okay, you do not need to make every single move or play every single.
yeah, people who know this case, Sahil on Tuesday, Wednesday. He chose
Nvidia
he chose to
on
play.
Wednesday.
Yeah, he chose to put trade Ricardo on Nvidia earnings because we want to make money for our dinner for my birthday.
That was
So,
what I was going to mention.
Yeah,
Special day for
yeah, that was a special
somebody.
day. And then he ended up
Wish
wasn't
Gad a happy birthday. This is a special one for him.
Come on, it's all over, man. It's over.
Oh no!
Yeah,
It's a special one, man.
yeah, I appreciate it.
Okay.
Yeah.
Come on.
So
A
yeah,
year older, a year wiser, a year more silly.
so
But still the same old Gad who tries to be modest.
we try to be straight.
Okay.
Yeah. So let's go into our research. So Sai gonna go. Oh, thank you, production team. Thank you.
Yeah,
So
yeah.
you're the base.
That's a nice one.
Yeah, that's a nice one. That's an old
See, they
picture.
had the graphic prepared for you. Okay.
So let's go to the first segment. Sahi, you're gonna start with these segments, choosing a DT for.
Poor man's covered call play.
So there you go.
So, Mr. Gad, question for you. Do you like doing covered calls? Poor man covered calls as your trade?
Short answer, yes.
Short answer, yes.
Yeah.
Depends on the underlying. Depends on, yeah.
Yeah. There's so many factors.
Yeah.
Yeah.
All right, so let's go into it. So basically, we're going to be saying what the DT of the long call option should be for a poor man's covered call. So the idea with the poor man's covered call, of course, is instead of owning the stock outright, owning the 100 shares outright, you are doing the longer dated option, 70 days out, 90 days out, whatever, around the 70 delta, the 80 delta call, and you're buying that call in order to simulate 100 shares. That's kind of the idea with the poor man's covered call. So we're going to see what the ideal DT of that long option should be, basically. So as the market pushes higher after major earnings announcements and the second half of the trading year, we have declined implied volatility, and which is creating challenges for options traders seeking to deploy volatility selling strategies. So that's where the poor man's covered call comes in, because this strategy is best deployed in low volatility environments. So if we move on to the second and third slides, these are just explaining what's happening. So since selling puts, spreads, and jade lizards, they become less attractive, for lower implied volatility environments, because those types of strategies you want to do them in higher volatility environments. We tend to lean towards poor man covered calls and covered calls. So this is just saying what the study is going to be about is what should the duration of the long call option should be in the poor man's covered call. We move on to slide number 3. I'll explain this again, is that purchasing longer dated options, which the longer dated calls, 6 months and above, functions as a replacement for the stock. As a result, they are less sensitive to fluctuating prices in the stock market because you are only simulating. It functions as a replacement, basically. On the other hand, when you're buying calls with a short duration of 45 to 90 days, which they can reduce the BPR, but it also reduces our return on capital. So these are good for outlier events in the market and stuff. So we have to be very careful with our poor man's covered call because we are buying an option that is, farther dated out, we're going to be in the market for a longer period of time and we might have more fluctuations in the price of the stock that could affect our strategy versus doing much shorter dated options. So this is something that we have to just be very careful on. All right, slide number 4, the study slide. We're going to go. So the study slide is to test this question. We are conducting a study on SPY since 2013, and we're comparing the results of a poor man's covered call. And we're doing the longer dated 70 delta calls of various durations, 60, 90, 120, all the way up to 300 days. And the short call is at the 45 DT with the 30 delta call option. So that's the important thing to note, is that your poor man's covered call duration can be at pretty much any point. The long option can be at pretty much any point. It can be 60 days, it can be 90 days, it can be whatever. Usually people try to stick around 90 to 120 days in our experience, for Tasty Trade. This is from all the research that we've done. Usually you try to stick around 90 to 120 days, but it depends on your personal risk profile, as we're going to be talking about. And so, yeah, what is basically the ideal for that? And then obviously the short call is going to be at the 30 delta, the 45 DT, which is standard for our studies, right? So slide number 5, we get to the first graph, which is the current BPR graph. So this is just basically going over all of the buying powers. And I think it's pretty obvious, but it's interesting to see it in graph form again. The longer we hold the poor man's covered call, the more profit we can make, but this also means a higher buying power requirement. So the more you push the longer dated option, the more DT you push the longer dated option more and more, it's going to require more buying power. But you can also make a potential higher return. That's depends on your personal risk tolerance. If we do the current BPRs in SPY with a 92-day long option, it's around 3,900, and 127-day long option, it's about 5,200. And this is of course with the short 45 DTE, the 30 delta call. And these long options are all around 70 delta. So yeah, you can just see it depends on your account size. Mainly with the buying power. And poor man's covered call, even if we call it a poor man's, remember that this is in SPY. SPY is, of course, an ETF, and ETFs are not generally able to be traded naked for smaller accounts. So, but because we're doing the study in SPY, when you're doing a poor man's covered call in an underlying, like whatever underlying you guys can think of, like a Walmart or an Apple or whatever, your buying power is going to be less, obviously, because we're dealing with ETFs in this study. Yeah, so that's the buying power slide. The next one is the win ratio slide. So we've also found that success rate only slightly increases with longer duration poor man's covered calls. This implies that choosing longer options does not significantly create a better chance to win. All of these win ratios are in the 59% to 66% range. It's interesting how graphs work, because the graph does not, the y-axis of this graph does not start at 0. So the changes
you can't know the change.
Yeah. The changes can look a little bit more drastic than they actually are.
Yeah,
that's actually something to note with this graph. But they're all around 59% to 66% of a win ratio. So there is not actually a better win ratio that matters too much if you push the longer dated option more. And this is something that we have to be cognizant of, because obviously everything that you do in trading is dependent on your win ratio versus your personal risk tolerance. You might have more of a win ratio, but you're also going to have more of a chance, more of a buying power risk, more of a large loss risk, of a C-bar risk, of all these different types of tail risks when you increase the DTE. And this is something that you have to say based off your own personal risk tolerance. Are you okay with taking this win ratio while you're also taking the larger risk? And in this type of scenario, what we're trying to argue over here is that the win ratio increase is not as much as it should be in order for you to necessarily take on the more risk. And that is why pushing your long dated option, even if you're going to be able to collect, or even if you're going to be having a chance to collect more when you buy back everything, the 210, 240, 270 is not necessarily something that you should push it all the way out there, which is why we tend to stick around the 90 to 180 days. All right, we have one more slide and then the takeaways. So the next slide is about the return on capital numbers, and this just argues the point even more. Your best return on capital numbers also are in that 90 to 150 range. Not that much difference. It's 4% versus 5%, but the 5% return on capital occurs in the 90, the 120, and the 150 DT. So this is just driving the point home more, that if you want the most optimal from a research standpoint, obviously make your own decision based off your own personal risk tolerances. But from a research standpoint, from a statistics standpoint, the most optimal is your 90 to 150 day range. All right, let's go to the takeaways. This was a nice and simple one.
Yeah, it was nice.
Before we get to Gad's graph segment. I like it, man. Okay, but the takeaways is Yeah, so the poor man's covered call is a compelling and profitable alternative to the traditional covered call strategy, especially when IV is low, and especially for smaller accounts. Why we do this is covered calls are expensive. You are buying the 100 shares outright. That can get very expensive in for smaller accounts. And so we simulate buying the long stocks with the poor man's covered call. Yeah, so choosing a significantly longer options does not significantly increase our chance to win, and it actually increases our BPR. And so going with our tried and true method, conventional wisdom of the 60 to 90 days is good for the small accounts. Then overall, selecting the long call with a range of 90 to 150 days, it can optimize a return on capital. But this is optimizing in terms of research. You don't necessarily always have to go with the most optimal for the research of your risk tolerance. Personal risk tolerance does not allow it.
So a single takeaway from this study, it's a good study. Thank you, Sahil. If someone can ask you, which DT can you choose? Which one can you choose? If I ask you that.
You want the one-line answer?
Yeah, one-line answer.
Yeah, so I do the 30 delta calls,
okay.
40 DT, 45 DT for the short call option, and then for the long call option, 70 delta, around 90 DT. That's usually what I stick to.
Good. Yeah, that's
actually what I did a poor man's covered call trade on that last week. That was the winner. The NVIDIA trade was the loser. Maybe I should have done something else for the earnings trade. Maybe I should have done a covered call for that. Hopefully NVIDIA bounces back. But.
Yeah. No. That's perfect, because I want to ask you one takeaway from this. If someone read the title and wants to get one single takeaway from this, people don't want complicated stuff.
Oh, yeah. They don't like the complicated.
They want straight answer, short one. And
all right. That's your one sentence answer. I like that. Okay.
Good.
Stick to 90 days. Done.
Good.
Okay.
Good. So let's jump to the second part of the study. It's one segment we did last week. If you have been following Tasty, so Julia went in these segments, so I'm going to go deep into these segments a little bit. So for better understanding and for people to explain. So in the chat, you can send questions, you can ask questions, whatever you want. So we're going to read all your comments and questions. So we live Tasty Nations. So this is part 2 of do overnight gaps predict the day ahead? So this is kind of segments, idea we got from our viewers. Been asking, we do have some overnight gaps, even if they are small overnight gaps, but do they have kind of influence into the prediction of the day ahead? So we do part 1 where we saw which kind of statistical standpoints do the overnight gaps push to have the elections. So one takeaway we get from the part 1 is the overnight gaps, they don't really predict the elections. It's a signal of how the market will feel the next day or the day ahead. Where we saw the small gap we have, the larger the feel you're going to get, or the greener the day going to close the day ahead. So 80% of small gaps, we're going to, the market will close green to the next day. Yep. So that's one of the takeaway we got, which is a good takeaway because people tend to trade overnight gaps as the directions. No, it's not directions from a statistical standpoint or research. It's not a signal of a direction. It's a signal of a feel. So, and then because we trade premium, we say premium. So we ask ourselves, what if you start a triangle? So you put a triangle, you open a triangle 10 years ago. We do a study of 10 years. So we open a triangle. You say a triangle, 16 delta, 45 DT, you manage by 21 DT. How that will influence, how the overnight gap will influence your results overboard. So then this is how we do this study, and then we measure the P&L premium you're going to collect according to your buying power, the max, the silver, the tail risk, and the max drawdowns, and how often each gap happens. Those gaps, so we start from, so remember, these gaps is from -1 to +1. Those are kind of the bounce back gaps of overnight gaps. This is not the day gaps, because during the day market can move a lot, more than 1%. These overnight gaps. So we ask ourselves, are these PM seller, is it a signal? So that the gaps, does the gap you sell into these results change? So we're going to test this and see how PM selling, like a triangle, will react to these overnight gaps, if we have some edge or not. So if you go to the second slide.
We should have some edge. That's good conventional wisdom tells us. That's why everybody trades gaps, right?
Yeah, it's statistical standpoints. You still have edge.
All right.
So the first slide is an interesting one. So how often you sell into gaps? How often, if you open a trade triangle, 16 delta, 45 DT, you manage 21 for 10 years. How often do you open into these cuts of the gaps? So you will see most of the time 45% in 10 years. You're gonna have you're gonna open your trades into this small range, 0.25% of the most overnight gaps. So when you see the big gaps, either down or up, it's only 5%, which means whether you try to trade the gaps, you will only get a chance to take 5% of the big moves. The 45%, you're going to be in small moves.
It's obviously a lot less than most people think, because they just remember the big moves that happen and they think
exactly. They think it's happening every time.
Normally in the market, yeah.
So, and the question is like, do those really rare gaps really pays enough so you can wait for those gaps or you can trade those gaps? That's bring us to the next slides, which is win rate and also how often the statistical turning points. So don't bet the gap directions, setting premium around it. Don't really treat the gaps as the directions. But if you're selling the premium, sell around those gaps. So it's a coin flip market. 73% is a win rate because triangle wins on both sides of the coin. Whether it's is negative gaps, the overnight gaps was negative, overnight gaps was positive. The triangle wins on both sides, but there's a catch on both sides. That's what we're gonna say. So on this graph, the gray one, the gray bars, it's when the market closes green, and the green ones, it's where we have the win rate of the triangles. You will see as you move towards the positive overnight gaps is where we have the matcher or the larger win rate, which means if you open a trade where we have a small gaps, even if like large gaps in negative sense, you're going to have like a low win rate. It's 69%. Where you open when you have overnight gaps, which is more than plus 1%, it's going to be like 80%. Your win rate is going to be that high.
Which makes sense because the market does not have enough to come back.
Exactly. Market doesn't have enough to come back. You're going to tend to be in that way because it doesn't feel the same day. But the market doesn't care about the overnight gaps. It's a coin flip. That's why you see 50% of the time you will see the market will close green. Because you don't have any directions. You can predict directions where the market's going to close green or not red.
Of course,
yeah, it's coin flip. That's a strange thing you're going to take from these slides. So the space, it's like that. When you go to the next slides, the fourth one, it's going to be premium.
Bigger gap.
Yeah, go to the next slide, the fourth one. So this is a graph I like actually, it's the smile. It shows how much premium you're going to collect according to the buying power. We've defined with this kind of different kind of overnight gaps. When you read this interesting graph, you will see setting into the big gap, you correct huge amount of buying. Credits, premiums
on a flat day.
When you go to the Fridays, you don't correct a lot of premiums, which means you don't really have a sense of a direction, but this is influenced by the volatility.
Yeah, which makes sense because the flat days will have less volatility.
Exactly.
Big moves days.
So this study comes to the volatility. So the reason why you correct a lot of credits when you have these huge gaps, either positive or negative, is not a sense of being able to suggest or predict the directions. No, it's because of the volatility. When the vol it's high in market, when you whatever you're trading, that's why you're going to correct so many credits. That's why you have this smile graph on the both ends. It's huge, but in the middle where you have flat overnight gaps is small.
And unfortunately, the middle is where the market sits most of the time.
100%. So where the market sits almost of the time, 70% in overnight gaps where it's small, less than 25%. So yeah, this is like a really presentations of when you want to try trade like strangle or any selling premium into by considering overnight gaps, you're going to correct most premium on the edge of the moves. Like when they have huge moves, it's not because you get a sense of the better prediction of the directions. No, it's because the vol kicks in.
More volatility, more credit.
More volatility, more credit. So let's go to the next slide.
Also means you don't necessarily need to do the trade every single day. If the gap is too small and your goal is to trade the gaps, basically, but you're not collecting enough credit in order to justify putting on that trade for you on that day, you can also sit out and wait for the volatility to pick back up.
Yeah, that's our model. So we're gonna talk about that in my takeaway, by the way. So this is the catch. Dr. Jim used to say every gimme there's a catcher. Or every catcher there's a gimme, right? There's every
gimme there's a gotcha.
Every gimme there's a catcher. Oh, sorry, Dr. Jim.
Don't switch it.
So when you see to the rewards and the tail risk, so it's where you have a tricky ones, and you have to understand why. The more vol, the more premium you're gonna correct.
Also, the more tail risk.
Also, the more tail risk you're gonna see.
Why can't the tail risk just go away, man?
It can't. That's market. That's trading. So this graph shows two parameters: show P&L and the silver, which is tail risk. You will see as you go up. Let's start from the P&L. -1%. That's like the maximum drawdowns. The maximum overnight gaps we took in a negative sense. You will see you're gonna correct $69 of P&L. When you take a positive +1% of overnight gaps, you're gonna correct almost $100, which means the more you go up, overnight gaps go up. You're gonna correct more. Your P&L will increase accordingly. But the catch, where is the catch? The tail risk. According to this graph, both ends have tail risk because there's more volatility on both ends, whether it's negative or it's positive. But in a positive sense is where you have like a lot of sources, where you correct more premium, the P&L will go higher. Also, the tail risk is not the same as its negative overnight gaps.
Of course, yeah.
So the takeaway from this graph, treat negative overnight gap as the worst case scenarios. Size accordingly. When you have positive overnight gaps, more than +1%, it's good. You're gonna correct more premium, P&L go higher. The tail risk, you have also tail risk, but it's not the same on the side of negative.
Yeah.
So
because when it is negative, it comes back up quicker.
Exactly. So because the market will bounce back, and you don't have time to adjust your positions.
Interesting how this graph is also the exact opposite of the other graph.
Yeah, the small one, and then
this, yeah.
This is the side one.
Because this just proves to you that everything, the tail risk, more credit, but then also the more tail risk, more volatility means you have more chance of credit. You also have more chance of P&L. But if your account is not ready to take on the risk of the tail risk, wipe out your account. You have to be very careful about it.
Yeah. So the down gaps paid, but they have the deepest tails. That means size accordingly. So let's go to the next slide, the sixth one. So
scorecard.
Yeah, this is like the summary of the whole study. You will see it's interesting to see how often it happens. Most of the time, we're going to have these flat overnight gaps, small overnight gaps, because the market doesn't really change, doesn't really move overnight. That's a lot. But when it happens, these overnight gaps is where you have so many kind of like smiles, where you have so many credits, you're going to correct P&L, but also it comes with a lot of tail risk. So really treat these overnight gaps as like a sense of getting a signal. How you're going to open your trade the next day.
Yeah.
And where you have to correct more premium. It depends to your tolerance risk, as we said, on the statistical points. You tend to lean towards the bigger positive overnight gaps. That's the main thing right here. And if you're going to treat this flat where the market spend most of the time, you're going to correct less premium. Also, the good thing, there is no much tail risk in those kind of environments. Let's go to
I'm liking this table too because it kind of shows the picture of the entire market. So if you have your entry graphs, right, the small ups actually happen more often than the small downs, which kind of just shows that the market ticking up every single day.
Every single day.
Which is why we're in the bullish market that we are in right now.
Yeah.
With the big ups and the big downs, they happen kind of evenly. And then, of course, the rest of the market is with the flats. So the big moves actually happen pretty evenly, probably because the one big move in one direction is followed by a big move in the other direction, over the same cycle. But yeah, it's just interesting to note that the small ups just happen more than the small downs.
Exactly. So let's go to the
I like
to
this
the
is a
takeaways.
nice snapshot. This is the one that you can print out, post on your wall.
Exactly. You can print this
If you're
graph.
nerdy enough to put tables on your wall like that, I don't know, maybe you want to put other posters. But
You can print that graph and that table and put on your fridge.
Yeah.
Or your bed.
Oh yeah, I think fridge is a better place. All right, let's go to the takeaways.
So let's go to the takeaways. So the gap is a volatility signal and it pays. As we said, these overnight gaps, they don't give you the sense of the directions of the next day, as many people thought. It's a sense of like signal and also volatility, where the volatility is going to pick up the next day. And also it pays, as we say, as we saw. The premium you correct climbed from 4% of buying power to 7% when you go up in a positive sense. So this gap means really richer credits for the same capital. So gap mornings are your best paid entries when it's like in a positive sense. So leaning towards the hardest into up gaps. So when you're setting into big up gaps moves, so you earn like $100 per trade. That point you have like 80% of win rates, and that's the fattest. But also they have the high probability, as we say, the win rate is going to be higher. So lean towards, if possible, even if the market doesn't serve you always that overnight gaps, which is in positive sense. But always when you trade, when you see those trades, those are on overnight gaps, leaning towards those positive sense. So down gaps pays, as we said, but they come with a lot of tail risk, which is every game there's a gotcha. So the study shows the market always swings between these small overnight gaps. So they don't really pay that much, but also they don't come with a lot of tail risk. Many people prefer don't have a lot of risk into their trades or into your portfolio, which they can choose these ones. It's good because they crack down to drawdowns. So this is a graph, this is a study which can really make sense when you're going to trade overnight gaps. You're going to treat them as a signal, not a sense of directions. And you have to lean towards the positive overnight gaps, the big ones. And because the market most of the time swings between the flat overnight gaps, size accordingly. If you see any drawdowns, size accordingly. And trade small, trade often.
I like this, Gad. It's a very nice segment.
Yeah.
You always come in with the graphs. All right, so anyways, guys, thanks for watching. We hope you learned something today. And yeah, we're going to come back after this break for more Tasty Live. So see you guys.
Thank you.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey, what's going on, everybody? Here for Trades of the Day. I am Jermal Chandler. Thanks for watching Tasty Live. What a trading day we got going on here. Who would have thought? It was very quiet this morning for those of you who were trading this morning or happened to watch the morning show. I mean, we were struggling to find things that were moving. And now we seem to have no shortage of things moving. Of course, it turned out that Chairman Wash's speech at Jackson Hole ended up being somewhat of an event, I would say. Markets have reversed. They were up as high as at least 37 handles that I saw at one point in time. Yeah, look at this hammer candle here. That doesn't look that great, but we did have a high of 77.82, and now we're 50 handles lower. Quite the reversal, which is working out well for some of my super bears. We'll see if the one from today can actually end up gaining some real value here. But yeah, just taking inventory of all the different things that are going on. You're seeing volatility pick up just a little bit. You're seeing yields. It's the real story here. Bonds are faded. After what he said, it sounded very hawkish. I haven't read the statement, but I typically don't always. I just like to see market action. And maybe if I have a chance to watch something like that, I do. But was busy this morning on the show. But you could see that initially the market sort of shrugged off what Chairman Wash said as he was speaking, and then eventually it kicked in. And so, yeah, yields are a lot higher here. Apparently, the idea of a September rate hike has gone to about 60% chance now, which is fascinating. And everybody's always said that he is possibly in favor of doing what Trump wants, which is cutting rates. But there is a little back and forth going on there. The things that got hit hardest, though, have been gold, silver, and Bitcoin. Again, non-yielding assets. That's really been the story here. If we're not going to cut rates, then non-yielding assets like gold and silver, or I should say stronger than that. If we're going to actually raise rates, non-yielding assets like gold, silver, and Bitcoin are not going to benefit in that type of environment. The thing that will benefit is the dollar, right? That has been one of the movers of the day, if you will. So looking at UUP here, UUP, the dollar has been stronger today, and that totally makes sense. That's a rate-raising environment. That's what you're going to see. The thing that is somewhat affected by that, but not really, is grains. Grains are somewhat affected, but not really, especially when you're talking about geopolitical. So yesterday I talked about corn, which the reason I chose to fade corn is because it's been a strong move to the upside, and there's really no geopolitical component to it. It's not like, soybeans, which are largely purchased by China. There is somewhat of a geopolitical component to that, and it's not like today's trade of the day, which is wheat. Ever since the Russia-Ukraine war, there's been a real focus on wheat at times. Now, this chart doesn't go back to 2003, but for those who do remember 2020 to 2023, for those who do remember that time period, when the Russia-Ukraine war kicked off, we saw a huge gain in not only natural gas, but in wheat. Russia and Ukraine account for about 1/4 of the world's supply of wheat, and that's why you're seeing crazy movements in that space. And so once again, we have some serious issues going on in that. Yesterday, or I think it was maybe 2 days ago on Wednesday, we saw wheat rise by its daily limit, which is 45 cents a bushel. And we saw another big move again today. Usually when it rises by the limit, I think there's I forget how long it times out. It pauses trading for a brief amount of time and then resumes trading. And usually you'll see a pullback, but sometimes you see it go higher. On Wednesday, we saw a pullback. But again, right now, wheat is trading at the highest level since July 2023. And that was actually on the way down. That's what was on the way down from the highs of what we saw during the height of the Russia-Ukraine war, which is around 2021, 2022. And again, shipments from the Black Sea have stalled out, and they're trying to find alternate routes. Sounds like a similar story to oil, right? But when you start hearing stories like that, you wonder if this is going to calm down. And so I'm treating this a little bit differently than corn. In this case, I looked at getting long into this move here. So again, looking at this continuous contract with the dollar sign, let's just go to the regular contract. Also in the Z, similar to what we were trading yesterday with corn, this is also similar in which the options are laid out. This is the October and the November options. It's in the Z cycle. I went to Nove. You know what? In hindsight, I probably should have gone closer. But I did go to Nove in this situation. I went to the 775, 805, or it's also 77.5 cents, 80 cents a bushel. But went to the let's just keep it in the regular number, 775, 805 call spread, and I ended up paying 11 for that. This is 11 cents, but $11 in 1/4. I'm sorry, 11 and an eighth, if you will. I really should have probably gone to October. Let's see how different that is. 775 and 805. Oh, it's really not that much different. It is the same. Good. Glad to see that. It actually makes me feel better. And if you notice, it's actually a little bit more expensive. And again, this is due to a nearer term. It's funny. I mean, when you see that, this is trading 11 and a half right now for the October. And again, they're the same. They settled to the same contract, but obviously one has a nearer term expiration than the other, and that's why this one is trading a little bit less than that one. Although to be fair, there's really no backwardation occurring. Right now, we're still seeing contango. Again, when you talk about the futures, contango is when the front month future is trading below the next term. So we're seeing a little bit of contango in the front 3 months, but all of a sudden you do see some backwardation once you get to the K contract, which is May. So, and if you're wondering where I'm getting these contracts from, again, I did memorize throughout my time of trading. Z is December, H is March, K is May, N is July, U is September. And so once you get to this K contract, which is trading 802, that's May, you're starting to see the backwardation, which I think might be typical for May because it's the summer months. But again, I'm not a wheat trader. I just know enough to know how to trade it. So if you just want to keep it simple, look, we're buying a $30 wide call spread, right? And you're paying 11 for that, and you hope that it can make 19. That's one way to think about it. But realistically, if you go to the curve and you look at the analysis for this trade, and let's back out some. Look, you don't have to make it too hard to understand. It's just a call spread, right? And so you see what we paid for it. Again, max loss at expiration is really not that. It's really $500, as you can see, and that's why we have this laid out here so that you don't have to do any calculations. And this doesn't fully price this in, right? Because again, it's not $1,000. Max loss I paid for this is $562 and a half. That's my max loss at expiration, and the most I'm going to make is $937 and a half. So that's the easiest way to look at it. Again, you don't have to be a wheat trader or a corn trader when you're doing spreads to understand this. That's why we always do spreads for the most part in these grains. And that's the other thing about these grains. I mean, these things can stay irrational longer than you can stay solvent. So that's why I like to go spreads in these as opposed to doing anything outright. It makes a whole lot more sense to me. But again, the idea behind this trade was to go near at the money. And it was also to keep down extrinsic. You can see it's very low extrinsic on this one. Even though I paid $500 on it, the extrinsic is very low. And my pop is 47%. So again, keeping it closer to like being like stock. When you think about stock, if you buy it, it's either going up or going down. There's no in between. And so you have a 50-50 shot of either making money or losing money. It's another way to think of pop. It's like a 47% chance of either making money or losing money in this situation. And again, I could have tried to go for the upside splash play by paying a little bit. I got 4 trades in here. I could have tried to go for an upside splash play, say $30 wide here, and paying less money. But my pop is a little lower, my extrinsic is higher, right? And so we always want to try and keep our extrinsic down. That's why I'm just going for near the money call spread and keep my extrinsic low, and the pop is higher in that regard. And I have a defined risk trade. This is $500, and for what I paid, it's $562 and a half. That's actually what I paid, 11 and a quarter, and so $562 and a half. And again, that comes from that price. Just in case you're curious, it comes from the it's in cents. So if you do 0.11250. And similar to corn, it's 5,000 bushels of wheat. Then you have $562.50, and so that's where that comes from. So let's pull up the P&L graph, show the people. Oh, we don't? Okay, that's cool. Well, no big deal. Again, I'll just go back to what I have, which is on the screen here. Again, similar deal. It's just easy to lay it out. In this case, don't fully pay attention to P&L expiration. Just look at my max profit, max loss that we have here. Again, I paid $562.50 for this, and $562.50. That's my max loss. Again, this is a call spread, 775, 805. Once we get, let's see where our break even is. Our break even is right there. So we need wheat to be trading above 786. Let's just call it 786 and a half, because this thing trades in 50 cent increments. So we need to be above 786 and a half before we make any real profit there. And at expiration, again, I have two things in here. That's why it's showing this. So there's my real value here, $567. And it really should be at a half. And then the most we'll make on this is $931, right? And so that's my max win, max loss. Again, knowing that if this falls completely out of money at expiration, I lose all I paid for it. If it's at expiration, that's where I make that $930 at expiration. But the way I see this going is it's really about extrinsic value. And so as the market starts to go up more and more, I could possibly see a P&L Theo of close to maybe $200 if this were to really go into the money. But we'll see how it plays out. So again, back-to-back days where we're trading the grains. Wheat call spread is my trade of the day. It's in the November options expiration, but it's the Z December contract. So wheat call spread as my trade of the day. And now I'm going to get you over to Mike for his trade of the day.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
All right, yeah, I'll talk to you.
There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire.
Well, Kevin Warsh has said his piece, and the markets are reacting. It's an interesting reaction. The market seemingly taking the move as hawkish, and nowhere do we see it more clearly than in the U.S. dollar, where there is a dramatic shift in market response here. As we look at what we're seeing here, this is just a way to benchmark the dollar here, looking at the euro, its most liquid expression, clearly a sharp move here. But what's interesting is that we're not really crossing any boundaries. So if this was our sort of former level here, where the dollar had broken out, it looks like we're back to retest, but not much else. A similar story across the dollar spectrum here. Here's the pound. And again, we're testing these levels, but we're not seemingly crossing any lines in the sand. Perhaps the least impacted of the bunch here is the Australian dollar. We can see that right here. Again, a slight pullback here, but again, no serious attempt to actually overturn the trend. Looking at the other kind of expressions of this idea that we've seen, here's gold. Again, interestingly, we get the response, but not the conviction. The pullback here, testing, but still within the bounds of the move that we've been watching. Similar story again in silver. So as we go across, silver doesn't even really make its way out of the immediate channel. Here we go. And so this sort of starts to raise the question, well, what did Warsh actually say? And the upshot is not very much. He managed to dance around the idea that, as he did before, he is committed and he's committing the Fed to tackling inflation, but he did not really introduce any additional urgency into the mix. He did say, well, if inflation is not getting to our target at a pace that we would like, well, then we're going to have to do something. Now, the market seems to be going to the idea that we're not getting to a place that the Fed chair likes fast enough already. But whether the Fed chair actually shares that view and whether policy officials actually share that view, that seems to be a whole other thing. And so that's perhaps the tension that we're seeing here, because if we look even just at the PCE inflation numbers that came out this week, what we find is while the headline number was a bit warmer than expected, it held unchanged at 3.7% year on year for headline inflation, whereas the markets were looking for a slight pullback to 3.6. When we look at the actual internals of the data, what we find is that the annualized 3-month core inflation, and critically core, that is to say, we're taking away energy, we're taking away food, but of course, while the markets are digesting the Iran war, the most important thing we're taking away is energy, because that's been washing out of the numbers and perhaps introducing a downdraft that maybe the Fed looks at and says, well, this is not a lasting downdraft. Well, looking at that core, we have seen a slowing in the annualized 3-month core going all the way back to February, and it's starting to get into longer term dynamics. The 6-month annualized has now been trending lower for 2 months after peaking in May. So inflation trends are going the Fed's way. Even those red hot S&P Global PMI numbers that we saw at the tail end of last week had baked within them inflation numbers for both services and manufacturing, input and output, that were declining, and declining for a number of months now. So when we look at what the Fed is saying by way of Warsh's speech here, and then we look at what the market reaction is, we certainly see a pickup in Fed rate hike odds. The markets are now tilting toward a hike as soon as September and another hike next year. So at this point, about 60-40 in favor of a hike for September. October is down to a hold. So it looks like the timeline for Fed officials, based on how the market is reading Warsh's speech, has shifted up. So that same hike that they had by December is now happening earlier. There is a second hike on the board for next year at this point, and that's getting priced in sometime around January or March at this point, looking at the aggregate probabilities. But when we actually unpick what Warsh said here, it was a whole lot of, well, if then, and not this is what we see and these are the guidance cues that we're giving, because, of course, Warsh seems allergic to giving guidance cues and sort of pointedly, as a matter of philosophy, does not want to do that. And so the markets are reacting, but they're not reacting in a way that crosses any red lines. And if we look at the bonds here and how they're responding, this coiling up continues. Now, we looked at TLT as our guidepost here in recent days. And what was interesting was that TLT looked like it had already made the break higher. And critically here, that does not get overturned. So this was the level that we were looking at, referencing this low and this high. This was the level that the markets looked like they had broken right here. They held it on retest here, and they're holding it on retest again. So very interestingly here, the market seems to be saying, yeah, okay, we're going to say that Warsh's tone was, all things being equal, more hawkish than we'd necessarily expected. We're even going to move Fed funds futures on it. But what we're not going to do is take away any of these sort of debasement type moves. That's what they're being called in the markets, certainly in the chatter. And we're certainly not going to take away this attempted break at the long end of the curve. In fact, even looking at Bitcoin here, we can see not really a formidable attempt to get back on the downside. If we were looking at higher rates, here is an asset that yields nothing. And we don't have it respond this way. So when we look at this now, I mean, yes, we're holding it against this resistance, but still holding. And as a consequence of Warsh, what do we get? Not a whole lot. So all in all, it doesn't seem like there is an impetus here to want to take anything off. Obviously, this is a bit of a drawdown in the trends that we've been looking at. But as we kind of consider the overall setup, it seems like the thing to do here may well be to show some patience and, if anything, add into these positions if these levels hold. Now, we're going to have to see if they hold. We're going to have to monitor this over the course of today. If we start to get some sort of meaningful breakdown past some of these critical levels here on the Aussie, on the euro, on the pound, certainly on the situation in the metals, well, then it'll be a different story to consider. But for the moment, it looks like we're in a situation that still speaks to a weaker dollar, still speaks ultimately to stronger precious metals, still leaves the door open for the bond market to be attempting some kind of a bottoming at the long end, still comports with Bitcoin having rebounded and now consolidating gains perhaps before a further push higher. All of that echoing the idea that while the Fed may be sending out these smoke signals, while they may be sort of trying to make the point that they're serious about inflation, they're serious about price stability, and this is what we are going to do, the actual reaction function in markets seems to suggest, okay, well, September is a little bit more likely, perhaps, after this speech, at least as far as the markets are reading these tea leaves. But in that Warsh hasn't said anything of substance, perhaps that also sets up the markets for a more dramatic negative response when that move doesn't come. So we're going to sit here for now and let the markets find their way around these technical levels and see what comes next. Chris is waiting in the wings, and he surely has some ideas here. Neither one of our trades on the bond market worked out today. Let's see what he says. Coming right at you. Don't go anywhere.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. G. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
We're back. You're watching Tasty Live. This is Trade of the Day, or Trades of the Day. I'm Chris Vecchio. Have you been paying attention to what's happening in the bond market here? I don't know what that last guy was talking about. The bond market's doing exactly what one would hope if they're short bonds today. And I think it's time that we explore that a little bit more. Let's head on over to the platform where 2-year notes are cratering down to their lowest level of the year in the ZTZ6 contract. And that's becoming a little too much for the entire curve to bear. ZF here, that would be a new low that we see. Likewise, ZN is potentially breaking out of what I consider to be a bear flag after multiple rejections here in recent days, recent weeks of that 50-day moving average. You know what else is being rejected by its 50-day moving average? ZB. ZB is below Tuesday's low, or I should say Wednesday's low. It's below Thursday's low. It's looking on pace to close below its 1 month average again here today, despite spending a past few days back. Never got through 110, and now here we are. What did Warsh say? Warsh tried to be committal to the idea that the Fed really cares about their 2% PCE target. And for a bit there, it seemed like the market was enjoying that notion. Curve is flattening out. 2-year yields were going up. It wasn't so much the case at the long end of the curve. The 30-year was pretty stable. But now the market's starting to get a sense that, okay, are we actually going to get the hikes we need? Is it going to be enough? Or are we going to have to push rates up ourselves? Kind of reminds me of 21, 22 to a certain degree, because the market reaction on the other side of Warsh as the days gone on, dollar's getting a lot stronger, gold's a lot weaker, silver's a lot weaker, Bitcoin's a lot weaker, and yields are creeping up higher everywhere, which is why I think we need to start looking at some of these rate sensitive names. 2 in particular stand out to me on a day like today. We've had a lot of the gold miners down, but we've had a lot of weakness in utilities here. XLU is very quietly now breaking to the lowest level that we've seen all the way since the start of February here. Now, XLU as a ETF itself, in terms of a tradable thing with options, you could do it. Just not a ton of volume here. You look at the open interest, it's all right. Several thousands of contracts. I wanted to look for something that's maybe driving this move to the downside, something that's broken on an individual basis that may be able to give a little bit more convexivity. And that brings us to NextEra Energy. NextEra Energy is the largest component of XLU. It's about 13% of the ETF itself right now. And very plainly here, it looks like it's made a major break in the past 2 sessions. So I'm heading out here and we're taking a look at 21 days to expiration right now, a super bear here and NextEra Energy. Short the 85.86 put spread, long the 77.78 puts, short the 85.86 call spread, along the 77.78 put spread here. This trade was put on for a 4-cent debit right now. In an ideal world, you can put on one of these super bulls or super bears for tiny credits, depending upon the strikes and what you're looking at, where you think it may go. For me, the debit made sense because I wanted to go right to where the market recently pivoted and failed from this week here. So we're really zooming in. The high that we have on the 26th before the market broke down, $84.72. Likewise, since the break of the 1 week on the 19th, we haven't closed above the 1 week. And we see that the 1 month is clipping down through here, something that we have not closed above since July 28th. So setting the short strike just on the other side of the swing high that we had a few days ago, coupled with that 1 month that's moving below there, I felt comfortable with the 85.86. But at 13 cents a credit, that's not nearly enough, which is why I wanted to add some convexivity here and make it into this bit of a super bear trade, which now at a 2-cent debit, still something that I would do overall. Again, NextEra Energy, one of these utility companies, it's like fixed income. Think of it this way, right? Payments are not variable. And so when interest rates go up, what happens to any fixed cash flow stream? It loses net present value. That's the story of any of these interest rate sensitive things. Anything with a low yield or a negative yield, like gold, for example. What's gold's real yield? It's negative. It's cost of carry, their security. JP Morgan averages that it's about 2.2% a year. Gold's actual yield. And so gold getting slammed on a day today when we see rates, especially at that short end of the curve, jack up. NextEra Energy Utilities, they're in that same bucket here right now. But it's not just this, because when you look at the performance of the major equity markets here today, S&P is losing its gains. It was up near 78.80, 78.82, in fact, is a high. So we're 1% off that high right now. The Nasdaq's down by 0.84% here. Again, move off the high. But the Russell's the chart that looks the worst. The Russell's the chart that looks like it's already broken down, and it's the worst performer today, down 1.3%. You talk about the companies that are in the Russell. I jokingly say, and not so jokingly sometimes, that they're America's worst 2,000 public companies, which is harsh. But when you look at the composition of companies in the Russell, there's a lot of companies that aren't profitable. They're losing money year over year. When you look at their composition of debt and their balance sheets, they don't have large cash reserves. They don't have big moats. So they're more rate sensitive. If you're more reliant on the market for financing because you aren't making money and you have a small cash balance, chances are when short-term rates get jacked up, it's going to be a problem for you. And so the Russell here today finds itself in that boat. It's breaking below its 1 month, it's 1 week, it's a 50-day moving average here. I don't consider this to be the same kind of move lower that we had at the end of July, because that was all clearing out of leverage around situational awareness. And I know the Russell isn't part of that basket of tech stocks, but like everything else with the indexes going down, it was dragged there ever so briefly before it stabilized like you saw in ES and Q. This feels a little bit different though. It looks like a head and shoulders pattern right now. I see a neckline right around 3,000. I see a pretty clear head up near 3,079.90. So we'll call it 3,080. 80 points is pretty easy to do the math. So we're looking for a 29.20 target here. Two ways to play this. First is the short put spread at 350, 375. Why? Very similar to what we just saw in NextEra Energy earlier this week. Where are the highs coming in? Right around 330. What are the strikes just above 330? Well, 350, 375 here. That at 25 points wide does give you a healthy credit unto itself. Now, we usually look for a third of the width of the strikes, and on a $25 wide strike, that'd be $8.33. So at $9.30, that's nice. That's exactly what we want to see here. But volatility, if the market is breaking down, and if we take a look at vol today, the VIX here was lower on the session. It's now starting to go back up. Session low of 1413. It's now at 1477, creeping higher, creeping higher. I want a little bit more convexity in this because the short call spread can work, but this needs to work directionally. If vol expands and this gets pinned, I'm not going to be able to realize all the profit that I want unless I ride it into expiration, which is not the ideal thing to do. So I'm going to augment this here too. The target mentioned on a head and shoulders pattern is simply the distance between the head and the neckline. And you subtract that distance from the neckline to give you a measured move target. So at 80 points from 3,080 to 3,000, that does give you a 29.20 target. And in that neighborhood, we can go down here and see a 29.25, 2,900 long put spread here for $5.60 debit. So I'm going to put that through here as well right now, which directionally, if this thing keeps falling, and more importantly, if volatility expands, that can work out fairly quickly. So if that gets put on now, which hopefully it does get filled, for $5.70 debit, we take the difference with and there you go. On the credit side, right now, this could be put on for about $3.90 credit, which for a super bear, I think that's a decent amount of credit with what we're trying to accomplish here. So we have a Russell trade, right? We have a NextEra Energy trade. Both of these are largely predicated on the market being spooked by what's happening at the short end of the curve, that the Fed rate hike risk is alive, but also that there's slow growth, and that kind of speaks to stagflation, which isn't making anyone feel good as the day goes on. And anything that's highly rate sensitive is getting knocked around right now. Gold itself is probably the best exemplification of that, but gold miners, which are, you talk about the leverage, that here is getting hit around too, down almost 4.5% with a really nasty bearish engulfing bar, breaking what had been a pretty stable uptrend here on that 1 week moving average. So not something that's definitely being done in isolation. As for what Ilya said, he says that the last hour bond trades aren't working out here right now. I'm still sitting in these positions in ZN and ZB. We're sitting short call spread or long put spread. The one for today in ZB is going to expire worthless, but the one that has still some time on the board, that's fine. I want that to work. I want to hold on to that and see that keep going because we are having this meaningful, what I see to be a meaningful breakdown at the long end of the curve here. It's an odd thing. The market sees both at the same time inflation risk and hike risk, but also the fact that if the Fed does hike, they're probably not going to hike that much more significantly because the measures of inflation that they're peering into, they have been moving in the right direction. So are we even going to get enough hikes if they do it? Is now the question the market seems to be asking itself. The SR3 contract, which if you're on the platform here, we could go a little bit of education right now. SR3 is what you can use as a stand-in for Fed funds futures, right? What we're looking at here is where the market effectively believes these Fed funds futures will be trading at, and you can apply the actual interest rate at that various expiration cycle. So you take the number on the y-axis, you subtract it from 100, and that's how you get your implied rate. You can see today that the market went from leaning towards a fourth hike, right? Not quite at 4%, to yes, we're definitely getting a hike. And, hey, is the Fed going to do something more now? Are things open-ended? What are we going to have to deal with at this juncture? Rates are going up, at least in the short term. Could this ultimately be a situation where the Fed hikes and the problems at the long end of the curve are arrested? Yes. Actually, what would turn me into a bond bull is if the Fed started hiking aggressively. So there might be a little bit of a disconnect here in the market right now. What's moving what? The 2-year yield's moving up, so folks are betting on more hikes coming? Or the 2-year yield's moving up because people think the hikes are coming? There's a tail wagging the dog. Either way, not exactly a comfortable situation for equity markets right now. Surely there's something to do that's not so gloomy, though. Yes. You guys were on FinTwit yesterday, or actually anywhere on social media, there was a bunch of clips of GTA 6 coming out, which I will definitely be getting that. when that's out and be playing a good deal of that. That's one of the games that my wife enjoys playing with me. So when the kids go down, we'll probably be playing GTA 6. Take-Two Interactive has been a stock that we've traded in and out of in recent weeks. Take-Two Interactive gave us a nice little move here off the lows the past 2 sessions and is holding up at an otherwise weaker tape today. Always like to find winners in weak tapes. The 210-220 short put spread here, which puts you just underneath the recent swing low. It does give you a little bit of breathing room underneath the uptrend from the March and those June swing lows here. It feels like this is a good place to look for, at least in my view, how I operate in these markets. This is a place where if everything is going well, we should not see prices return to anytime soon, at least in this expiration cycle. So that's put in for a healthy $2.50 of credit right now to begin at 240. It is 49 days to expiration. So the theta decay here is going to be a little bit slower than some of the other things. And unlike, say, the Super Bear and NextEra Energy, that requires, because of the time horizon that it's operating on, that's going to require a little bit more movement quicker. We need this to work out faster. So another day where we lose $1 or $2 in the share prices here, there's a little bit more volatility expansion. It's only a 4.4 IBR. All of that should help. But with what we're seeing in Take-Two, if this thing just meanders and moves sideways, that's good enough. It doesn't need to make a big jump to the upside any further from here. And in fact, because of what we just took in on the credit for this position of $2.50, when we think about where the short strike sits right now, that does give us, we're talking about a break even of going into 217.50. So there is wiggle room right now. We'd have to see a serious dislodgement of prices for this to turn. And maybe it does. Maybe Grand Theft Auto gets delayed again. And that wouldn't be the best news in the world. Hey, those are our 3 trades. Short call spread in the Russell 2000 augmented with a long put spread to create a new double bear, assuming the put spread side gets filled. We're taking a look at the NextEra Super Bear itself, and then here we have the short put spread in Take-Two Interactive. Yesterday's Apple and Amazon Super Bowls are working out nicely, but we got a ways to go there. For this, though, you have Errol Coleman coming up. We got more trade of the day coming at you here on Tasty Live. Thanks for tuning in. Make sure that you like and subscribe if you're watching us on the YouTube channel. Follow me on Twitter at CVecchioFX. See you for Errol.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What is going on, Tasty Nation? Welcome back to another trade idea of the day. Again, if you've been watching over the last few weeks, hope you guys have been enjoying these segments. We've been putting on more trades every single day, so this portfolio has been getting beefed up a little bit more than you might be used to, especially in my portfolio. There's more than just the NASDAQ and QQQ market. So with that being said, let's dive into the Tasty platform, check out some of these trade ideas of the day, talk a little bit about how we were managing some of these positions, and go from there because the markets are extremely volatile right now. I know we had Warsh make his comments about 30 minutes after the bell, and it's felt like a risk-on, risk-off environment and just kind of getting flipped on its head. So right now we have some short delta on an Apple. We still have about, We still have about 21 days left till expiration. It's a $5 wide, and this position was working out pretty well. But today, for whatever reason, Apple wants to log a 5.5 point day to the upside, which they were up a little bit over 2% not too long ago. So we're seeing a little bit of a pullback there. We do have 21 days left till expiration. So this is going to be one where we could decide on taking this off, redeploy the capital elsewhere, or we could hold it a little bit longer maybe even near break even or a little bit into the profit. We could even think about what the max risk on this trade is now that we're at 21 days to expiration. Maybe if we get down $150, maybe we decide to cut it then and not give it a little bit more room to run into drawdown. But we're going to have to circle back around to Apple. App Lovin' finally came through for you, boy. This was one that took a lot of patience, right? Because we sold an out-of-the-money put spread. It was $10 wide. We collected $3.35 of credit, which is really nice because it's a third of the width. Not only that, as you guys know, I typically trade $5 wide. So getting into a $10 wide, there was a little bit more risk on the table on this one. And it felt like we were catching a bit of a falling knife after the gap down that App Lovin' had post earnings. So that was very reminiscent of the SpaceX trade that we had on, and just one of those trades where there's no floor in sight, right? We're making consecutive days to the downside, but whenever we do that, it's always nice to sell something out of the money, give ourselves a little bit more of a cushion just in case we continue to catch that knife. So that was how App Lovin' was playing out a bit. And then today we got a more of a pop to the upside, which we took advantage because you can see over here in the morning, we peaked out at around 9:45 a.m. Central Time this morning. So about an hour and 15 minutes after the bell. I mean, we were trading at 3:35. Right now we're trading at 3:19. And it's so funny because as a trader, we could really care less why this went up to 3:35 at 9:30. Like we could really care less because I'm going to manage the trade regardless, right? So we use that as our window of opportunity to get out of this one. We were able to snag close to pretty near 50% of the credit that we received on order entry. So App Lovin' ended up working out pretty well so far. Really, really happy about that one because it was $10 wide, a little bit more risk on the table. And then Sporting Goods, I got out of this one today. We had sold an out of the money put spread, $5 wide. We collected just over half of the width of credit on that one. I'm not going to lie, guys. Was there ever a doubt? We've been banging these trade ideas of the day left and right. I'm not even going to lie. No, I'm just kidding. Not really. But we also have on gold. This one worked out really well today. We had a little bit of a sell-off in gold right out of the gate too. I know Warsh's comments definitely helped that volatility to the downside, but we reached a high of 424 today. Right now, GLD is trading at 410. 411. So massive directional moves in these metals markets. But I don't think it's over for metals, right? I mean, if we zoom out, if we look at the daily chart, we can clearly see that this uptrend could be just getting started, potentially, right? We'll have to circle back around to these metals, but if we continue to sell off, I think that'll be attractive to then flipping it on a little bit more long delta. But one of the larger range days that gold has definitely put in, especially on an intraday basis, most of the large moves we've seen in the metals have happened overnight, hence these massive gaps that you see on the daily chart here, and then today being one of the larger candles that we're seeing to the downside. So that's nice. That's working out pretty well so far. We had another position on an SLV, and because the put was something that we bought and we're working against time a little bit there, and we don't want theta decay to rapidly eat the value of that options contract, that's why we decided to take off the gold position first and then keep on the silver position, because silver is a premium position. We sold the put, we sold the call. It was skewed to the downside quite a bit. But because time is on our side on this one and we're going to capitalize as time passes, that's why we decided to keep this one off. I'm sure you could see where I was going with that one. But that's why we took off gold. IBIT is working out a little bit better today. It was even up a little bit more not too long ago. Extremely volatile asset class right now. You can see crypto selling off, or IBIT selling off from 44 all the way down to a low of 43.47, which is pretty massive move given how much IBIT usually moves. Not taking into account, right, the moves that we had seen last week. Those were massive. But on a regular basis, what we see from IBIT is not the typical range. But we're getting a little bit of a rebound off these lows from about 11:30 a.m. Central Time here. So we're giving back a little bit of the gains. But to see IBIT in the green on the day and eat away half of the loss that we had on the table, that's a massive win in my eyes. Not only that, we also purchased a single put at the same time too. So if we get a little bit more downside, that'll be nice for those positions. This put we might be making a little bit of money on the put that we purchased on an IBIT now too. So we'll keep an eye on it. But that was the crypto market. Things got really volatile, right? I mean, we saw the gold markets moving, silver markets. We saw the crypto markets, right? IBIT, Ethereum, Bitcoin, even the ETFs like IBIT. So we're going to continue to keep an eye on it. It seems like we're experiencing a ton of volatility in a lot of these names right now. But last but not least, before we get to trade idea of the day, we got SMH, a little bit more short delta on in there. 84 days to expiration, $5 wide. We're up about $2. Not much else to say about that market over there. It's been really volatile, caught another decent sell-off on the day. But I mean, if we zoom out to a larger time frame, again, you can kind of see that, we were trading at these prices not too long ago. So I'm not really sold yet on the directional moves that we're getting because, again, last week we were trading at lower lows at 444. So I love 553 that we're seeing right now, but it was nothing compared to what we saw last week. So we're not going to get too excited until we can make lower lows on the semiconductor market. That's another ETF we're involved with. We got a lot of ETFs, right? I mean, we have the IBIT ETF, the crypto ETF. We have the ETF for NASDAQ, which is QQQ. And then we have the semiconductor ETF, SMH. Trade idea of the day was something that Gus and I had looked at earlier today. Microsoft has been logging some amazing days. I can imagine, Mikey B has been absolutely killing it with that long delta in the portfolio when it comes down to Microsoft. And this is one of those trades that I put on for trades of the day not too long ago whenever I was looking for a pullback within this consolidation. And I said, I'm looking for the pullback and I'm not going to hesitate to get out of this because I think Mikey B is like 8 for 8 or like 9 for 9 or 10 for 10 on his trades on Microsoft specifically this year. So I was like, you know what? I'm not going to fade that sentiment. I'm a data's guy. When I see the data and the statistics and the probabilities lining up in that favor for Mikey B, I'm like, you know what? I'm going to take my odds and not overstay my welcome with the short to the downside. So Microsoft ripping back above 516.84 right now. IB rank of 21.7, 15 million shares traded on the day, but Microsoft's extremely impressive. We had a massive gap up from earnings to about 434. We've had a continuation over 50 points, about 45 points further to the upside, about 50, a little over 50. So extremely volatile asset, but I think we're getting ahead of ourselves just a little bit. I think we can experience another pullback. Microsoft is one though. Whenever it gets to running, it can really run. So we're not going to hesitate to take this position off if we need to, but we're going to get a little bit of short delta on. Let's go to the October 16th contracts, go a little bit further out. Let's see what we can collect. We're going to do a $5 wide. You see, if this momentum was a little bit steeper, then I think we would have looked to maybe purchase an option for a little bit more of an aggressive directional position. But with such a large cap like Microsoft, I mean, we can get those strong reversals. Usually they're off of gaps like we've seen over here in January 28th. Same thing over here June 1st. The aggressive reversals usually come after a pretty aggressive gap to the downside in the market. So I don't want to fade this too aggressively. I want to give ourselves a little bit of cushion, a little bit of room just in case this momentum and this trend to the upside continues in Microsoft. And I'm looking at the 540, 545. That's $1.55 or $1.53 worth of credit. If we go into the 550, 535, 540 spread, that's going to give us somewhere around $1.70, which is a little bit more attractive, which isn't a bad trade. And I might send this through, but I like to do trades that are a little bit more attractive whenever we're doing trade ideas of the day sometimes. But we're probably going to send this one through. We could do a zebra. It's a little bit more expensive. But if we did do a zebra, let's go ahead and look. So with the zebra, that would be like a synthetic stock position. So we would really be up or down, plus or minus $100 per dollar move in that underlying. So we can already see today, Microsoft has moved $11. So if you were long a zebra from yesterday, you'd be up $1,100 if you had on one zebra. So that just kind of shows you how aggressive this position can get. And whenever we do that math and we see how much it's up on the day, I'm going to be comfortable going into the October 16th cycle. I'm going to be patient on doing the zebra. We can't just give back the gains that we made in the portfolio off of these trades right away. We got to at least keep them for 7 days. That's the rule. We got to keep the profits for at least 7 days. We can't just give them right back. So we're going to go 535, 540. That's $1.73. $327 with the buying power. Max loss is going to be the debit. The max loss is going to be the buying power required on that position. Max profit is going to be the credit received on order entry. Probability of profit or a probability of making at least 1 penny on the trade is going to be 65%. Pretty attractive. P50 sitting at 750 right now, or 75%. See if we can send this one through, see if we can catch a fill. Insta fill. So I appreciate anybody that's fading the exact moves that I'm putting into the market because I got filled literally instantly. You guys are like, I'm fading I'm taking the opposite side of that trade. And I see that's exactly why I got filled. But if you guys are just joining us, we have a little bit of short delta on an Apple. That was working out a little bit better earlier in the week. A little bit of long delta on an AppLovin. We took that one off today. We were looking at that reversal with the out-of-the-money put spread on Dick's Sporting Goods, which we've seen a little bit more of a continuation to the upside today. We got out of our gold shorts today. IBIT is coming back for us a little bit more. That's pretty attractive. Crypto is finally pulling back. First time we've seen that in about a week or two. Microsoft is a trade of the day idea today. Trade idea of the day for today. We sold an out-of-the-money call spread, sold the 535, bought the 540, collected about $1.78 on order entry.
QQQ, we have an iron condor on in this one. This one's working out a little bit better than I would have anticipated because we have an iron condor in the indices. I don't typically do that, but the market has been a little bit more range bound as we trade near these highs, as you can see right here. And the conversation is always around, are we going to make a new all-time high right now? Right, SPY's been made a new all-time high. QQQ hasn't done that yet. We're still seeing that divergence between both the assets, but we're trading in the smack dab middle of the summer range that we experienced for 3 months straight. So instead of choosing if we're going to go to another all-time high or if we're going to take out this potential swing low where Leopold's fund was liquidated at, which both of these points in the market seem to be very significant, right? That's a very strong, obvious swing low. I mean, we didn't have any type of consolidation at this low. If anything, that was an insane bear trap. So I think if we get back down to 660 on the Qs, right? I know highs and lows are always kind of important, but that one specifically, I think that's going to be a little bit more telling for what the market might get. But I think everybody's waiting on this all-time high or this potential swing low getting taken out that was formed on July 29th. So I decided to not take a directional position on the Qs, get on an iron condor, sell both sides of the market. Maybe we continue to see a little bit more consolidation, take advantage of time, capitalize on the theta decay. It's a little bit of the thought process there, but we'll see what we get. And then lastly, silver strangled to the downside, doing a little bit better today. A little bit more of an aggressive position, right? About $1,000 worth of buying power, which is higher than most of the positions that we have on here outside of the crypto position, which is another strangle plus a put. But with that being said, guys, that is going to do it for trade idea of the day. Make sure to stay tuned for more amazing trades coming on next. I appreciate your guys' time. Be sure to stay tuned, and we'll catch you here in a quick second.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Hello, everybody. Welcome back to Trades of the Day. I suppose I'm not formally welcoming you back. There's been a number on before me, but it's a free country. They give me the floor, and I can say what I want. I have an exciting trade for all of you today. A rare one that, I mean, I suppose much like yesterday, is not catalyzed by anything. I'm just identifying something that's, I believe, in a favorable spot and jumping in there. Also, for anybody who is involved with the position, just as a reminder, I did this live on Risk and Reward, but I have rolled the Abercrombie and Fitch position that was traded today earlier this week, looking to extract a little bit more value out of that into next week. Just rolled it back 1 week to September 4th expiration. So we have 7 days on that now. Still feeling like there's that stock has to show weakness here at some point, and I'm confident enough to give that a roll on expiration out into the next week. But we're not talking about next week. We're talking about today. And today I had decided to sling some Apple. Apple in a very interesting spot here. Where did this position go? Down here. I have gone for a bullish put spread here, sold a put spread. I will show you guys the trade on the charts here. There we go. I am buying the 312.5, selling the 315. Now, this is a little bit of a rich trade. You guys know I'm no stranger on these short put spreads to go out a little bit, go in the money with how I take them and try to let the share price catch up to my strikes to extract a little bit more of that value. In this particular case, I've decided to do quite the opposite of my norm and taken something that is pretty much a perfectly 2-to-1 risk to reward profile here. My apologies. So yeah, we're spending $167 of buying power to yield $85 of credit on this one. Those obviously being the max loss and max profit amounts as well. I've bought 2 of these myself, as I say all the time. Scale according to your portfolio size, your risk, whatever you feel comfortable doing. 2 of these is about where I wanted to be. It's kind of right on the awkward spot for me between 1 and 2 in size, but I did eventually land on 2. And there's a few reasons for this. The first, in a purely technical context, we're seeing Apple put in the next leg higher towards this gap fill. You guys may recall they were a $5 trillion market cap briefly. I believe they even touched like 5.1 for a moment before taking a giant move down. And we have now begun working to fill that gap. And I'm not a gap fill absolutist. I dabble. I'm a little stitious with the gap fills. And I do think that the momentum is just clearly there right now for Apple and the broader tech sector with all of the earnings behind us, with NVIDIA smashing their earnings call and moving higher after that. The momentum seems to be back in tech. And we saw Apple benefit a lot and actually continue to perform pretty well through the stagnation period that we had in tech for a couple of months, ending at the beginning of this month, more or less. Beyond pure technicals, there are a few other reasons here. First of all, Apple just raised prices on a number of their subscription services, which is something that I like and the market clearly likes as well. Apple's having a great day today, and that's another reason I wouldn't typically buy, actually, but I'm willing to step in front of this momentum. And I do like that for the company. These subscription services, everything's a subscription now. You will own nothing and be happy. I don't like it as a consumer either, but in a pure business context, and the reason that all these companies are doing it, subscriptions are really great recurring revenue, and they're particularly valuable for Apple, who, before they started rolling out subscription services, found themselves very reliant on cyclical revenue from their products, phones, watches, iPads, laptops, computers, you name it. Additionally, Apple I went off a lot, especially into the end of last year, about how Apple feels like it started to stagnate, how it feels like Apple is showing a lack of innovation recently. And while that's still true, they have done a few things that I like, particularly the MacBook, what do they call them? MacBook Nano, the cheaper MacBooks. They've rolled out a much cheaper line of MacBooks now that are more affordable to the average consumer. And I think that, diversifying your product line and trying to bring in it's lower income is not the vernacular that I want to use here, but people, more average people that are money conscious people into your product fold is a good way. Yeah, middle class is what I'm looking for here. But it's like, but at middle class, it's like, well, were MacBooks an upper class thing before? Anyway, point is, I like that Apple is rolling out cheaper products. I feel that does wonders to diversify their product line. Also, and in the middle of our expiration, and perhaps the biggest reason for this trade in general, is that effective in 3 days, on September 1st, John Ternus will be taking over as CEO of Apple. Tim Cook's departure will officially be complete, and Ternus will take the reins. Obviously, Tim Cook's departure is already fully priced in. I'm not expecting any share price reaction on September 1st to this news. I don't think that obviously efficient markets are efficient. We all know he's taken over on September 1st. So I'm assuming that information is fully priced in and is not going to do anything. But most critically, they have a WWDC on September 9th, which is 9 days before this position is set to expire. Apple historically has seen great growth on the days of those WWDC events, and I speculate, and this is where we start to get off of the path of factuality and onto the path of my speculation, subjectivity, if you will. But I speculate John Ternus, in his first major product event as CEO, is really going to want things to go well. Obviously, the company really wants things to go well. Anytime you have a CEO departure, it can create rocky times, and obviously Apple is interested in providing value to their shareholders and keeping their share price elevated. And so I speculate that they might give him some kind of, I don't want to say home run, but I expect him to say good things, roll out something at least a little new, cool, revolutionary, whatever that may be. I'm not expecting a whole new product or anything. I'm not expecting them to make some, ridiculous changes to the iPhone, but something like Apple Intelligence coming to Siri, or something else centered around Apple Intelligence. Maybe they are gonna push out I don't know. I'm expecting something better than thinner phone, better camera. That's what we got, and particularly as it pertains to Apple Intelligence. And as I just said, Apple, fundamentally, not a secret to anybody, is a hardware company. They have software. Mac OS is a big deal. They have a lot of software segments as well. Apple TV, all these subscription services that I'm referencing right now. I think they've even started trying to branch into gaming a little bit. But at its core, Apple is a hardware company, and I think that is why during the stagnation we saw in the AI trade, Apple was able to continue working towards the upside. And because of that, because Apple was able to continue working to the upside throughout that entire time, and I believe might have briefly passed NVIDIA for the most valuable company in the world, I think that what you're seeing there is that everybody believes in the hardware segment. So I think anything that they can do with software kind of winds up being a bonus layer on top of that. And now these are company level things that I usually would not discuss when you're talking about a trade that's 21 days to expiration. But all of these things absolutely could come up at that September 9th event. And so as the gears turn here, I start to think, okay, well, if the hardware is so good, if the market clearly is buying the hardware, it seems like the software is just a bonus. So to me, if they say good things about the progress of Apple Intelligence, any partnership with another major AI company to try to make that more robust, any software, anything, I think stands to push Apple a little bit higher now. Also, for what it's worth, I do trust Turnus. The man has been in Apple for 25 years. Previously, he was Senior Vice President of Hardware Engineering. So again, to that software point, he is a hardware guy. So I'm hoping that they'll have some software talking points, but hardware is his bread and butter. It's what he knows the best. And to that end as well, even if there is no major software news at this WWDC, he knows hardware inside and out. He can talk hardware all day long, I'm sure. And I think that he will be able to say good things and perhaps, frame things just a little bit differently than Tim Cook did, and perhaps squeeze a little bit more juice out of this lemon, if you will. Make some lemonade after life gives you some lemons. So he's worked on every product that Apple has ever put out. His product track record is quite hilarious. It's like they could literally just say every Apple product. They list them all. And ultimately, I think that he's going to do good things for the company. Apple obviously does not take this decision lightly and will make sure that they put this CEO position into good hands. And Cook's departure is already fully priced in, so I just feel like there's more upside than downside to be had. On top of that, and the reason that I'm choosing to pay this extra premium, as I said, I do not like posting up double what I stand to gain on any trade, but I'm willing to do it here because A, it puts this trade $5 in the money already, $5 out of the money. That's to say where we want it already. So it gives me a little bit of cushion there. And the main reason I'm going for the 315 instead of the 317.5 is just because of the severity of this move that we've seen today. Apple has seen lows just above 315 today, so I wanted to make sure that I was coming in below the low of the day and not just buying those 317.5s, which would be right in the middle of this range. Should Apple go unch today, I would like to make sure that these remain out of the money. And with us driving into this gap, I want to make sure that I don't want to say keep my risk in check, but I don't want to ask for too much out of Apple, I suppose is the way that I want to say things here. I want to leave room for a world where Apple, say over the next, the September 9th is the thing. So over the next 12 days, Apple just slowly takes a few legs up, say we're at 328 to 330 as we head into that event. I want to give myself room for a world where Apple maybe doesn't say the best things at that event, and I can tolerate a 3 or 4% slide at that time. Now, obviously, the market can do whatever it wants. Apple could easily open it, 310 tomorrow, and then all of a sudden we're in a management situation right away. But I want to just make sure that I have a little bit of extra room there, such that if Apple runs sideways, runs up, and then that event isn't so good, some people don't like something that Turnus says, I want to make sure that I leave room, just a little bit of room for all those contingencies to where things could still work out, any friction that may come from that CEO change. As far as management on this position, I'm obviously entering this at 21 DTE, so it's not necessarily a swing position. Well, it's a swing position, but it's not a medium-term position by our typical definitions. I'm entering this at 21 DTE, so there's no management to be done at 21 DTE. I'm looking for, I don't know, because that WWDC could save us, my realistic price targets and stop losses here for Apple, as long as Apple stays, I don't know, within close to 310. Maybe we'll say 307.50 will kind of be the bottom on this one for me. If we go, we can let's throw this graph up on screen now. Here we can display the full trade idea. But if we see the underlying get underneath 307.50-ish, I'd be looking to run. But as long as we're near 310, especially if we're above 310 headed into that WWDC, I feel fine about things. So getting close to my time here, but you can see that is the trade on screen for you now. Selling a put spread in Apple. I am buying the 312.5, selling the 315 on the September 18th expiration cycle. I am posting this to the follow feed as I speak right now. It should appear just after I get off air, so that all of you guys can get after this as well. If you so choose, you can get an entry $16 better than mine right now, if you would like to. I did get filled at I believe, I got filled at 80 on this trade. So there is better. It's about $10 better than what my fill was at this position, or at this point. So if you'd like to get involved, you can. The risk profile is even more favorable. Currently, we're taking 162 of buying power for $90 of credit. So you can do much better than the perfectly 2-to-1 risk profile that I got on this one. And ultimately, I just think there's enough news coming, enough bullish sentiment, and in a technical context, a big old gap to the upside for Apple to fill on this chart. All of those things making me bullish on Apple, definitely to the extent of getting in here $5 clear of moneyness. Give us a little bit of room should we give back today's gains as we head into next week. But Turnus, WWDC, all these things should work in our favor. That's going to do it for my trader today. I'm prepared to kick it over. I'm prepared to kick it over to Mr. Mike Butler, who has something wonderful cooked up for all of you. We will be right back after a short break to get Mike in here. Talk to you soon.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario, or something that would give us pot odds to stay in.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, everyone? Welcome back. We've got another trade idea for you, and I'm going to Dell. Kid's got a Dell. We've got earnings next week, and this thing's down 3% right now. So I think it's an interesting time to just get in a little bit early if you wanted to place an upside trade, which is where I'm going. IB rank is at 60, but implied volatility is still pretty elevated here, 75%. And when we look at the table mode here, you can see you've got 70% in October all the way through next year. We drop into the high 60s, and then we get as low as the low 60s. So looking at where implied volatility is, where the stock price is, I think it's an interesting time to get into a position here, especially into the sell-off today. I like to get into bullish trades when the market's selling off, of course. It just creates a better price point for entry if that's what you're trying to do anyways. But kind of crazy day. E-minis down 19, NASDAQ down 180, Bitcoin's down 2,000. We've been placing trades left and right here. Just a quick review of what I've done today. Got into PayPal, long call, diagonal spread there, just a longer term positioning, long December, short October, the 55-60 call diagonal spread. Closed Apple for $200. That was a call diagonal spread. Seeing a nice move to the upside in Apple right now. And then WDC bought a butterfly 21 days out. That was about a $200 winner as well. And then we've got into this Dell position. So let's take a look. So earnings next week, September 1st. That is Tuesday after the market closes. I'll actually be out on Tuesday. So it's good that I'm placing this now so I can still participate in the earnings announcement. But real quick, looking at the expected move, we've got a 50-point expected move here on a $450 stock. So plenty of implied volatility, well over 10% of the notional value. 10% is 45 points. We're looking at 52 for the 7-day cycle. This will drop a little bit as we get closer to the earnings announcement on Tuesday, but still well over 10% leading up into the announcement. And I think we'll see some fireworks, especially with all these other tech stocks that have already reported. Some of them have ripped to the upside. Some of them have fallen to the wayside. We'll see what happens with Dell. But I went out to the 21-day cycle instead of the 14-day cycle. Normally, if we're doing these short-term calendars, we can go long the 14-day, short the 7-day. But when I looked at this premium here, paying $1,600 for the 14-day and then going to the monthly, you can see it's just a few $100s more for another week. And I think that's going to be important here, especially if we get a sell-off. I want to have another week of time to potentially manage this position. And similar to how I've managed other positions where if you get the earnings announcement and we get the stock price down, you can buy back the short option and roll into the 14-day. This gives me another roll, basically. I can go from the 7-day to the 14-day and then from the 14-day into the 21-day, turn into a butterfly or whatever as a last-ditch effort to get the position back. But really, I liked the extra value, a couple $100, but you get twice the amount of time or 2/3 the amount of time here going from the 14-day to the 21-day. So looking at this value here, went to the expected move or this round number here, the 500 strike in the 21-day, bought that, and then I sold the 500 strike in the 7-day. And as I've said before, with these calendar spreads, what I like to see is collecting at least half of the width of the or half of the cost of the long option. So paying $19.50 for the long call in the 21-day cycle and collecting well over 50% for that short option, collecting $12 and change. So this higher ratio of credit collected relative to debit paid in this calendar spread gives you a significantly wider break-even range. You can see this is fully on the screen here. We can zoom out to get the real risk graph in here, but this of course has no change to implied volatility. If we look at and evaluate it at today, we could still make a nice profit if we get a rally in Dell, if we get a reversal of this move. But either way, paying $7 for this trade, that's exactly what I was filled at, 7 on the dot. This creates a nice wide range to be successful here. If I crank this up to like $9, you're going to see those break evens disappear. And that's because if I paid $9 instead of $7, that assumes I'm collecting $200 less relative to the option that I'm buying here. So really important to make sure that you're collecting at least 50% of the width to get that nice wide break even. But we do need to play around with this implied volatility structure as well, because we will see a vol crush after this earnings announcement. This one's going to be a little bit trickier because on Tuesday, we'll still have Wednesday, Thursday, and Friday before the option expires. So we can look at the easy analysis of expiration on next Friday, which is September 4th. But we'll have to crush implied volatility here as well in the long option. So let's do that first, and then we can mess around with what happens with the 7-day after the announcement. We'll still hold on to some implied volatility value. This is going to drop from the 100 level to like 80 or 70, but let's take a look at the chart and we can visualize the implied volatility range. So if you haven't put this on your chart already, highly recommend doing it. Implied volatility, it's just a 30-day rolling implied volatility. So you can actually see where your IV rank high and low is. 57%, we reached a low in May, but all the way back to March of this year, we hit a low of like 49%. And we haven't gone really below that except for 2025. We got to 35%. But in recent times into this run up, We've had elevated implied volatility, which you should expect into a massive move to the upside and more realized volatility here. But I would say for this year, the low we saw was 43%, but recently after this run up, we haven't gone below 65% ish. So I would say because we're still dealing with an elevated stock price and we're still dealing with some choppiness here, I wouldn't crush it more than like 65%, maybe 60% if you want it to be conservative. But as you can see, we can visualize where this has gone over the course of the year. So hit a low of like 45%, 50%, but in recent times, again, they haven't gone below really 65. We can mess around with 57% and see what that looks like. But let's head back to the curve analysis mode and do just that. So let's take a look here at the analysis. We're going to evaluate at the first. Let's go to the second. So actually, no, let's go to Friday first. So we'll go to Friday. We'll kick this all the way to Friday. This assumes we collect all this $1,200 premium, which is why this P&L is so wide. But again, we've got to crush implied volatility here in the long option. So let's bring this down to like 65% and see what we're looking like. So if we get a crush in the 21-day cycle down to 65% and we hold this to Friday and we get a rally up to 500, we'll have a huge winner on our hands, $1,500. And that's because we're collecting so much value in the short option relative to the long. And of course, the long option will appreciate in value even with the vol crush if we get it down to 65. But let's be more conservative with the vol crush. Let's crank it down a little bit more. Let's bring this thing to 60. Okay, so we're still looking good, $1,300. But as you can see, my break evens get more narrow as I crush implied volatility in the long option because it creates less opportunity in terms of where the stock price can be for this long option to be worth $700 or more. So still looking healthy here. Let's bring this down even more, down to 55%. Okay, now we would need a directional move. We would need a rally for us to see profitability. You can see the P&L Theo by Friday is kind of like a scratch, a small loss here. But if we get a rally, we'll have about $1,000 win, and that's kind of what I'm looking for. If I held this to Friday and conservatively crush this implied volatility down to 55%, we can even mess around with 50%. It's basically right around that $1,000 mark. If we get a big volatility crush, 28 percentage points is pretty big, especially considering we're in the 70s right now. That would be a big vol crush down to 50%. And again, if we go back to the chart and we look at where volatility has been in this thing, we haven't been below 65% all the way through this recent run up into the 400 level. So if we do get a massive vol crush, I'm prepared for it. We just went through the analysis. If we get a sell-off closer to 50% sell-off, a contraction of down to 50% in implied volatility, which again, we haven't seen since March of this year. And that was before this thing quadrupled in price. So I feel pretty confident that we'll be above 50% in the 21-day cycle. But let's bring this back up to like 55% just to be safe here. And let's evaluate at a different date. So let's go to the first. We'll make sure that this is down to 55%. And now we can mess around like, okay, if we get the move to in the first, and then we go to the second. So this is Wednesday the 2nd. What happens if we crush this down to 55% and we get a crush in the 7-day cycle? So this is where it's really going to be up in the air. I can't tell you for certain where this implied volatility is going to go, the 7-day, but I can tell you that by Friday, that 7-day option is going to be worthless. So just messing around with this, as you can see in the option chain right now, you have this cascading implied volatility to the upside, right? And that's what we should expect to still see, 79% going up to 85, going up to 100. So I would imagine we're still going to get a 25% vol crush or something like that in the 7-day. It's still going to be a higher raw value than the 14-day and the 21-day as well. So if I'm crushing the 21-day down to 55%, I wouldn't bring the 7-day down to 55% or below 55% because it's going to stay elevated. So let's bring this down to like, 35% vol crush. This will bring us to 68%, which is a healthy 12, 13 points above the 21-day. I think this is pretty reasonable. If we see a 35% vol crush, bring this down to 68 and call it a day. So if this is what happens, we can still see a nice profitability here, but certainly lesser than if we get the move to Friday and we hold it all the way to Friday. But still, $600 on a $7 debit, love it. So here's the trade idea of the trade idea of the day. That was tough. 500 strike call calendar spread in Dell. I'm pricing in the vol crush, holding it to Friday, about $1,000 winner there. But if we close it on Wednesday and we get this vol crush, we're probably looking at a $500-$600 winner if we get a rally to the upside. But $7 debit, bought the 500 strike call in the September monthly, sold the 500 strike call in the weekly against it. And my plan really is to just close it if we get a rally in Dell to the upside. But if we don't get a rally, if we chop around or if we sell off, I will buy back that short option. I'll roll it to the 14-day cycle, continue to reduce cost basis. We'll see what that 14-day cycle looks like in terms of premium, but I imagine I can pick up another $1 or $2 or something like that to go to a calendar spread again, or convert it to an upside diagonal spread, maybe a crab trade. We'll cross that bridge when we come to it, but ultimately that is the trade idea of the day. Picking up a huge amount in premium in the 7-day relative to the 21-day. $1,200 in the short option relative to $1,900 in the long option. That gives you that nice wide break even and low cost point below $1,000 here for an option that's trading for $2,000 by itself. So I like the trade idea. I like the setup, especially into the sell-off that we are seeing right now. Buying a call calendar spread into a sell-off is obviously a better price point than if you got a rally and you were entering it into a rally. So that's it for me, but let me know what you think in the YouTube chat and stay tuned. We've got plenty more content coming your way right after this break.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Good Friday afternoon, everybody. Thanks for joining. I'm Tom Preston, ready for a little live trading right now. And I want to say, by the way, thank you very much for watching our content at Tasty Live. We're growing the viewership and hitting some record numbers. So thanks for checking us out, and I hope you're learning some stuff and seeing how the platform works and how we manage your money. And again, this is the only place, at least that I know of, where you're going to see us trade live on air. That is something that hey, we're in it just like you are. We are traders. Okay, it's people like to think, oh yeah, your hosts, blah blah blah, talk about stuff. No, we're traders. We're in the same position you are. looking for opportunities, managing risk, trying to make a couple of bucks, squeezing out of this market, thank you very much for joining, and thanks for sticking with us. Anyway, what I have, by the way, also is I have the YouTube chat open. If you have any symbols you want me to take a look at, any questions you have that I can answer, I'd be happy to give it a try in the next half an hour. And by the way, yesterday, Crystal, I don't know if she's on today. Yes, she is. Okay, we're here for the shirts. Yeah, thank you very much. This is the Flame. This is my alternative Flame shirt Friday shirt. I get these. What's the name? I'll see if I can remember the name. Yeah, actually, it's like Warrior Camo or something like Boys Club, whatever it is. Anyway, you get these wacky camo patterns, and they're very relatively inexpensive and very lightweight. It's great for when it's 105 degrees here in Texas. So that's why I wear them. Besides, it breaks it up a little bit instead of the bland old stuff. Anyway, Crystal had a suggestion that we get long the SPX call vertical yesterday towards the close, and that turned out to be a winner. What I did was I bought, I think it was the 77.05, 77.10, something like that, and it kept rallying up, paid $2.80 for it, rallied up, and I put an offer in as it was trading around, the mid price was around 490, 495. I knew it wasn't trading there, and it was well above the strike well above the short strike. I put in an offer at $5. It's max value. Nobody was going to pay me $5 for the spread, but I wanted it working just so I could see it on the trade page to see the prices update, and I just let it go through expiration. So I made about $2.20 on that trade. Anyway, that was a decent trade. So yeah, thank you very much. I take a lot of my suggestions from what you folks put up on that chat. You guys know this better than I do. Well, as far as symbols go, as far as, hey, check out this stock, hey, check out that stock. Happy to do it and give you my 2 cents. Sometimes I can't trade it because it's not liquid. Again, remember, if there's one thing you learn from any of this, don't put on a trade that you can't get out of. You don't want to be stuck with stuff, and that's why liquidity is so important. All right, so let's get into this. One of the questions I saw pop up in here. Thanks, everybody. Thank you. Here for the shirt. Thank you, Crystal. Somebody asked earlier, why is gold down today? GLD is down 3.2%. It was, let's check out a chart. I have some symbols already loaded up in here. One being SPX. So maybe we'll do an SPX trade. I was bullish, by the way, earlier this morning. I turned out to be wrong on that one. So it's down towards the lows. We're up a little bit. GLD was up a little. The reason I'm looking at GLD is it's a manageable product. Gold futures, I trade the gold futures options too, but they're big products. GLD is a little bit more manageable for more folks. Why is it down today? Why is GLD crapping out today? And let me zoom in. That's a good size for everybody to see, I think. Why is it down today? So what happened is Kevin Warsh, the Fed chairman, is out at Jackson Hole, and I couldn't listen to it. Like I said, I was talking to Chris this morning. You could replace him with an AI creation, and no one could tell the difference. Okay? I mean, whatever. Good for him. He's making a living doing whatever he's doing. Okay, fine. But seriously, what did he say? I don't know. I don't even care. All I really care about is that the market, the bonds are down, and the probability of a rate hike at one of the upcoming meetings, September, October, that sort of stuff, is now much higher. So it had from yesterday to today. If you go to CME FedWatch, that's how I see the numbers. CME FedWatch, that is the probability of a rate hike, a 25 basis point increase at one of the upcoming FOMC meetings. So those have gone up. And I think the one in October or December, can't remember, I'd have to revisit that, but it was one of them had an increase in the probability of a 50 basis point rate hike. So what that did was, why is gold down? So the idea is that if short-term rates go up, there is a bias towards buying things like T-bills. And because gold doesn't have a yield, gold doesn't pay you any interest. Okay. So it makes gold less attractive. That's the standard belief. That's, the traditional answers. Why is gold down or up? What are U.S. interest rates doing? Or what are global rates doing? And with the threat of higher rates in the U.S., especially short-term rates, because that's what's happening right now. When we were talking about earlier that the yield curve was flattening out, it was the short-term rates going up relative to the long term. So what the 0 to the 2-year to the 7-year, those rates are going up. The 30 years are going up a little bit, but not as much. And so that's flattening out the yield curve. And that's pushing gold down. It's less attractive to hold gold. That's the answer. So would I buy gold here? I don't know. Let me just show you what bonds are doing, just so I could talk up my position. ZB is down. I'm long the 109, 110 call spread. It's making maybe a little bit of money back. I don't think it's profitable yet. I'm still bearish on bonds here. If for no other reason than just to have a bearish stance going forward, I do think there's a lot of debt that will need to be rolled and, reestablished. Going forward. So just like I have a short VIX put spread, which is long volatility at these levels going in through the rest of the year, I'll sell a put spread, sell a put spread, sell a put spread. Defined risk, small, not taking huge size in that stuff. But as just like I have a bias towards higher VIX, I have a bias towards lower bond prices, higher yields, lower bonds. So that's just my take. What's it worth? Almost zero. It's just it's the strategy that matters. So I'm short bonds here. So you look back at GLD. I don't know if you want to do a trade in this. Let me go to the crowd. Can we do a ZB long put spread? Sure. I mean, I'm already long one. Here's the one I would do right now. Let's just say you were doing this. I would go out to now let's go ZB. ZB. So I'm in the 14 days. I would go out to 28 days. And I would buy with the bond at 109.06. So that's a little over, it's right around here. So I would buy the 110 put, sell the 109 put. Volatility is relatively low in bonds right now, 9.8%. Sometimes it's a little above 10. Now it's a little cheap. But I would buy this. So this is, and remember folks, this 34 is 34/64. So it's a little over, a little over 500 or a little under 500, excuse me. So the point is, if I'm paying, a little over 500, I'm sorry. I was looking at the max profit. I would buy this. This is $1,000 per point. So 109 to 110, big product. I would not take naked risk in here. It's not capital efficient. Do a long put vertical if you're bearish on this. Alternatively, let's see what we get for this one. Not quite. I don't see enough premium in these out of the money calls to sell a call spread. I would lean towards a long put vertical like this, generating 106 of theta per day, 50-50 probability of profit. I would sell the 109s, 110s in the SEP 25s if I didn't have a position. That's what I'm doing right now. Let me get into Crystal Emerald. Let's take a look at BMNR. I don't know what BMNR is. Bitmine, Inversion Technologies. Sounds exotic. $23. Let's check the skew. Let's check the liquidity. It's pretty liquid. The reason I have Vega up here, we could do a calendar spread too, because I just did a video for the YouTube channel talking about how is a calendar spread, is it more impacted by a change in time and stock price or volatility? And it turns out volatility is icing on the cake. But we can talk about that. But that's why I have Vega listed on here. Let's check the open interest. Crystal, there is decent open interest in this stuff. BMNR, $24. Let's see which way the skew is pointing. It's in 80% volatility. That's pretty. How about 0 days? No, nothing in 0 days. Can't do anything like that. But let's see which way the skew is pointing first. 21 days, stocks at 24-ish, down $2, up $2. So the 22 puts are at 80, 26 calls are at $1.04. So they're pointing towards the call side, Crystal. So let's go down and see, do you get any premium for these 7 days? It's not bad. I mean, 25. What's the premium on these, or what's the margin requirement? Margin requirement is steep, $1,600. Here's the deal, folks. I do not. So I'll find. Let's say the way I would start is by looking at the probability being out of the money. Okay. I like to start at around 68%. 65 is close. 73 is close. Either way. But the problem is the buying power effect of this is $1,700. I have to put up $1,700 to make 49. That is not a good return on capital. Let's extend this out to the 21-day options. Again, if I do the 22 puts, $1,600, it's not worth it. Let's see if I buy the 21 puts 30 cents. Let's pull this up here. 34 cents. 57. I like this one. So here's what I like about if I were going to be bullish on BMNR. Go out to 21 days. Give myself a little bit of time for the stock to move up and down. Start with, I started with this. The 22 puts. Too expensive. So I buy the 21 puts to verticalize it, turn it into a short put spread. But the credit's only 28. I like to collect a third of the width of the strikes. Particular in volatility is relatively high in this. Forget the IV rank. Just focus on this 80% number. Problem is, I don't get enough for it. Okay, that's fine. I'm going to find strikes that do give me that return, 34 cents. So what do I have in here? 34 cents max profit versus $66 of max loss. And look, instead of $1,700 of capital and a huge max risk, now I'm at $66. I can handle that. If I'm wrong, I'm going to lose $66. I don't want to lose $66, but that's what it is. By the way, my P50 number, the probability of making half of the max profit, 34, so making $17 before expiration, 72%. Making $17 versus $66 of risk is a pretty decent return on capital. I'm going to ship this off at 34. Take a fill at 34. Thank you very much. Anything else here? BMNR, notice. So, Jermal, I've noticed the MES MNQ options have a drop down with a choice of cash settle or physically settled. The cash settle only goes 21 days. So, all right, yeah. So if it were my choice, everything would be cash settled, including stock options. Does anybody actually want to take delivery of stock from, let's say, a short put, or just factor in all the dividends? It can be done mathematically. Nobody wants it. Yeah, okay, Kumar. Yeah, point B travel, you cannot take days off. There's no parole from trading. Okay, once you sign on as a trader, you're a trader 24/7. This is who we are as people. Okay, it's, we go out amongst the great population, and they may not understand what we're about, and that's okay. That's okay. We know what our purpose in life is, and that's to trade. Everybody else can do whatever they do. That's fine. But we can't take days off. The world is depending on us. So Kumar bought an in-the-money call trade on PayPal. Yeah, I was looking at PayPal too. I may join you on that. So PayPal's earnings are coming, up on September 4th? How about a pre... It's a much... What did Kumar do? The 52 half 57. SEP 18. Yeah, so outside of earnings, so past earnings could do that. What did you do? The 52 50? 52 half 57? Am I 52, half 57. It's a, yeah, I mean, it's not bad. A 5-point here. I might do, let me check the skew. 90 cents. Skew's point to the upside, Kamar. I like that. It's trading through earnings. You got to be willing to do that. But let's say you are. Let's maybe the 52. I would maybe do the 52, 55. I'm not saying I'm not saying this is better, Kamar. I'm not saying it's better, but it's a little less risk. I think you take it a little bit more theta. Theta, the reason you're getting negative theta probably is because the debit of the spread is less than the intrinsic value of the call. I'd have to look at that, but I like that this 2.5 point spread generates 20 cents. Now, I'm not, hey, we're both bullish on it. I'm not going to disagree with your strategy at all. You're going to make more money if you're right and the stock rallies. You're going to make more money on a 5-point spread than a 2.5 point spread. It's just this is a little lower risk, which I like, and positive theta. That's it. Not a criticism, just commenting. Let's ship this. I'm going to join you for $1.28 filled. Let's get this moving here. All right, Opulent again. Wonderful. Oh, thank you. A few of the 50. So Opulent Capital. A few of the 50 IBIT calls. What are your thoughts for crypto plays near term? You had to say. Usually sell premium, but I'm long this time. So IBIT. I was thinking about selling a Condor in Coinbase. So you are 50. Well, the 50 calls. It depends on where they are. So so Opulent Capital, do you have Life from Vienna? PayPal is ugly. Iron Condor. Yeah, fair enough. Vienna. You could do an Iron Condor. I agree. PayPal is ugly, but I'm going to go with Kumar on this one because you know what? Hey, we're all friends here, and it's all defined risk and whatever. Opulent, I don't know which expiration you're doing with these. Buying it out of the money call, there's not a whole lot to do with that. I mean, you could potentially sell it further out of the money call, turn it into a long call vertical, something like that. I think I could see Bitcoin rallying here. Yeah, I mean, it's been beaten down so badly, relatively speaking. Had a nice little rally over the past couple of weeks, but yeah, I mean, if you're bullish on Bitcoin, and I like the idea of Bitcoin in general, crypto in general. So if I'm going to buy it, sure. But would I buy a 50 call? Here's the way I think about this stuff, and I'm going to assume, let's give you the benefit of the doubt. Let's say you're going out to 49 days. Let's say you bought these 50 calls. The probability of touching 50, probability of touch, is 37%. Okay? Probability of touch. That means there's about a 37% probability that IBIT will touch. In other words, it will go up from 43.97 up to 50 at some time between now and 49 days. That's what that number is. If it does, that 50 call is going to look like the at the money does now, so about $3. About $2.50 to $3. So yeah, that could be a good trade. If I wouldn't do it, and I'm not saying it's a bad idea. You have a lot of potential upside in that trade. Obviously, you bought the call. The upside. Not a huge amount of risk. $70 worth of risk right now. And if it rallies up, yeah, you could get a decent return on capital. Even if you get, let's say, a $2 rally in IBIT, those 50 calls are going to look like the 48s do now. So you could maybe sell them for $1.08. That would be about a 30 cent. That would be about a 50 cent, well, maybe a 40% return on capital. That's the way I look at that trade. I don't my opinion on what Bitcoin is doing is no better than anybody else's. Certainly no better than people on this YouTube chat or listening to the show now. You guys have a better sense of where stuff is going than I do. I focus on strategy, probabilities, volatilities, return on capital, that sort of stuff. So yeah, that's how I would look at that 50 call. Okay. Let's see. Yeah, me too. Actually, you have some green in the retail, but very rough day with the SPX. DraftKings moving up. Kumar, let's take a look at DKNG. DKNG. DraftKings. Can we do a 0D now? Let's see, 21 days. Let's see, 7 days. Markets are wide in here, guys. And when I say guys, understand that I mean men and women. Markets are a little wide in DraftKings. I mean, there's a lot of open interest here. 26.39 down a buck. Skew's even. The skew is even. I'm gonna have to think about DraftKings. Let me go up Oracle. Hako Oracle sell the 45-44 put spread with earnings in September 8. Yeah, I was actually, did I have watch list? I do not have Oracle on my watch list, but I've traded Oracle quite a bit. Pretty decent success this. Let's see. What did he do? Long DraftKings. So point B said long DraftKings. Oracle, the 45. With 18 days, SEP 18. The 45, 44. Yeah, that's not bad. I would actually stretch this out a little bit. Let me see if I can go down here. So what I'm going to look is a 1 point spread that I can get a third of the width of the strikes. Can I go even further? Can I widen these out? Yeah, so if I do a 2 point spread, markets are a little wide. So here's what I'm doing. I'm stretching these out for a 2 point spread. If 1/3 of 2 is approximately 65. So here I'm getting long to 36, short to 38, 21 days. Here are the metrics. Here are the metrics that I care about. 75% probability of making half of 65, so about $32 versus $135 max loss. That's a decent return on capital. I'm generating $1.12 of theta per day. Those are the numbers that matter to me. Do I know which way Oracle's going? Nope, I do not. I agree with Hako. Okay, fine. Hako, sure, fine. Ship it, 65 cents. I'm going to do, he did the 45, 40, 44, 45. And by the way, in trader language, lower strike to higher strike. So he is short the 45, the 44, 45 put spread. I'm short. I'm going to sell the 36, 38. And we don't always use the full, right? The 136, 138, 36, 38. I look at Oracle. Oh, I know what you're doing. So I'm going to ship this off. Dang, I missed 65. Let's do 65 anyway. Let's make him work for it. All right, ship it. Boom. Let's do, you know what I did a video on calendar spreads. Let's do, just for the sake of argument, let's do, what do you think, folks, about a bearish calendar spread in Qs? That's what I was looking at earlier. A 42-day 80, and I never go out this far, but you know what? It's time to throw some curveballs. It's time to do some stuff a little bit different. Let's do, how low do you think Qs are going to drop? Anyone? Yeah, clearing tigers. September rate hike chance increases the narrative cover up. Yeah, I like that. Seriously, you know, it's all a story. It's and that's why I don't really care about Jackson Hole. That's why, you know, I was talking to Chris Vecchio yesterday, and he said, yeah, the reason that they do the thing in Jackson Hole is back when Paul Volcker was the Fed chairman. The only reason to get him out to that meeting was for fly fishing in Jackson Hole, Wyoming. I don't have the patience for fishing, but yeah, I would go out to a pretty resort and hang around or whatever. Paul Volcker would have zero interest in going out and listening to a bunch of economists go blah, blah, blah about anything. Okay, now he's dead. But, you know, I was pro Volcker. I was in college at the time, but I was pro Paul Volcker. Personally, I couldn't do that. I'd have to do something else. So I'm going to look at, let's say the 690s or the 685s. If I buy, let me start with the 42-day. I'm going to sell an option, 690s. I like the 698s. Because they have a high probability of expiring worthless. I'm going to sell the 698 puts here, buy the 698 puts here. No, they don't have them. Let's do the 690s. No, let's do the 695s. So I'm going to buy the 695s in the 84 days, sell the 695s. Oh, for Pete's, yeah, there you go. 695s here. Pay $7.90 for it. And the idea is that even if the Qs don't drop, this trade can make a decent return on capital. I'm going to ship this off for $7.89. So tune in to the YouTube channel for that video. It should come out at some point in the next few days. The 690 low. All right. So yeah. So Cronin, I did the 695s. If we get down to 690, that thing will expand in value. Let's see. Long DraftKings expecting $70. Yeah, for next week expiration. Yeah, I mean, if it works, it works. Yeah, I mean, that would be a pretty sharp rally, Kumar. All right, I have to wrap this up in a minute. I had so much hope for all these. I want to do a Monster trade. I want to do a Dell trade, Palantir, Microsoft. Let's sell Microsoft put spread. Just get it done. Let's sell it. Come on, let's do it. Here we go. Ship it. Now let's pull this up. Pull it up. 67 cents. Yeah, there it is. There's my trade. 2.5. No, it's not it. That one. Let's do that one. Ship it. All right. So that is, we did some trades, did some trading activity. I have a lot of stuff to clean up. And I have some positions on that I put on in the 1 p.m. show last week. And hey, you guys have given me some good trades in the past, so I follow along with you. So we are coming up with some new scheduling next week. I will be on 10 a.m. with Chris Vecchio to do the Confirm and Sense. I will do another special session. I believe it's 11:15 in the morning for some live trading and what I'm doing right now for 15 minutes. And I will be back on at 1 p.m. for a half hour of live trading. So if you have any questions, it's tp@tastylive.com. I'd be happy to try to answer them. Any trade suggestions, send them to me, post them up on here, and we'll see if we can find one. So folks, have a good weekend. Let's see how the market treats us going out into the close. SPX down 22. I will see you next week. Stay tuned for Chris and Ilya for Back to the Futures.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
We're back. You're still watching Tasty Live. Welcome back to the futures for the next 28 minutes as we get ready to wind down this trading day. Still 90 minutes to go here. Ilya, the futures market is certainly a point of focus today because we're keeping an eye on those rate hike odds. Rate hike odds have skyrocketed along the 2 years today, but I'm going to got a problem with this. So we'll get into it.
Me too.
Well, I think you and I have very different interpretations of how the bond market is behaving. But we'll go over to the rates conversation momentarily. Stocks have turned around. It was a good day today in the sense that there were some things that I was sitting in short iron condors earlier from this week, Ilya, where stocks moved violently around the earnings. I was able to take off one side and not the other. And so for a name like NVIDIA, we dropped below the short strike in that trade here. So with this resettling back in at 218, I'd use the opportunity to get out of the short call spread side for $1.03, which was pretty good considering that it was like a little bit of a 60-cent gain. So it went from being a pretty decent loss, use the opportunity today for the reset, for the recentering to get out. But other than that, Ilya, the rates conversation to me is the most important point of all.
Oh, without question.
Because of what we're seeing in all the rate sensitive sectors, if it's real estate, utilities, if it's the miners for gold, silver, and then the Russell is your biggest loser here today as well. So I'll give you the floor for what you think is going on with bonds, because I heard you say going into the trade of the day that our bond stuff isn't working. My bond stuff's doing great today. I'm feeling really good about how the curve's behaving.
Well, so this is the essence, right, of what we see across the entire thing. Now, thankfully, I don't have any exposure to the front end because that's where you're seeing it. I'm at the long end. At the long end, things look exactly as you might anticipate. They're not really jiggling that hard with what's going on here, because what seems to be occurring is a push up in rate hike expectations in the wake of a Warsh speech that I don't think said that, or said much of anything. And that was the point. And so it's interesting, but the price action is unmistakable. So gold is down hard. Silver is down hard. The dollar is up hard. All of the rise in yields looks particularly pronounced at the front end. So ZT, that move is big. ZB, that move is not big. But what's most interesting for me here is when you look at, and I thought this was a tell early in the week, if you look at the breakout in TLT, where you have a blend of maturities that's not quite ZN, not quite ZB, but something in the middle. When you look at that breakout, it's holding.
Ooh, that's why I said we're going to disagree on things.
So in my mind, if you put a horizontal line at the prior low, that's the line in the sand, the prior low, the one from back in May. That, to me, is the breakout. So I look at that and I go, okay, what we're seeing here is perhaps laying the foundation for a move that is going to be a tremendous opportunity. Because if in the context of this, the pullbacks as they present themselves in euro, in pound, in Aussie, in gold and silver, hold at these levels here, then they are retracements and not a trend change. And you're seeing those technical levels hold here. If this is what this is, this could be a tremendous opportunity across this whole debasement narrative.
So I think everyone was focusing on, why is Warsh's statement being considered hawkish by most folks? Because of the 2-year yield move. Ilya, we know that the 2-year yield and rate hike odds tend to move pretty hand in hand. The 2-year yield, in fact, probably moves before hike odds do. When we look at the history of how the market and hike odds have behaved, the Fed ultimately follows the market. The market moves there first. So 2-year yields are spiking today, and in turn, rate hike odds are going up. But
aggressively too. At this point, September is a lock.
Tail wagging the dog. Okay.
Yeah. That's what I agree. Yes.
September is not a lock. September's not a lock.
I completely agree with that idea. I don't think we're getting a rate hike in September, which is why I look at all these moves and go, I don't know about this.
All right. Well, because we're not getting a rate hike in September, that's why I'm really confident about the bonds fading off today. The number one thing that Warsh said, he's talked so much about how, and this is what he was trying to do, by the way. He's trying to hide this in his speech. He mentioned the word hike 5 times, I think, in the first 3
And it had to do with hiking.
Yeah, but the point is
to spoof the algorithms.
Spoofing the algorithms. So nice little trolling there, Fed Chair. We appreciate that. But when you look at the duration of his speech, he specifically says the employment side of the mandate is satisfied.
Mm-hmm.
And clearly they're not satisfied with happening with inflation. And there's more work to do. That sounds hawkish. 2-year yields are up. SR36 is cratering. This is what he was trying to hide. He specifically, in the mid to the latter half of the speech, he talks about the reaction mechanism between the Fed and markets.
Mm-hmm.
And what's been going on in his view for a number of years is that the Fed, because of their forward guidance, has a number of criteria that they look at. And so then the market goes, okay, we're going to do this because we think this is what the Fed wants to do. And then the Fed turns around and goes, what's the market saying? This is an independent data point. And they go, okay, the market's saying X, Y, Z. Oh, so what we're doing and the way we're interpreting things is correct. When in reality, the market had been conditioned to a QE era mindset, which was the Fed was going to say, these are the conditions for keeping rates low. Until they're met, rates are going to stay low. So you could constantly fade any bump in rate hike odds and just look for that spread to close and pick up pennies and nickels nonstop through the 2010s, just if you listen to what the Fed was saying. Powell is saying that he does not want the Fed listening to the market listening to the Fed, in a house of mirrors.
Let's not besmirch the good name of Jay Powell. Otherwise, I'm completely with everything you're saying. Keep going.
So it's a house of mirrors. And he wants this house of mirrors thing to break. He doesn't want rates to be going to a certain place because the market thinks that's where the Fed wants them. He wants the Fed to be able to look to the market as an independent observer. What has the market been screaming to us as an independent observer for months now with respect to Fed policy and this new communication style? You got to raise the damn rate. You got to raise interest rates.
They've held at least one hike in the outlook regardless.
They held one hike, and the market's moving towards a September lock-in. No, the 2-year yield is up today because now the market is screaming at the Fed, you should be hiking rates. That's not saying the Fed's going to listen, but the market's moving today because it's, you don't want us to be in a hall of mirrors anymore? Well, we already jacked up long-end rates, and you're fiddling around in that portion of the curve. Water finds a level, Ilya. And we said last week, if they're going to mess around in ZB and rates got to go up, where they're going to go up more then? It's going to start to pressure the belly of the curve. And so ZN here, this looks like a bear flag to me. I'm still short the call spread here. ZF is going to close at a yearly low today. The curve is screaming at us now.
I am not touching. I mean, I agree with that interpretation. I think that interpretation makes sense.
So then
in my mind, what's happening at the long end is a different thing. I think what we see in this kind of stability at the long end is actually very interesting. You and I have had this conversation.
Can I add one more point to this?
Yes, please.
Beth Hammack, the Cleveland Fed president, is out today prior to Powell. Powell again, I miss him. Prior to Warsh speaking. And she's saying, we're clearly not going to get to 3%. We're not going to get to our target by the end of the year. We're not doing enough on it. Essentially saying
we know
we need to hike rates. Okay.
Yes.
She's saying that in his speech. If I give a speech and I go up there and I reference Milton Friedman or Paul Volcker or Ben Bernanke or names Alan Greenspan, and if I only mention one person and talk about their mindset and their way of viewing the world in a very specific manner, people think that, I'm trying to get people to understand, how would Milton Friedman do it? How would Ben Bernanke do it? Right? He speaks and specifically references Chuck Yeager today. Now, Chuck Yeager, for those who don't know, is a test pilot. America's most famous test pilot, perhaps. We don't have the aviation industry that we do these days without his daring pursuits after World War II. Legitimately, look up his Wikipedia page. It's incredibly impressive. There's documentaries on him. He died a few years ago. Okay. But Chuck Yeager is a guy who, not trained in economics, not trained in finance, grows up dirt poor in the South, joins the Navy, fights in World War II, awesome ace pilot. Technically not an ace. I just watched Top Gun 2 last night, so I don't know if he had enough kills to be considered an ace, but unlike Maverick. But he then goes into aviation testing. When he's saying to you, Ilya, we need to be paying attention and get the insights of the Chuck Yeagers of the world, he's telling you that he's paying attention to people who aren't monetary authorities. He's not listening to the Beth Hammocks of the world right now. So these Fed officials that are chirping, we need to raise rates in September because inflation's still not arrested. He's telling you, I'm paying attention to the task force, the non-monetary folks that I brought in.
That's exactly right. I mean, that's a very, I maybe agree more with the conclusion than I do with the readings of the Chuck Yeager tea leaves necessarily, but I think the spirit of what you're saying is exactly right. And I didn't get that deep into the weeds of that part of the speech, but it makes sense to me. So
I'm Charlie Day looking for Pepe Sylvia over here.
I mean, I get it. I think you're exactly on the money in the sense that I think what Warsh meant to be saying in this speech is not that, oh my God, inflation is an issue. We need to act immediately. Because I think really all of that part of it, we've heard a gazillion times now. From his first press conference to everything else he said since. What has Warsh been saying? We need to get price stability back. We need to get price stability back. We need to get price stability back. And what did we get in his last conversation when he was testifying? He was saying, well, see, look, we haven't had to raise rates, but our communication about this has had a reaction function in the market. Look, this thing I'm trying to do where I have a dialogue with the markets that flows both ways. Look, the market is listening. So Warsh very clearly, in my mind here, is trying to say nothing but to basically just acknowledge what the problems he sees are. He's not committing to action. He's jawboning. And we know, because the theme of this Jackson Hole was financial innovation, what his general view on structural rates is. He thinks slower because AI efficiency. And so in my mind, you look at what's going on at the long end. If this was still the dynamic we had in February, March, April, where you and I were talking about, well, the market looks at the data and looks at the Fed and just moves the rate hikes, moves them forward in time, backwards in time. And you can see it across maturities. We saw a lot of urgency in the 2-year, and nothing got taken from the 30-year. Nothing got taken from the 10-year. We would have seen a rally there if this was still, we're pushing the rate hikes along the timeline. This is not what this is. I think the markets are looking at this and going, Warsh doesn't want long rates to be higher.
But he also doesn't want to hike.
And he also does not want to hike.
And you can't have it both ways.
Unless the bogey is no longer the Iran war and oil. And to do that, you just have to wait, is what I think he thinks. Moreover, if you look at the data, he's got evidence on his side.
Atlanta Fed GDP right now is 4.6%. Like there's no short-term
That's
pathway.
down from 6 2 weeks
ago. But it's still 4.6. Secular stagnation was 2% growth.
To me is meaningless as a number, even though the model is very meaningful as a model, because the actual update, the first time we're going to get third quarter GDP numbers is late October. We have time and then some for this number to move.
Oh, yeah.
To me, the most important thing is the
we have
direction.
6 weeks. 6 weeks before we take it.
Yeah, this thing might be at 1 by the time we get to October, or it might be at 8. Who knows?
Might be back at 8.
My point is that
going.
At this point, I don't care about what the number is. I care about the direction of travel. And the direction of travel for U.S. economic data since we started to track the third quarter is down.
Even the Chicago PMI came in today more than 10 points weaker at like 47.1. Inventories, production, new orders, they were all softer. The prices paid component was the highest level.
It's very muddy in the data because you see this. You're absolutely right. You see this, and then you see the S&P global PMIs, and they're, white burning hot. Though even in those numbers, the inflation measures were lower.
So Ilya, because I have this view that differs than yours, that rates are going to be going up because the market's going to say, oh, you don't want this to be a hall of mirrors anymore? That's fine.
Maybe. No, I don't necessarily disagree with you on that.
So Russell today, it starts to break down here a little bit. Out at 33 days to expiration. I mentioned this a few days ago where when the market was bouncing here, I was sitting in the short put spread, the 29.50, 29.75. Okay, it's just below the 50-day moving average. I was in for about 680 at credit. It was up about $4 or so, not quite the decay I wanted. I decided to stick with it. I ended up having to take it off at 680 at credit. So flat. I just used buying power for a few days. The plan was if this thing starts to go below 3,000, look to get short because it looks like a head and shoulders pattern to me, especially on a lower term time horizon, like 8 hours here is a good example. Big left shoulder head, lower slouching right shoulder, which is kind of perfect what you want to see. It speaks to that loss of momentum and people kind of giving up. So we get below 3,000 here today, Ilya. I put on the double bear here, or the super bear, as Mike and Jermal would call it, in the Russell, the 30.50, 30.75, 29.25, 2900. This was also my trade of the day. I do that on the basis that this is a market that, and I could collect $3.50 of credit still if I were to put it on right now, which is decent enough. But the idea there is that this is a market that could be seeing acceleration to the downside. And we know that the small caps are the ones that have been more rate sensitive in years past. And the way that the small caps were struggling all session long, even when the S&P and the NASDAQ were still up, kind of was a little flag for me. Like kind of
that certainly. You see Russell echoing these moves in the 2-year, even on an intraday basis, and it sort of falls in with this whole 2-year moves, dollar moves, gold moves, Bitcoin. Like you go across assets, Russell is right there.
Right. So then the strike
in a way that the S&P and the NASDAQ, to your point, are not.
No. And so strike selection deliberate was because of where the market had been, operating in recent days. Over the past week, it hasn't moved higher than 3,028.90. And so the first strike above there is 30.50, 30.75 at $9.30 a credit. By the way, if folks were like, you know what, Chris, I just want to be directional. I don't need the kicker. Sometimes you get like a pina colada at a resort and you get a little extra shot of rum there at the top, a floater, a little kicker. I don't want the extra kicker of the put spread. Would the call spread side itself fit the criteria for how we, typically operate around here? Yeah. On a $25 wide strike, we want $8.33 a credit as kind of a place to look. This is offering $9.30, and it's still a 67% probability of profit here. So I'm very content with how this trade's structured. I wanted the kicker. Why 29.25? The head is 3,079.9. The neckline is, we'll call it 3,000. I think it's 80 points, Ilya. 3,000 less 80 is 29.20. Looking for a long put spread that's tethered to, say, 29.25. And because volatility is so low, if this thing moves lower by 10 or 15, 20 points and there's a vol expansion, this trade can work and I could be able to flip both sides for a little gain, even if we don't get all the way down to the long put strike near 29.25.
I can see it.
So that's how I'm happy with the rate stuff. I wanted to use this opportunity because I knew we were going to disagree. I love me a bearish engulfing bar here, Ilya. Above yesterday's high by just less than a tick, below yesterday's low. We were above the 50-day today. We're going to close below the 50, the 1 week, the 1 month on that reversal. That seems meaningful in how I
mean, to me, that looks like a series of higher highs and higher lows.
We're not going to agree, which is why I'm going to get more short this market. I'm going to give this a little bit of time.
I got more long yesterday, so I'm not going to get any more long. Like I've already doubled my exposure from midweek yesterday. So I'm gonna sit on this for a second.
I'm with you. I think bonds will be higher at the end of the year than where they are today. I think it's going to be a
then we don't have a disagreement because I
think we have like 2 or 3. I think we have like 2 or 3 points beneath us though, before the market starts to scare the shit
I'm
out
not
of the
concerned
Fed.
about that. I mean, you can have your 2 or 3 points, and we can say this isn't even a disagreement. I've got 49 days to expiration here.
Okay.
I don't care. I mean, you could have your few points, and then we'll go to where I'm aiming on TLT, and that'll be just fine. Godspeed, sir. I'm here sitting.
Otherwise, because it's all the rate sensitive things, Ilya, the stuff that doesn't really offer a yield is getting face slammed today. I always love posing the question to folks, what's the yield on gold? How do you estimate that? Because you can estimate the actual yield on something like gold or silver. Because it's an actual commodity, it requires storage and security. And so JP Morgan has done this study for a number of years, but like they've computed that the rolling 30-year average costs, the yield for gold is basically minus 2.2%. So all things else held equal, if you want to buy some gold in the market, there's nothing else going on, you're going to lose 2.2% a year, effectively. So when rates go up, what are you going to do with something that has a negative yield? That spread widens out. Okay, gold's off, silver's off, Bitcoin's off a little bit. Is anything broken? Bitcoin is at its 5-day moving average. It's closed above it every session since August 17th.
This is the essence of my trade of the day today. Is any one of these things broken?
No, gold's bouncing from the former highs right near the 1 month is. And I specifically had put a trade in right at these levels here, 44.75, 44.50, looking for the market to hold up here. This is based on
trade of the day. I went through all of them one by one because I have just a ridiculous collection of these bets across different tickers that all basically say the same thing. And none of the debasement ideas are crossing red lines. They're all settling exactly at where the last kind of stair step was and saying, and that also makes you look at the 2-year and the rate hike odds and go, which one of you is the dog and which one of you is the tail?
That's why I'm looking at these hike. You spend enough time around the market, Ilya, and you see the 2-year yields are going up because the Warsh tells us you don't need to listen to what we're saying. I know that I'm telling you that we may not raise rates, but have your own opinion. Think for yourself, market. And the market goes, okay, well, if you really want to know what I think, rates should be higher. That's what we think. Interest rates should be higher. And so if the Fed is now telling us that they're going to listen to the market, that's what makes the long end of the curve complicated. Because if the market keeps jacking up 2-year yields, Ilya, then the signal it's sending to the Fed, and the Fed has to listen, of course, is you need to raise rates. And if Warsh is going to be a Fed chair that listens to the market, then the long end of the curve shouldn't suffer that much more. That's why I'm with you on maybe by the end of this year, the long end of the curve is in a better place than it is right now, but it's going to take some beatings until the morale improves before we get to that.
Consider the following. Let's consider that Warsh, as you've described, and I think very compellingly so, has gotten the market to go, you know what? You want a rate hike? Tell me you want a rate hike. Go ahead.
Today.
Tell me you want a rate hike. Right. We're not going to get the rate hike.
No, that's exactly my point.
But that's exactly it, right? What does
the bond market need to do then? If it's like, you're not getting the message, let me say it a little bit louder for you next time. If we don't hike rates in September, Ilya, the bond market's going to implode. It's going to implode.
Well, we're not going to hike rates. We're not going to hike rates in September.
I know.
So
that's why I'm so bearish on bonds. So I'm so bearish on bonds, and that keeps the debasement trade alive.
I don't think that lives at the long end. I think what you're about to see is Warsh essentially getting the market to give the rate cut that the president wants without actually cutting anything. Because if he leaves the markets hanging in September, the market is going to go, oh my God, we read this whole thing wrong.
We are completely offsides and overshoot the other way.
Oh yeah, this happens to be the time of the year when volatility tends to rise. We're not quite to the end of August just yet, but the August to October window, 11.4%, 11.04% higher, in VIX over the past 15 years, 7.15% higher in September, 2.83% higher in October. This also lines up with the window when bond vol typically goes up, and it hasn't really got up yet, but 10.3% higher in August, 5.6% lower in September, but then 10.1% higher in October again. And we think about where the Fed meeting falls, it's usually in the second half of the month. So maybe some of that October volatility. Oh, and we also have midterms coming up too, which once you get through Labor Day, folks, the quiet before the storm is ending, right?
Oh, yes.
But I don't know why I keep going back
this
to
this may have been actually the end of the quiet right here.
It's like
it oftentimes is, by the way. Walsh
like
didn't want to have a Jackson Hole with guidance.
No. Unbelievable. No, it's like the scene in Helm's Deep, right? You're just waiting. We know that these things are coming down the pipeline. These are known events, and so sure, why should we all be worked up about them? But Ilya, the way this market's responding today, stocks softer, the small caps leading lower, the rate-sensitive sectors getting hit the hardest, the non-yielding instruments getting slammed more than anything else. Market is screaming. Look at that 2-year note today.
Yeah, no, that's the market telling you need to hike rates right now. That's what we're demanding. You need to come in September and you need to raise rates. And he's not going to do it.
Which sets up the very fascinating...
They're not going to do it.
What sets up the very fascinating conundrum where maybe the rest of the board outvotes Warsh, and Warsh takes the stand that he doesn't want to hike. But right now, there's a 57.7% chance of a hike in September, Ilya. And
the market wants it.
Not only does the market want it, we have never seen the Fed not hike when there's been at least a 55% chance of it being priced in. So let's see if we get to that September 16th meeting day and the market's favoring a hike and Warsh is trying his darndest not to do it. But hey, we'll be back in 30 minutes. Last call is coming up. I'll take you through the end of the day. Between now and then, though, we have our Bears Bear here. We go from one bear to another. Ilya Spivak to Tim Knight. Slope of Hope himself coming up next here on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Hello, everybody. Tim Knight here. It's Friday, and we are past it all. Thank you, Jesus. We're past NVIDIA. We're past Mr. Warsh and Jackson Hole, and I am breathing a sigh of relief. I'm excited because all those there are uncertainties to begin with, but also those opportunities for nonsense have passed us by. NVIDIA did their nonsense. They were talking about what their percentage revenue growth would be in 2028. Seriously? Seriously? You think you can tell us that? How about tell us who's going to win the presidential election while you're at it, if you're going to predict out that far? Nonsense. Kevin Warsh, if I was wearing a hat, I'd tip it to him right now, because for all these years, what I've said is just once, I want the chair of the Federal Reserve to stroll up to the podium and wag his finger at the press and say, it is not our purpose at the Fed to please the market. We're not here to give you opportunities. We're not here to do your bidding. We're not here to make you rich. We have our mandates, and bugger off. Today's speech by Warsh came as close to that as I've ever heard. It was like 12% of it, but it was way closer than the sycophantic silliness of the Powells and the Yellens and the Bernanke. So definitely Bernanke. It was, for the Fed, it was a pretty big middle finger to the market. What was odd, though, was that, and on a personal anecdote nobody should care about, I woke up this morning in bad shape. For my readers on Slope, you know that I woke up for the first time in my life with vertigo, which I didn't even know was a thing until I got it. And it was like somebody had put me on the worst crazy amusement park ride on the planet and then shoved me off. Everything was spinning. And it was awful, and I don't recommend it. And my readers have written to me basically saying, get used to it, fella. But it was a terrible thing. And it would have been terrible on a Saturday, but to have it on Jackson Hole Friday, no thank you. I've got positions to manage. I've got opportunities to look at. I've got to pay attention. This cannot happen. But I was in horrible shape. But it worked out. I managed to shake it off. As you can see, I'm still standing. So I was able to push through all that. And so I was waiting woozily for Mr. Warsh. And the market was quite green in anticipation of, like, will he announce QE12? Will he give every trader in the country $1 million? Who knows? And he went up there and he did a speech. And he talked about the importance of Fed humility. He laid out principles. And, used the word market, without hinting at it, saying that, we're not here to serve the traders out there. We're here to serve the American public. And the market, I guess, was disappointed for a bit and softened up. And it's like, cool. Not only because I guess they issue the entire text of the speech immediately, and then he actually utters the words. But the market was starting to soften up some. It certainly wasn't like up 90 on the ES like I was terrified it would do. And then he finished the speech. It's like, whew, that's over. Well, it wasn't over. Then it started climbing. And I don't know why. I was baffled. I was confused. Like, wait, he's done. What is he? Did he have a second speech? What's going on? And it went blasting higher by about 30 plus points on the ES. And then it stopped. And again, for no particular reason, but I will gladly accept that, it started falling. And we are near the lows of the day on the ES. We are near the lows of the day on the NQ. And I will also say, before I get into the charts, that I've mentioned from time to time that, portfolios have a personality. And there are times that I'm entirely short and the market's falling and I'm losing money. And that is a bad feeling because I've made, for the moment, bad choices. Today was just the opposite. When the ES was raging higher, when the NQ was raging higher, when it looked like speech or no speech, the bulls were going to win again, my portfolio was profitable the whole time. Not massively, but a little. And it could have been up a penny, and I would have been very heartened by that. Because this was a very green day. And my portfolio was just like making all kinds of obscene gestures and saying, no. So it was profitable the whole time. It goes without saying that when the market started falling, then it got really profitable. So, it looks like a good day. And as I say, good day or no, the fact that we're behind this silliness is exciting because not only is this junk in the rearview mirror now, but we are heading into the one time of year that you can pretty much count on volatility getting higher week after week. And the last chart I'm going to show you speaks to that. So stay tuned for that. Okay, it's chart time now that I've gotten Warsh off my chest. What you doing? Oh my goodness. Hang on a second. Is this thing acting up? This has not happened before. This is bad. Little technical difficulty here. I'm not quite sure what's up. Yeah, I think what we'll do is we're going to take, I'm going to powder my nose for 15 seconds. We're going to stop the share. I'm going to reshare, and we'll see if this shakes it up. Because you know what? Computers have been around for over half a century, and they still don't have them right. So give me a sec. I'll be right back with the charts. Stay where you are.
Coming up on on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about.
That wasn't so bad, was it? Let's get into the charts. We're going to start off with the spider. As you can see, we are still range bound. We have the lifetime high up here. We've got this gap down here, and we've been kicking around there for about a month. Ain't no change. We did flirt with lifetime highs, but we are at the lows, roughly the lows of the day right now. And as I say, my expectations were pretty much unchecked terror today. So the fact that we're down at all, huzzah. Bonds, as you might guess, are paying close attention today with Jackson Hole and with Warsh, and they're down about 0.25%. The funny thing was that I had put this horizontal, I'd anchored it to this price bar just because. I mean, it was sort of kind of approximately where I thought the line in the sand would be. And the cool part was, look at this. Today's high matched it exactly. Probably more luck than skill there, but kind of amazing to me that they exactly tagged that and reversed away from it. So bonds are also down. And, they're both down not much. ES is down about 0.25%. Bonds are down about 0.25%. But listen, close the day down a penny, no problem. That's all I ask. The diamonds are also down about, not even 0.25%, just a few hundredths of a percent. No real meaning to the bar today. It did not break the trend line. It did not burst higher. It's just kind of hanging out roughly where it's been all week. But this trend line remains key. We've got to break that with some gusto to make things interesting. I was going to look before the camera clicked on, but I didn't. I'm not sure what news is coming out in the forthcoming weeks, but as I say, the giant stuff is out of the way. I think the only report of note coming is like in a couple of weeks when we get the jobs report. But yeah, the coast is kind of clear right now. The cubes are down decently. Now, naturally, with the NVIDIA news, yesterday was very strong in tech. It was very strong in semiconductors. And where we're at now is below the open yesterday. It's been kind of an inside day. And the range yesterday is kind of like today's range too. So the fact that we've dispatched with those gains, again, right on, like it. Because I made mention as I was going through the week, my intent was to increase risk. So Wednesday, about 80%. Thursday, about 125%. Today, about 160%. So as we're beginning these landmarks behind us, I've been increasing my exposure. And just one ETF here that's worth a quick glance is the S triple cube. And this is the triple bearish ETF, which is kind of an interesting critter because back here it had based for a long time, had this brief moment in the sun. And that was, this whole shtick was when the war was first breaking out and everybody was worried. This collapse here was due to that massive, pretty much AI mania going on, irrespective of what was going on with Iran. And then we formed a smaller range here, which I think we're starting to gain some strength. And I would not be at all surprised to see what happened here repeat itself here. I'm not trading this, even though we have that prospect, because I'm trying to keep things sane. But I have expanded my own positioning to 34 different shorts, which I've spent all day housekeeping, and didn't get stopped out of one of them. So that's pretty cool. but I'm keeping it simple, not doing this leverage stuff. Now, NVIDIA is down, and this merits a moment because, oh my goodness, look at this. Let's just drink this in for a second. Let's just drink in the facts. We are now way lower than yesterday's low. We are getting in the vicinity of Wednesday's high. And what that means is that the triple-digit % increase in revenue, beating revenue by billions of dollars, beating all the profit estimates, jawboning away about how this future's so bright you gotta wear shades, and yammering away about 70% revenue growth in the year 2028. They should do 2059 while they're at it, as long as you're going to just make stuff up. All that goodness, all the mayhem, and all the Kramers of the world high-fiving, it's moot already. It's all gone. It's as if it never happened. And if you want people's face to go sheet white, get us below this bar, because it means all that good news, I have to keep this G-rated, will be rendered irrelevant. So that's pretty righteous, don't you think? Big old bearish engulfing pattern. And we're frankly not much higher now than we were in last October. With all that's happened since then. So NVIDIA's kind of lame, actually, if you think about it. Because if you look at, say, like an Anthropic, its own valuation, spicy though it may be, is hundreds of % higher than it was a year ago. NVIDIA is net kind of an oil painting in spite of all this. Plus, they have the massive risk of being, as I read about it, is very aptly put, AI's central bank. That's very astute. EEM, the emerging markets, is down. Bearish engulfing pattern on this one as well. Down about 0.8%. And South Korea, which I was short and am short, is down almost 1%. And what I would love to see, as you probably gathered, is for semiconductors to really enter a whole new swoon next week, now that NVIDIA's in the rearview mirror and people sort of contemplate the valuations that are out there. I'm glad I waited on gold. I'm glad I waited on silver, because lest you missed it the first 8,000 times I said I'm a long-term bull on precious metals, but I think it got way too far, way too fast. I thought it was time for a hard reversal. There's a young fella who I like quite a lot, who writes a newsletter specifically about precious metal bullishness. And he's been very giddy lately and been talking about, basically kind of the sky's the limit sort of thing. And I wouldn't say it to him, but in my mind I'm thinking, be careful, because I've been where you are in a different form. I mean, back in, let's say, early 2009, it's just like, the world's going to burn down to a crisp. And if things go your way for a while, it can really go to your head. So it makes all the sense in the world that this thing is just like barfing at this point, because gold is down almost $160. And as far-fetched as I thought it might be, the notion that we could pound our way back down to this rectangle is more likely now than it was yesterday. This is falling pretty hard. And so I'm looking forward to potentially getting precious at better prices than they were earlier this week, because they were getting awfully rich in the short term. GDX, the miners, also have just thrown away over a week's worth of gains, just whoosh, right in the dustbin of history, and bearish engulfing pattern there too. And naturally, the ETFs designed to benefit from this are doing very well. Here's dust, which is up over 8%. And here again, this is leverage. These are short-term plays, but that's doing nicely. Let's also talk about crypto, which finally is seeing some selling, because it's been relentless. I'd spoken about the big round number situation, $80,000. I'd spoken about this trend line, And it was a little worrisome yesterday because we were getting, kind of a second wind here. But we've undone yesterday. We've undone Wednesday. We've undone Tuesday. We've undone Monday. So we've fallen here back to 77,500 away from where we peaked at, almost $4,000 higher. And that could be a good step in the right direction because just, to repeat myself, I think we've opened up the prospect of a move back down to the upper 60,000s. And I think that would be contemporaneous with value price in gold. And so I'm looking forward to that potentially. So that's encouraging. The stars are lining up. If we need a title for today's YouTube video, I think that's a good one. Things are definitely clicking along, and this is going to be a good way to end the week. Vertigo notwithstanding. BITI naturally is up almost 3% after getting just hammered mercilessly for weeks. And as I said yesterday, I had one and only one short, but it's a good one. This is strategy. MSTR actually added to this morning after Worsh was done, but we're down over 7% on MSTR. And I think that a sensible target, and it could beat it, but I think a sensible target's down here above 106. Seems like a not crazy goal to hit. But naturally, the junk stocks, the garbage, the detritus of this sector is getting hit particularly hard, just as it was lifting itself in a very robust fashion earlier. So American Bitcoin, the Trump boys' Bitcoin play, one of them, is down 14%. I would note, by the way, that this was a huge run higher, but all it did was reduced the loss from tip to tail from 98% to only 96%, something like that. And this is percentages are funny beasts because on the one hand, this went up 60% in a matter of a couple of weeks, but on the other, it's still that 96%. And we're heading back toward that 98 right now. So hard fall on ABTC. Ethereum, likewise, is turning away from this level that I pointed out. We got close, but we did not even tag it. So it's down over 3%. And in turn, things like Tom Lee's Bitmine Immersion Technologies, BMNR, is off like double that almost. So all kinds of good things happening. We got 10 minutes left. What should we talk about? Oh, semiconductors. That's always a good topic. SMH came into the day short. This is my larger short positions, down over 3.25%, and slashing nicely below. And so we're basically trading now where we were trading at the open on Monday, I think it was. I guess that was Tuesday, but down nicely. And the pathway here is this zone you see, because we've got this ascending price channel. We've got our diamond, we've got our fall, our retrace, and not to get too far ahead of ourselves, nowhere is it written that the price must not and cannot ever get below this channel. It'll take a lot of doing in this political environment, but it's resistance or it's support, but it's not indefinable support. It could puncture that. But we'll take it a step at a time. I've tightened up the stop on it, obviously, and that is a definite step in the right direction. Within that realm, I was also short AMD. This is off about 1 2/3. I was short Micron, MU, which had a nice tumble yesterday, and it's down right now, but not much, only about 2/3%. I was also short AAOI, applied up to electronics, which is down nicely, over 6%. The next couple, I didn't have a position in, but I thought were worth mentioning. Ambic Micro is off almost 5%. It's a much younger stock, as you can see. And ARM Holdings, which is off almost 6%. And so that's, they're all kind of holding hands, jumping. One last kind of tech one, not really semiconductors per se, but storage. Western Digital, WDC. I re-entered this one today, and it's not a sensational setup, but I give it a B, maybe a B plus. It's not a bad setup. And as usual, I mean, as you can guess, with 34 positions, they're spread pretty thin. I mean, the risk is spread out, even though there's a lot of correlation among them. Other shorts that are less directly related to that realm, but I thought were also worth mentioning, are as follows. Axon Enterprises, AXON, the old taser company, got a stop up here. Not a huge position because it's very volatile, but I think plenty of downside potential, especially, just to put on a political angle here, especially if the midterms go the Democrats' way. I think you're going to see some real weakness here, because naturally this company is a big seller of tasers and other law enforcement devices, and the demand will probably be diminished if there's any sea change in the political power structure. So it's all kind of built into the chart. I just wanted to augment that with that thing to consider. Caterpillar, I spoke about this one at some length yesterday. Beautiful setup. As long as we're grading, I'll give it a B plus, even an A minus. Almost perfect head and shoulders on this one, and definitely move in the right direction. Very, very good looking for Caterpillar. EchoStar's up a little, but it's taken a nice tumble, and I've got a tight stop on that. I still am bearish, not wild-eyed bearish, but somewhat on the whole rocket ship space. Planet Labs, this is going more my way. This is PL down 5% today, having fallen from 50 down to 20. Goodness gracious, 60% loss in value. Really tremendous. Viasat, also space-related, down 7%. I like it. Rocket Lab, down 5%. Ooh, I love that word, don't I? But this is going the right way as well. Royal Caribbean, down. As I've said, this used to be my nemesis, but it is just a honey love these days. Look at this. So we've pounded nicely here from 334 down to the 280s, about $50. So that's been a nice slide. So I'm just kind of tightening up along the way. Open, this is a really cool right triangle setup, Open Door Technologies. This is off about 2 1/3%, sinking below that right triangle. A couple more of these. IonQ, good tumble on this one. And this was one of the reasons why even in today's dark green times, I was still in the green with my shorts, because this is down almost 9%. So doing God's work there. And then B Energy, Bloom Energy, that is to say, is off almost 3%. Here too, beautiful gap trade moving away from that price gap. I'm not in these, but I've also wanted to note that kind of the flying cars and off to Mars zone has also been quite weak lately. Firefly Aerospace down over 3%. Intuitive Machines, it's one of the worst companies I've ever thought of for a company that makes things that land on the moon. But yeah, Intuitive Machines, LUNR, the ticker's better than the name, I think, is also down over 5%. And Joby Aviation, which I think is straight up flying cars, kind of like a giant drone you can sit in and go from place to place. That's down over 2%. And you can see it's already fallen a lot. About 2/3 of the value gone. Only a couple of other symbols, but the last one to spend a little time on. Just another tip of the hat to KORU, the triple bullish on South Korea. All week long and the week prior, that price gap between Monday and Tuesday of last week has stayed intact, which is great. And like I say, next week has the possibility of resuming the semiconductor sell-off in a more meaningful way. Sure hope so. But with all the bluster this week, those gaps have held. The very last chart is the VIX, and it's a mess, isn't it? And all one can draw from looking at this is that, well, it seems kind of on the low side, and you're right. But I think there's a way to dig deeper into that, which is, and I built this feature in 2 or 3 years ago, but is this time perspective. And that's not any more helpful at all, is it? In fact, it's worse. It's a complete peg. And all those lines represent is what the VIX has done in 1992 and 1993 and 1994, laid upon each other, January 1 to December 31st. But again, it's just it's a mess. But what you can do is get rid of those yearly charts and just show the average. That's not a mess. That's very pretty. And what this illustrates is seasonality over the course of all those decades. And the VIX definitely has some regularity here. It tends to sink a little as the new year begins. And from mid-January up until, say, mid-March, it has a nice rise higher. Then down she goes, and it bottoms and starts to kind of gather its strength. All right, that's all lovely. Where are we now? We are right there. And so what this indicates to me is, based on not opinion, not hope, not, as I was described in the prior segment, the Bears bear, which I think is pretty cool. This is data. And what the data shows us is that based on decades of information, the VIX tends to rise very nicely from now until the beginning of October, around October 7 or so. So keep that in mind. Could be helpful. Okay, well, it's been a good week, and I'm glad it's over, and I hope you have a good weekend, and I will see you here Monday. Bye-bye.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. Only at tastytrade.
We built tastytrade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. tastytrade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Get live trade ideas, technical analysis, earnings setups,
option strategies,
macro insights,
and real positions from traders
putting capital to work in real time.
Only at tastylive.
Only on tastylive.
We're back. You're watching Tasty Live. Final 30 minutes of the trading day, final 30 minutes of the trading week. I'm Chris Vecchio. Before we get to our guest today, just a quick jaunt around these markets. Stocks still lower, though not at their low. 77.22 here on the S&P 500. It's off by about 19 points. The NASDAQ off by about 0.6%. The Russell, your leader, your loser to the downside, off 1.2. Bond yields are up across the curve, particularly at the short end, which is pressuring a lot of the scarce assets, the non-yielding assets, gold, silver, crypto. They're all under pressure here today. Oil's bouncing around still on some of these Iran war headlines, but the Mag 7 tape is holding up a little bit better than everything else. So today we're bringing in, for last call, Dan Newman. He's the CEO of the Futurum Group. They provide research signals for the street, as it were. He sits at the intersection of capital markets, semiconductors, and ultimately the AI infrastructure trade. The companies that we talk about here on air, building out this AI boom, he's the one who's speaking to the folks that actually work and make the decisions at those companies. So joining us today, CEO of Futurum Group, Dan Newman. Thanks for joining us here on Last Call.
Great to be here. Thanks for having me.
So let's talk a little bit about this market in the week in totality, right? We have NVIDIA earnings on Wednesday. We have Warsh here today. Yields seem to be pressuring everything a little bit more. Just talk us through what you heard from Warsh a little bit right now. Should the market be reacting the way that it is at this juncture?
I think the market's doing what Kevin is indicating, which is that there are some concerns that he's still chasing that 2% inflation number, and that is so long as we don't have a clear path to it, that their work isn't done. I've said this publicly, so I'll say this here. I have a genuine mixed feelings about Warsh, how much he's posturing his position, having been an appointee of President Trump, who we know how he feels about interest rates, and we know he feels very strongly about not raising rates. But at the same time, for Warsh to be credible in his position, he can't come out straight away and just be like, yeah, it doesn't matter. It doesn't matter what the data is saying. It doesn't matter what's happening in the bond market. We're not going to raise rates. If he does that, the bond vigilantes will absolutely run away and they'll eat his lunch. So he is in a tough juxtaposition. I think he needs to go to Jackson Hole, and he needed to let the market know that he's got an independence to him, whether that's true or not, and that he's going to serve the role and try to get this inflation tamed. And of course, you've got on the other side of this, and we're going to talk about the AI trade, we've got the job market. We've got is AI going to eat every industry? Is AI going to take out every job? And you've got all the alarm bells there of what could happen, despite none of it has actually happened yet. So he's in an interesting juxtaposition. And so I think he's walking the line. Every time he talks, the market's gone down. He has not necessarily, and every time he's spoken, it's been hawkish. So, but the thing is I actually believe in the end of this thing, Chris, that I don't think rates will go up. I actually think in the end, he's going to try to keep rates where they are. I don't think he's going to cut in any time soon, but I would be very surprised to see them go up.
Because he keeps emphasizing wanting the market signals to be as unfiltered as possible. I mean, to me, that's all about forward guidance, but forward guidance had that effect of depressing volatility. Nothing really mattered. You could look at CPI report and say, Fed's not going to look at this one print and change their mind. Do you think that the net result of all of Warsh's posturing and jawboning is going to be more two-way rates fall? That's kind of where I'm landing in my head.
I think that's a reasonable hypothesis. I think that he is definitely waiting to, again, I think so long as the signals are mixed, and I liked your choice of words, unfiltered, I think it puts him in the position to sort of status quo it. And I think if he can carry the status quo for a period of time, we can see if Iran settles, if that, we know that's impact on inflation. We know that's been an impact on the bond market. It's been, created volatility despite the VIX being pretty tame over the last few months. I also think the market's going to naturally create some downward on assets just because of timing of year. We've got the uncertainties that we're already talking about. And of course, we've got a really important election coming up. And you add all those variables together with traditionally seasonally tough market conditions. I think there could be some cooling, and that might take some of the pressure off of kind of the overall asset inflation that's going on in the market.
NVIDIA right now kind of represents the perfect litmus test for the earnings versus rates debate right now. Obviously, in the wake of their earnings yesterday, the stock was up around 9%. But as those rates leaked higher over the course of today's session, we saw NVIDIA turn around, and it's now lower than where it was after the gap open higher yesterday. So Tell us a little bit about your interpretation of this earnings environment. Is the market on strong enough fundamentals right now where it can overcome 25, 50, maybe 100 basis points higher of rates should that develop over time?
Yeah, clearly the market, and you're seeing it a little bit today with quality, is looking at interest in interest sensitive companies in a very, very challenging way. NVIDIA's kind of on the they're very mixed because the companies buying from NVIDIA, many of them are very interest rate sensitive, not the hyperscalers, but you saw $40 billion of revenue through their smaller cloud providers and enterprises. And these companies, these neo clouds, for instance, I mean, they are borrowing like crazy, raising equity like crazy to fund the build out of their growth. So, that was almost 50% of their data center revenue is now interest rate sensitive customers. So I think that could be something to be looked at. I think NVIDIA, though, I've actually looked at it where it's at, how it's priced. I'm beginning to think it's like a T-bill. I genuinely think it's probably one of the best companies you can buy in the market. It's going to put off, $1 trillion in cash over the next 3 or so years based on our projections. We've got a $14 trillion CapEx build out expectation between now and 2030. They're going to likely be the beneficiary of 40+% of all of that. Their profit margins have had really high integrity, even despite some of the pressures of competition, some of the concerns related to input costs. They have pretty unmatched price inelasticity. They can pretty much price whatever they want. They raise their prices 15%. No one's going to blink. I had a chance to talk to their CFO on earnings day, and she basically said this, and she said this in her public commentary too, but is like, the 70% FY28, which is 2027, by the way, for everybody out there, that is only constrained by supply, meaning if they can actually get more wafer, more memory, more packaging, they could see their numbers grow even faster. So it's actually kind of interesting because we're in sort of a tale of two markets right now. With the AI build is on very solid ground, and despite what I like to call the AI bubble bears, the ones that really are looking at impending doom, if there is an impending doom, it's years into the future. The build out here is very stable, and I think NVIDIA gave us that with even the next 18 months of forecast here. But on the other side, like the inflation risks, the debt crisis, the bond rising, the potential political division that's going to come up if we have a mixed House, a mixed Congress coming up here in the next few years, it's going to create a really interesting economic macro climate at the same time as we've got this boom going. But I still think NVIDIA is a company that performs. And when markets get tough, you buy things that perform, companies with cash flows, companies with profits, companies with, depressed PE ratios. Like, they are a company that's positioned well to be bought because they're going to continue to perform.
They almost have a lure kind of like Apple did in the 2010s, where Apple was like a safe haven within the market itself. And so even when things are too terrible, people still want NVIDIA because they're still printing cash. But Marvel today, go ahead. Yeah.
I was just going to say really quick, is I think that's what it should be. I actually look at the way it's priced. I don't know that because even by the 400 billion or so in market cap it gained before giving some of that back today, Chris, it's only been trading. I mean, based on the projections they're now giving, it's still trading at like 12 or 13 times forward. So if you actually believe what Colette Kress said about their projections next year, and I have no reason to doubt that they have visibility into their next 4 to 5 quarters, they're actually extraordinarily cheap. But I do agree with you philosophically, they should be the Apple for this next wave of time, because for at least the next few years, this is a company that is they're the litmus test of AI's structural build out, and they are the best buy and the safest buy, in my opinion, based on cash flow, which is what you look for when the market is creating excess complexity.
The PE, you say PE is low. It's 27.5 on an EPS of trailing 12 months of $7.91. But the next year EPS
forward.
It's doing at 15.24. So the forward PE is 14.3, as you mentioned. Okay. That's pretty
very low. I think it's higher now. When I looked at the 12, whatever I said, that was before it had run up, but after her comments. So the price is started to reflect it, but still cheap.
Yeah, I was trying to trade around the NVIDIA earnings this week myself, where I was in a short iron condor around them. And with the rally, I was able to take off the short put spread side. Today, I got rid of the short call spread side. I'm glad I cleared that out. I still feel pretty good about the space. And when I looked at the earnings myself, the demand seems to be there. But there has been a clear dividing line in the sand, it feels like, this earnings season. It really started with Microsoft when they came out and had these earnings numbers. And yeah, they're doing a ton of CapEx, but they're making money on it right now. Marvell, stock's down, 9.8% right now here on the screen. They had a double beat, but their management says, yeah, those custom Google chips that we've been talking up, they're still a little ways away. And so it creates this almost impression that there's a queue. You have to wait in line, get to the back of the line to get your money if you invest with us right now. Is that the line that we're seeing in the market now? You either, if you're spending money on AI, you have to be proving that you're making $1 on it. Otherwise, enough of kicking the can down the road and telling us that the good stuff comes in the future.
I think that's fair. I think Marvell's up. It was like $80 a year ago. So you do have to kind of look at the appreciation in its price. The market has priced some of that in recent periods of time. Execution has been good. We are limited. I mean, look, as I suggested about NVIDIA and Marvell, same constraints. There's a limited number of wafers. There's a limited number of capacity for packaging, memory. All these things basically mean that if you line up today and say, hey, OpenAI's got their new jalapeno chip, right? We want to make, a gagillion of these things. Well, there aren't a gagillion of these things to make because it's finite. TSMC and, we're seeing Intel come up, but how much they can produce. So all of the promise, I think people have definitely faded the big order book trade. You remember the period of time when NVIDIA was making deals and AMD were making these deals and they were trading equity and these huge multi-gigawatt buyouts that were going to be X billions of dollars into the future. And the stocks would go up 20% a day. Like they would just roll. And I think all of that's come back. We've seen it with the neo clouds. There was a period of time when any company that had power, we were starting to price in the value of that power. I think you saw yesterday, Iron, which is a name I'm in, they posted and they announced that they had some great partnership with a new frontier lab and this and that. And they're getting $25 million a megawatt, but it's all promised into the future. People are looking at the amount of CapEx that they're going to spend and they're going, I have better opportunities with my dollar right now. And I think this is also, like I said, an indication of the conditions of the market. I think when the market starts to get a little tough, they start to look and say, where does a dollar yield a result today? Where do I get a return on that dollar today? And what are the companies that are getting a return on a dollar? You mentioned Microsoft. Microsoft was able to show that its investments, huge CapEx investments, are starting to yield a benefit that they could show into the bottom line. That promise turned the corner for them very quickly after Microsoft was, it had been absolutely hammered though. For a long period of time, it was getting hammered. Despite having a $650 billion backlog, nobody cared because they were worried about how much they were spending and whether or not that was going to turn to revenue growth and profitability. So yeah, I think you're seeing that everywhere in the market right now. And I mean, now last thought I hear is like you're even seeing dollars turn back to SaaS companies. You saw there was an announcement with Anthropic and Salesforce. And Salesforce shot up on a okay print. It was good, but mostly just on the idea that Anthropic is not going to displace every enterprise software on the planet. And then you saw ServiceNow run, and you saw CrowdStrike run, and you've seen Atlassian run. All these companies ran on the idea that these companies, but also what people saw was these companies had been absolutely blown out by the market, down 50, 60, 70%. So these become interesting entry points when suddenly you're like, these are cash-rich companies that have strong recurring revenues and strong free cash flow that aren't spending a fortune on CapEx and that actually are beneficiaries of AI. Maybe we should look at these companies again. So you're seeing a lot of that happening all at the same time.
This has been a great conversation. He has been Dan Newman over at the Futurum Group, CEO over there. Dan, it's been a pleasure to have you on. We got to talk again in the future, maybe a longer format because 15 minutes just flew by.
That did go fast. Thanks for having me.
Folks, we're going to take a brief 30-second break here. We're going to be back to take you into that closing bell, final 15 minutes of the day, right around the corner. We're back. You're still watching Tasty Live. Last call here. Final 13 minutes of this trading day to go. A day where the markets are sagging, but not exactly at their lows. The S&P is still down by 21 points, we'll call it here, Ilya. The session low is 77.11, so we are 10 points, 11 points off that low. A little bit of a contained reaction in stocks. The Nasdaq's off by 0.7% right now, but the damage is really everywhere else, where Bitcoin is off over 3% here.
Yeah.
You have your gold, which is down 3.3%, silver down 4.4%. What have they done to my beautiful boy? Nothing's really breaking. The bonds are the problem in this market today. ZT is sitting at lows. We're not quite the yearly low close. That's 102 and 18.5 ticks, so we're 1.5 ticks away from there. But when you look over to, say, the 5s, those are in at yearly lows. The 10s are pretty dang close. Ilya, the closing low there is 107.23 ticks. We're at 107.28. The long end not quite breaking, but still lower. The market's not having fun with these. The prospect of higher rates this afternoon. There's been a real defensive flavor to this market. I'm looking for the winners. XLP, your lovely staples, up 0.3%.
I mean, I think this is pretty clear. As far as stocks are concerned, there seems to be a kind of stacking of performance. If you look, I mean, the Russell is taking it on the chin much more so than the S&P, and NASDAQ is somewhere in the middle. And so you get this kind of, well, how washed out is the risk sensitivity of higher rates? And in NASDAQ, it's washed out less so than the S&P, and in the Russell, it's washed out least. And so that's what you're seeing on the tape very, very clearly. And so when you look at this, then you go, all right, this is really all just one thing. And it's the idea, I think you made the point very eloquently when we were talking about this on Back to the Futures, when we were discussing this earlier. The essence of what's going on here is a bit like the tail wagging the dog, because all these moves extrapolated across markets really have to do with the market decided that following Jackson Hole, what they want to do is say September is going to have a rate hike. And then we can all look at ourselves and go, but that's not going to happen. And if only because what new Fed chair, especially one as politically savvy as Warsh, but what any new Fed chair is going to say, you know what I'm going to do is I am going to, now that I've arrived at the Fed on the back of tremendous political turmoil and I'm trying to turn the page, I am going to thrust myself right back into that political turmoil by hiking rates into the midterm elections. Is that what the Fed is going to do?
Break. The Fed's hiking before the midterms.
What? What are we talking about right now? Let's just live in reality for 10 seconds. Right? The FOMC is going to vote to raise rates into the midterms after what's just happened with Powell and Lisa Cook and the whole. What?
Ilya, that's why the Chuck Yeager,
that's what's going to happen.
That's why the Chuck Yeager mentioned to me popped out listening to it. Go, that's so funny. Chuck Yeager is obviously a really interesting guy.
No, Warsh is revealing himself to be a very interesting character in this speech, even with just the spoofing the algos by throwing around the word hike. Oh, I took a hike
five
with
times.
Bernanke, and I took a hike. He was incredible.
There are many different types of hikes.
Yeah.
There are two kinds of hikes. I mean, look at the statement. Five mentions. Okay, so where does it put us here right now? Ilya, what's holding up in the tape today? I mean, that's kind of what's intriguing me right now. I've done the cleanup over the course of the day for what I want to clean up right now. But I see that it's a lot of the defensive stuff, okay? At the bottom of the totem pole, GDXJ, GDX, XME, SMH, IBB, XTL, XLK, XLU, XLI, XLV, V, and Q. That was fast. All that stuff is rate sensitive. Biotech, semis, utilities, real estate, gold miners. This is all rate sensitive stuff. So I'm looking for the things that are strong in the tape, things that are weak in the tape. Weak in the tape is NextEra Energy, which is the largest holding in the utilities ETF, which is having a pretty nice little breakdown here today. my friend. I'm in at 21 days to expiration in the double bear right now. Short 85.86, call spread long 78.77, put spread down here. Also flipped over positioning. Earlier this week, I was in a short put spread in the Russell, got out at break even after the market bounced around a little bit. With today's move, Ilya dropping below 3K pursuant to the plans that we had aligned with this head and shoulders that was outlined here. Looking for now the double bear. 30.50, 30.75 short call spread, 2,900, 29.25 long put spread, which 80-point move from head to neckline, subtract from the neckline, gets you down to a 29.20 target. And that's why I put the strikes down wrapped around there. So I think now, just going into this close, there are definitely reasons to be a little bit more defensive. I think that some of these names that we've looked at, like the PG, Procter & Gamble, the Kimberly Clarks of the world that have just been chopping for months. I mean, this has been, look at this chop on this chart for months and months and months. And they're all chopping around near the downside of their range on a day like today. This is where I'm interested in selling the put spreads and stuff. I'm not interested in taking a new exposure and anything that could be deemed a little bit too rate sensitive.
I mean, I have a portfolio of things that is almost exclusively rate sensitive, but for a bunch of kind of longer term bets like EWZ and things like this, where I'm long, I've been long for like 2 years and I've been just scaling and rolling. Those kinds of things aside, I'm looking at a portfolio sort of actionably that was very much on the wrong end of this move today. And I am not jumping ship on any of it. Because in my mind, and you and I disagree on the long end of the curve, that's a very small part of my portfolio. Still, the core of the idea for me is at the front end. And it's through all of this exposure being short the dollar, being long the metals, being long Bitcoin. None of that worked today, obviously. I think I'm in a drawdown that's something to the tune of about a third of the P&L that was there before war spoke, maybe a little bit less, maybe about.
Yeah, I mean, if you're long gold, Bitcoin, silver today, all those things are down. It's not a fun.
Right. And I'm short the dollar. Heavy. So this was a setback for that idea. None of those markets have broken. All of them have stopped on a dime at the prior stair step in the anti-dollar sort of that theme move, if you will. The debasement theme as a kind of concept. And so I am taking off none of it. I think when we come back next week and there's a bit of a hangover that the markets have, and then they come back and go, well, what did he actually say? I think we're going to start to have a conversation about, wait, so this move is contingent on there being a rate hike in September, which is now pretty well priced in. But
pretty well priced in because yields moved.
Is that what's going to happen? But
priced in because yields moved and
right. So I'm saying, like, is that what's going to happen? But are we really saying there is a 58% chance that the Fed is going to raise rates in September?
Probably
because
not.
if that's what we're really saying, when obviously that is not anything like what reality appears to be, I mean, sure, okay, things can happen, but there might be some sort of an emergency. Who knows? But in my mind, under normal circumstances in the current environment, it's ludicrous to think there's going to be a rate hike in September. And if that's what we're contingent on, I'm just going to sit here and let this pullback be an opportunity. I may need to sell some more dollars and buy some more gold and silver here.
Okay, we go into the final less than 4 minutes to go in the trading day here. Volumes are big. 1.34 million traded in the S&P 500 futures. 12 million SPYs. 5.2 million SPX is big. 7.6 million triple Qs across the board is triple their average right now. That comes from Frankie, our man behind the scenes here. Going into next week, though, because now that we're through Jackson Hole, it's not quite officially the end of the summer yet. Next week, because of the calendar, Labor Day is just another week away. So where does this put us at? Tuesday, their earnings on Monday morning, Science Applications International Corporation, they have a $5 billion market cap. If that's something that you are trading, I bid you adieu and good luck, because the options in here are a mile wide right now, Ilya. 125 strike. It is a bid-ask spread is $1 on 550 to 650. So I don't see anything here that's worth trading on Monday. And I pray that if you are in this position, that you can, find a way to get a market maker to get you out on the other side of earnings. But Tuesday morning, Medtronic reports in the morning, NIO likewise reports in the morning. You're going to get Dell. You're going to have Palo Alto Networks here after hours, which Palo Alto Networks is a trade that we just took off the board here because it did give us that dip between the 1 month and the 50, and it's been in an uptrend, sold the put, it rallied, decayed 80% of the way, took it off. There's no reason to hold on to it anymore. Dell is coming up Tuesday afternoon likewise as well. You can see here that we're going into Dell with next week. The Friday has about $50 priced in either way, which on a $450 stock, we're talking about 11% or so, right around there. Wednesday, Broadcom, Snowflake, Hewlett Packard, NetApp. There's a bunch of things that are coming out Wednesday afternoon. Thursday, it cools off again. Zscaler, IoT, Samsara. And Friday, you're going to get to NOP, KT Corporation, IMPP, Imperial Petroleum. But the macro calendar does pick up next week a little bit more, which I think is worth flagging here as we go into the close. 77.26 here at ES, by the way, as we go into this close. It is the 3 weeks after the week with the 12th in it. So that does give us a non-farm payrolls report, if that's something that's the cut of your jib, that's coming out on Friday. But between now and then, Tuesday, you're going to get JOLTS ISM. You're going to get some GDP from Australia. There's more ISM on Thursday. And then you get your jobs report coming out of the US here on Friday. So we really have an interesting week. We really are through the bulk of the earnings. FactSet's earnings report for the 28th actually just came out to us a few hours ago. And so I think they said we're now 97% of the way through earnings season here. Okay. But those names that are coming up are still important to the AI infrastructure trade. They're obviously big components of some of the sectors that we like to cover and talk about around here. And the non-farm payrolls going into a Labor Day weekend can really shake up the map, especially when you're looking at a map with a VIX that's going to close at 1441 today, 1435 today, Ilya. Despite all of this messiness and noise, VIX is 16 cents lower where it started the session. And vol futures here, maybe this is the tell. They're poking up just ever so slightly. Ilya, you and I will be back on Sunday afternoon, 5:55 Eastern, 4:55 Central Time, which means that now that the market is closing in just 1 second here, we'll be taking a quick 49-hour and 55-minute break here on Tasty Live. Thanks for joining us over the course of the week. This was an amazing week here on the network. We hit a new all-time high in terms of daily views on Wednesday with the NVIDIA earnings, and that's thanks to viewers like yourself. Also thanks to our great production team behind the scenes, so cheers to them. But they want me to get off the air, and I feel the hook coming in. So for Ilya Spivak, I've been Chris Vecchio. You've been watching Tasty Live. Make sure you like and subscribe for more of our videos. Check out some of our weekend content on our YouTube page, and come back for us on Sunday. First call for the futures market open. Good luck trading, and have a nice weekend.
What's up, Tasty Nation? Welcome to the show. Happy Friday. It's August 28th. We've got plenty of stuff to talk about today. We got a little Jackson Hole Fed meeting. We got E-minis up 6, NASDAQ down 45. My name is Mike Butler. I'm here with Jermal Chandler. Join us on the YouTube chat if you haven't already. We're streaming live on Tasty Live. Jermal, how you doing this Friday?
Doing fantastic, Mike. We made it to the weekend, man. It's finally here. It's been quite the week. Started out slow, certainly picked up. And we'll see what this statement gives us today. Maybe it's much ado about nothing. Markets don't seem to think it's going to be worth anything. I mean, we haven't seen any bump in volatility for it, but we'll see what happens.
Yeah, looking at SPX, implied volatility for the day, only 30 points. So 30, 40 points. 40 points is actually okay, but nothing too crazy, to your point. But yeah, I think the market will likely just digest all of the earnings we've had. We had NVIDIA this week, which is moving around here pre-market. But yeah, I think really it could be a day of like wait to hear what happens at the Jackson Hole Fed meeting and move from there.
Yeah, that's really been the story of this week. NVIDIA earnings, we saw, I tell you, yesterday was fascinating because we saw NVIDIA, we saw CRM, we saw CrowdStrike, and we saw the move that those created in software and chips. And chips were kind of confused, to be honest with you. Most of them weren't necessarily like as up as much as NVIDIA was. I mean, most of them actually reversed and ended up going down. We saw that with a lot of those, SanDisk, Micron, you name it. And then, I wonder if that's going to be similar this morning because Marvell has had earnings and that's down on earnings. So we're going to get into all that at some point today. But speaking of, let's pull up the list here of things we got going on. We got a very busy morning as usual.